So welcome to CA Final Advanced Auditing Amendments come Marathon. Before I proceed and I start the amendments for May examination onwards, for May 2022 examination, before I start discussing about amendments, first we all must understand which chapters have actually got amended, which chapters have got improvised. Actually, what I am noticing, uh, from various questions asked by students is they are thinking improvisation of content is also an amendment. That's not. When the content is improvised, it is just that little more additional information is added or the existing information is rearranged or reshuffled. That is called content improvisation, and content improvisation we will not call it as amendment at all. Might be you are going to get approximately some 7-8 hours discussion on amendments itself. So first, so let's understand what are the chapters or what are the concepts in the advanced auditing where amendments have come or where improvisations have occurred. So let us do a overview of what are all the amendments first of all. Now, by the way, since this video is being watched by my students, regular students of advanced auditing, and primarily I'm doing for them this one, especially for edition 1 students of mine, and since this is being even uploaded in YouTube, I don't know which material you're following, but based on ICI material, November 2000, just a minute, based on November 2020 edition of ICI material versus October 2021 ICI edition material, what are the changes that were happened? First, understand that for every year in the month of October and November, or sometimes December, sometimes September, every calendar year, ICA will release one study material, new study material set that is being applicable for the next May and November. So likewise, recently in the October 2021, Institute has released a new ICA study material which is completely amended material applicable for May and November 2022 examination. Now, what are the changes between this and this? In fact, my edition 1 auditing classes have been started, based on November 2020 edition. Later, we did my edition 2 based on October 2021 material. I also call this as 2022. So what are the changes happened? What is the chapter and what topic has been amended or improvised? So I made a Excel sheet, a list of it. Now, if you take company audit, there is only one amendment in the company audit chapter, and that is 2 lakhs penalty. Now you might say, sir, Caro is also part of company audit. No, I call it as part of audit report. Caro 2020 is part of audit report. 143 subsection 3, new subclauses were added. New subclauses were added with respect to diversion of funds. Okay, actually these new subclauses, they were applicable even for December 21 exams as well. But anyhow, these amendments are equally important for May 22 examination as well. So Caro 2020, approximately 3.5 hour video is going to be there, and on this new subclauses, whatever it is, 1 hour discussion is going to be there. Coming to professional ethics, only one new concept is added. Typically speaking, in professional ethics, code of ethics has not been amended much. Only one new concept has been added, which we call it as NOCLAR, non-compliances with laws and regulations. In PSU audit, you might have heard of this word called compliance audit. Similar kind of compliance audit is being done in corporates. Some companies will exclusively recruit you. Suppose you are practicing CA, you are operating one firm. Some companies will exclusively recruit you to identify non-compliances with various laws and regulations. Some companies will exclusively request you to identify non-compliances with laws and regulations. Remember, for a company, what are all the laws and regulations are applicable? Just a minute, I will show right now that particular information as well. Just a minute. Yes, getting back. Suppose if you look at this Excel sheet, this contains a list of laws and regulations that are applicable for one company which is engaged in so and so business. I don't want to talk about it because we have to maintain confidentiality of our client, right? But still, for the sake of your understanding, to make you understand, what do you mean by NOCLAR? What do you mean by NOCLAR? Non-compliance with laws and regulations. You will get as you go further in this video, you understand what is NOCLAR. Okay. By the way, just one input I want to give you to this video. This video will be some 8 to 10 hours approximately. Example, I am using timestamps. Just click on the description. You will find so from which minute to which minute company audit amendment, from which minute to which minute audit report amendment, from which minute to which minute. If you even click on the timestamp, you can directly go to that particular part of that video. Okay, so in order to avoid searching, I'm even making timestamps. Fine. Now, so in order to understand NOCLAR, you see here approximately 67 laws, not even 67, I can say okay, minus 3, 64 laws are there. 64 laws and regulations are there for a company, for one company. For this company, we have done some compliance, or not we actually, one of our associate, one of our friend have done compliance audit. So compliance or purely compliance, it's a type of internal audit. It's a type of internal audit, not stat audit. You see how many compliances were there? Approximately 4,935 compliances he need to check. But anyhow, that was a responsibility given to internal auditor. Now, what are the responsibilities with respect to non-compliances with laws and regulations? And that concept is explained in NOCLAR concept, which is newly added topic in Professional Ethics Code of Ethics of ICI. Okay, that was newly added topic. Now coming back to what are the list of amendments? Okay, another amendment in professional ethics. Look, the next few minutes is going to be a summary of what are all the amendments. Then you start continuing actual amendment discussion. Now coming to clause number 6 of the professional ethics, they have added another case, another guideline with respect to educational videos. What is that guideline? With respect to this, whatever I'm using this, there is a thing called bridge material. There is a thing called bridge material. Sir, where can you find all these amendments? I'll come to that and explain you how to download this material as well. Don't worry. First, listen to what I'm going to tell you. Okay, or else do just wait for a moment. Wait for a moment. Yes. Yes. If you check whatever things I'm talking about here, whatever just a minute. Let me close this. So whatever amendments here I'm going to talk list, that is covered in this bridge material. Sir, how to download this material? I'll explain you where to download and how to download. Okay, so in company audit, this is the only amendment. What is the amendment? Especially this 2 lakhs amount. This is the only amendment. This is the only amendment in company audit. So earlier, the maximum penalty for failure to inform ROC about the resignation of auditor is 5 lakhs. Now it has been restricted to 2 lakhs. That's the only change. And now coming to, so that is that you can find in this material. Further, educational videos in professional ethics. What is this amendment is about? Now again, once again, you check here, before audit, after audit report, professional ethics, NOCLAR concept I told, right? Newly added concept. And in addition to this, clause number 6, with respect to that, there is an additional guideline added, educational videos. This I'm explaining right now here itself. Very simple thing. What is this? While the videos of educational nature may be uploaded on the internet by members means what? You and me. You are upcoming member, I'm the existing member. Okay, no reference should be made to the chartered accountant's firm wherein the member is a partner or proprietor. Now you're watching my video in the YouTube. Okay, have you found anywhere in my YouTube where I'm the partner? No, you did not find any of my information. My firm information is I never mentioned anywhere. Further, it should not contain any contact details or website address. Which contact details? Firm contact details, my practicing unit contact details. You can find here, some scrolling down is there going on. Here you can find contact details, but as a faculty, my personal contact detail, it's not my practicing unit contact details. So that is one additional guideline, additional case study, additional case related guideline which is added. That's it. So this is what actual amendment in professional ethics. Except this, there is no amendment in ethics at all. From past 2 years, it is same syllabus. Then coming to peer review. What concepts have been changed? You know, the last numbers you ignore, ma. These numbers are just a time takes for you to study. Okay, that you ignore. So what are the topics that have been changed in peer review? Earlier, we have a peer review statement 2020. Now we have a revised peer review statement 2021. Okay, peer review statement has been completely revised. Now, what changes were there in the old peer review topic and the new peer review topic? And I feel this is very potential 4 marks question can come. Straight away theory question, a potential 4 marks question may come, or an MCQ question may be designed. An MCQ, case study based MCQ might come for 5 marks. Now, what topics have been changed? Eligibility of a peer reviewer. Criteria for peer reviewer eligibility has been changed. Earlier, you have level 1, level 2. Okay, for level 1 practicing units, the eligibility criteria of peer reviewer is different. For level 2 practicing unit, eligibility criteria is different. And now there is no such bifurcation of reviewer eligibility based on level of the practicing unit. Right now, there is only one criteria which is given. Only one criteria. Whether it is level 1 practicing unit or level 2 practicing unit, there is only one criteria. That amendment, that point amendment, by the way, I'm not explaining the provision. I'm not talking about the amendment. I'm only talking about where the amendment has come. First, I'm just giving you the first initial few minutes, a few 20 minutes or 25 minutes. I'm only explaining you where and all amendments has come. You must know the comprehensive list of where and all amendments has come. So that is first one. Another amendment where it has come is, what do you mean by level 1 practicing unit? What do you mean by level 2 practicing unit for the purpose of peer review? So that list has been modified slightly, not majorly, but slightly. Next up, what are the obligations of peer reviewer? Okay, some new points have been added. New points. Actually, not this. Disqualification. Disqualification of peer reviewer. One additional disqualification is added. You will get that explanation as well. Okay. Peer review process, the process has been entirely changed. The peer review process, earlier the peer review process time limit is 90 days and now it has been restricted to 60 days. The peer review process shall be completed within 60 days from the date of notifying the practicing unit for peer review by the peer review board. Next, quality review. What happened in quality review? There is no amendment at all. Earlier in the old ICA edition, old ICA material, for one particular question answer was not given. And now that answer has been given and updated one. That's it. There is, actually speaking, there is no amendment. Now coming to audit under fiscal laws, there are only two amendments. The limit for, like we all know, business associates tax audit limit is 1 crore criteria. But if 95% of the receipts and 95% of the payments are other than cash, then the limit is 5 crore earlier, and now that limit has been increased to 10 crore. And related video is also already added in this continuation. In the video, whatever you're watching, continuation, it is added. You can look at the timestamp directly. It will come the fiscal loss timestamp. You will directly, come across the amendment. And in the world assessment year 2021, there is a clause 36 that has been removed now. Right now, assessment year 21-22, tax audit, this clause 36 is removed. That's it. Except this, there is no amendment in fiscal loss. Now coming to bank audit. Actually, people say that there is amendment in bank audit. You know, in company audit, we have amendment, right? 143 subsection 3 new clauses. These clauses were directly even applicable. These clauses were even applicable for bank audit as well. Yes or no? These clauses are applicable even for bank audit. So in the audit report, 143 subsection 3, okay, that clauses report is also added. Okay, fine. Apart from that, LFAR content has been improvised. Concurrent audit content is slightly improvised. And even audit of assets and liabilities content is improvised. CRR SLR, demand and tax liability computation. What are all the items to be considered in demand and tax liability? There are so many items to be added. There are so many items to be reduced. In our book, earlier they have given 4 examples. Now that example has been slightly modified. Only example modified. That's why I even call it as list of examples changed. I call it as only content improvisation. Question, there is a concept called audit of clearings. Audit of constituent ledger. That concept is removed. Clearings concept is little improvised. Internal audit content is improvised. Special aspects in IT environment content is improvised. And there is another concept, bank audit overview, content is improvised. Content improvisation. Typically speaking, bank audit, my dear student, there is no amendment at all. Only content improvisation. Only content improvisation. Sir, I'm a December attempt student. For the first time, I wrote December or earlier attempt. I prepared based on World Bank audit material and World Bank audit video lectures. Okay, of some other faculty or maybe own preparation. Should I need to study once again the new bank audit material? No need. If you are perfect in that, you write those answers, that will be more than enough. If at all you have not yet attempted the exam, you have not yet prepared for bank audit, then in such a case, download ICS study material, download ICS study, this instruction is applicable for you to, whoever is watching, not for my students. For my students, I already gave material. For edition 22 students, I already gave material. For edition 1 students, in the bridge material, I even added those questions. Just a minute. You see, what are all the questions, where and all there is a changes, I even added them. I added here, wherever the content has been improvised, I have added here. Okay, that's it. So these are the changes, these are the list of amendments or improvisations. Typically speaking, only bank audit is a chapter where improvisation is there. Remaining chapter amendments were there, and the list of amendments were very few. But the discussion on this might be, too little higher. 8 to 10 hours it might take total discussion, maybe 8 or 10 hours, I'm not exactly sure. I'm going to upload this video, right? After uploading only, I also know, after completing all the videos only, I will also know how many hours it is actually. So that's it about a brief about amendments. Further, one more important thing. Sir, what about revision class? Are you going to provide marathon class this time? No. I already uploaded for December attempt. Same marathon you can watch. Same marathon. Do one thing. Start watching that marathon if possible. And now whenever you come across these topics, stop the marathon there, come back to this amendment, watch this amendment, and then again go back to that marathon. I think that is the best way to cover, right? I think that's the best way. So both the marathon as well as the content, both can be covered. Even in the marathon, I think I have covered 50% of the syllabus. Yes, I have covered 50% of the chapters. Main standards I have covered, audit report I have covered, company audit I have covered, and then peer review, qual review is covered. Quality review especially, peer review no need, no, because many amendments were already there. As part of amendments, we are already discussing entire peer review topic here as part of amendments video. So, and still in addition to this, PSU audit is covered, bank audit is slightly, discussed in the marathon, risk assessment is covered, automated environment is covered. So few topics I've covered as part of marathon. So to this video, if you look at the above, there is a cards, like there is an, you will find this kind of symbol at the corner of my video somewhere. Okay, so click on that. You will find marathon videos of part 1 and part 2. Two marathon videos were there approximately for 15 hours. Watch them. And this amendments video. With this, I'm telling you, you will get enormous confidence in the auditing subject for sure. Those of you who already learned the subject, okay, and having some missing factor in the total overall connectivity of the subject, you will get it by watching that marathon and this amendments video. Then why late? Continue with this video for watching amendments. Who are all have to watch this video? My edition 1 students and the YouTube, whoever is watching in the YouTube. My edition 22 students, whoever is my edition 22 student, you need not watch this video because for you already amended recordings were already provided. Even then, if at all for you view limit has been expired, you can come back here and then watch here as well, because there is no view limit, right, in the YouTube. And one more point, by the way, Caro 2020 I have already recorded while explaining in the class. So same video I'm going to attach to this video. Attach means merging. Actually, we do videos, in YouTube you're finding 8 hours, 10 hours videos, right? We don't do at a time 8 hours, 10 hours. We do 2 hours, 1 hour whenever possible. We merge all that and then upload here. Okay, so as a continuation to this video, you will find Caro 2020 videos which I actually recorded in class. So that video was only I'm already adding here. So that's about the list of amendments. And why late? Start happily, continue watching the video and try to finish watching the video as soon as possible. Keep a target of 3-4 days, daily to 1 hour, 1.5 or 2 hours, try to watch. Marathon also, don't miss, watch it. Maybe I'm thinking to re-upload marathon once again freshly. Okay, same video I'm going to re-upload with slight changes. If possible, I'll do that. Otherwise, anyhow, I'm attaching here. Okay, so just follow that. Thank you. Bye-bye. Sorry, not bye. Continue the video. Yeah, by the way, where you can download this amendments material and Caro 2020 material, you just download our applications Reshta for CA and CMA. Below description, even the link has been provided, application link for Play Store. And suppose if you're a iOS user, you can't download from iOS Apple phone. Again, you have to log in the Android phone only and then download. Just download in our Play Store Shrestha for CA and CMA, SHRESHTA for CA and CMA. The moment you type Shrestha, you will get our in the suggestions you will find it. So download that. Log in as a student. Don't select parent. Log in as a student. The moment you log in, there is a left corner. Click on the home button. You'll find 5 options. Click on the home option. Go to the menu. Click on that menu. You will find study material tab. Click on that. You will find this breakup. CA final audit. You come to that. Here Caro 2020 material is there. Please download this and bridge material. Bridge material. This one also you please download. Okay, so in this all the amendments were covered completely, including improvisation topics were also slightly covered. I mean completely covered mostly. So that's it. And while late, continue watching. Bye. Happily continue. Caro. We are going to discuss Caro 2020, where we are having 21 clauses. We are straight away going to discuss about Caro 2020. Like many of you were excitingly waiting for this particular Caro 2020, like right from, Caro 2020 was brought in 2019 itself. Not 2019, yeah, 2019 itself it was originally finalized. 2020, it was published, but it was applicable for the first time from financial year 21-22 onwards, which means March 31st to 2022 after any audit report given on financial statements of 21-22. Okay, so Caro 2020 related examples you can see. Right now, I will show you a practical example of Caro 2016. Why? Because I'm doing this video in February month 2022. Typically speaking, 21-22 financial year is not yet complete. In fact, even if it is complete, companies generally publish financial statements, annual financial statements and audit report thereon in the month of May, when your exams are actually taking place. So typically speaking, those who are May attempt students, for them, I cannot show you practical illustration of how Caro 2020 is implemented. But theoretically we'll discuss here, and I will show you Caro 2016 how it is reported. Fine, before I go into all that, this Caro is one of my favorite concept. Not favorite concept in terms of concept, but in terms of asking question about this to many students. Like sometimes many students come to me and say that I'm failing in audit. What should I do? I always get lesser marks in audit. So I am understanding all the concepts, but I'm unable to remember. I always tell them, why you have to remember? Remembrance is a byproduct. The problem is, I'll generally ask them this question. Have you understood the concepts? He said, yes, sir, every concept I understood thoroughly. I ask him this fundamental question. Do you know Caro? Yes, sir, I know Caro. Where in the audit report Caro will come? This is my second question to him. To my shock, and for your information, many qualified CS also don't know. Many who are practicing also don't know. In fact, they are giving Caro reports. Still, they don't know where in the audit report Caro report will appear. Many CA finalists who are preparing audit subject, they don't know where Caro is used. They just know that Caro, company's auditor report order, 2016 Caro, 16 clauses are there. What are the 16 clauses? Shall I tell you all the 16 clauses? Every student, to best of my knowledge, have came across mnemonic for remembering all the 16 clauses. But in examination, that is not which is tested. They know, look at any past 20 years of icai exam papers. Is there any question on, hey beta, tell me all the 16 clauses of Caro? No. What is tested in exam, what is tested in exam is, they will select one particular clause, and they will ask you to explain what is that clause dealing with. What auditor has to report regarding that particular clause. This no student learns. Student knows what are the 16 clauses, but that is not which is tested. And that is what outside advertisement is all about. How to remember all the 16 clauses in Caro? Students idiots, they run behind them and remember all the 16 clauses, and in examination they'll ask you to report. They will ask you what is the reporting requirement for related parties. That's it, gone. Student know only how to remember all the 16 clauses, but not what is being tested in exam. Then another way, another question, MCQs. Caro will come in audit report in which section of the audit report? No student knows. So we are going to learn in that way. We are going to learn the subject in that way. So once again, I'll go back to our contents of the audit report. Just come to the contents of the audit report in SA 700. You see here, total 9 sections we have completed until previous session. So now 10th section, 11th section, I'll keep it pending. I will cover it as part of reading this entire chapter. Once we cover all the discussion, I told, right, I will come back and read each and every topic. At the time I will explain you. Now the 12th section of the auditor's report, just a minute. The 12th section of the auditor's report, what is this? Report on legal and regulatory requirements. So what is this report on legal and regulatory requirements? Report on legal and regulatory requirements. What is the report on legal and regulatory? So let's first decode this side heading. It is a, first of all, part of audit report. It is one section. It is part of audit report. In the audit report, one part deals with report on legal and regulatory requirements. You know, actually, this particular side heading, as per the standard original terminology, is what you know, other reporting requirements. In various international auditing standards or even in the Indian auditing standards, this particular side heading is also referred as other reporting requirements. Is also referred as what? Other reporting requirements. But we have improved it, you know, in our Institute of as per standards on auditing, we just improvised it and we just kept little polished words. What? Report on legal and other reporting requirements. By the way, reporting requirement means what? Reporting requirement. There is a requirement where it talks about you, Mr. Auditor, please report on those. So that is what the requirement. Requirement generally comes from where? Either it can come from law or it can come from regulatory. So the requirement to report on certain issues will either come either because of the law responsibility or because of the regulatory responsibility. Sir, what is, so which means the 12th section of the audit report, which I highlighted in pink color, the 12th section of the audit report, this deals with report on legal requirement, report on regulatory requirements combined. So whether you are giving a report on legal requirement, means Companies Act requirement, RBI Act requirement, Banking Regulation Act requirement, okay, or Insurance Act requirement, or regulatory requirement, IRDA requirement, RBI requirement, Telecom Regulatory requirement, Ministry of Corporate Affairs requirement, regulatory requirement. Now in company law we have legal requirement. In company law we are having legal requirements. Regulatory requirements were not there in our curriculum, or regulatory requirements in general were not available. Only for banks, RBI asks bank to report on certain issues. That too, they were prescribed under Banking Regulation Act. Since it is prescribed under Act, though RBI is giving you the directions, since it is already given as part of Act itself, it's a legal requirement, law. It's a requirement under law. Regulatory means what? Suppose if MCA, Ministry of Corporate Affairs, issued a notification for financial year 22-23, statutory auditors shall report on specifically this item. You know what? In 2016-2017 financial year, in financial year 2016 and 2017, Ministry of Corporate Affairs have issued a has notification. What you know? 2016-17 is the financial year where demonetization occurred. 8th November 2016. So demonetization date. So that particular year, many companies, whatever liquid cash they have, they deposited in the bank. So Ministry of Corporate Affairs have requested auditors. It's a regulatory requirement. It's a regulatory requirement. Have requested auditors, please report on the cash balances that were available with the company, old currency, and how much old currency was deposited into the banks, how much was not deposited, that requirement. So if you look at 2016, 2017 audit reports, you will find a regulatory requirement related point. But right now, we generally, in our syllabus, we don't have any regulatory requirement. Right now, there is no regulatory requirement. We only have legal requirements. So now you see, as I told you, audit report is not just a useless opinion based document. It's not just opinion today. Auditor is giving opinion. And why he gave such a kind of opinion, he is mentioning it in basis for opinion. And he is talking about going concern if at all there. And he is talking about key audit matter. He is highlighting important points in the financial statement. He is also discussing about his responsibility, scope of responsibility, branch audit responsibility in other matter para. He is also talking about annual report, other information through other information side heading. See, so many things are there in the audit report. Audit report is not just cut, copy, paste. You know, from last year. I know many of you in articles, what you did audit report means copy, paste from last year, change years, change date. That's it. But today, after listening to this entire chapter, if you go back and check your audit report, you will understand how many mistakes are there in that. You will identify so many mistakes in the audit report. That I can assure you. So many. Along with that, there is additional reporting requirement, that is 12th section, report on legal and regulatory. Under this particular section, Companies Act has a requirement. Companies Act has put 3 legal requirements, 3 legal responsibilities for the auditor to report on 143 subsection 1 matters, 143 subsection 3 matters, 143 subsection 11 matters. The Companies Act has put a requirement to report. Okay, the Companies Act has put a responsibility on the auditor to report on 3 different sections. We have to report. Now 143 subsection 1 deals with 6 matters. There are 6 matters. In fact, it is called as 6 inquiries. 143 subsection 1, it casts a responsibility on the auditor to inquire about 6 matters and report. 143 subsection 3, it gave the auditor a responsibility to report on totally 10 matters. It gave the auditor responsibility to report on 10 matters. Actually, if you take the 10th matter has inside 6 sub matters. 10th matter has inside again 6 different issues. Typically speaking, here totally 16 are there. Indirectly, 143 subsection 3 indirectly talks about 16 matters where auditor has to report. 143 subsection 11, what is this section takes? It gave power to the central government. So central government time to time by a notification requires the auditor to report on certain matters. Accordingly, central government has notified Caro 2020. Earlier it is Caro 2016. Now it is Caro 2020 for May 22 exams onwards. November 2022, May 23, November 20, later on. For all exams of CA Final and CA Inter from May 2022 onwards, Caro 2020 is applicable. I hope you understood. So, under Caro 2020, there are 21 clauses or there are 21 matters which the central government, nothing but through Companies Act, nothing but Companies Act is asking, dear Mr. Auditor, under 143 subsection 11, there are 21 matters where you need to give your comment. There are 143 subsection 3, there are totally 16 matters where you need to give comment. There are 143 subsection 1, 6 inquiries where you need to comment. You see how totally 32 plus 21, totally 53. Oh my God, see such a big number. 53 matters under 143, which means you see once again, under this particular 12th section, under this 12th section of the auditor's report, there are 53. There are totally 53. Yeah, correct. Just let me check once. This is 22. Sorry, 43. There are totally how many? 43. There are totally there are totally 43 matters. There are totally 43 matters, 21 matters in Caro, 16 matters in 143.3, 6 matters in 143.1. Totally 43 matters where auditor has to report on, auditor has to speak upon. See how informative audit report. You're not just giving opinion. You're not just talking about emphasis of matter para, going concern. There are 43 issues where you need to give your comment. Which means from the audit report, shareholders are getting so much insights from the auditor. Without even looking into the financial statements, from the audit report, so much information shareholders are getting. 43 matters you need to comment on. So Caro will come under which part of the audit report? If someone asks you, 12th section of the audit report, just do this trial. Your seniors, okay, you would have done articleship, right? Go and ask your seniors. If at all he is my old student, probably he will answer. If it is somebody else, 99% I'm sure he cannot answer. Caro, ask him, do he know Caro? Yeah, he'll tell you know Caro, all that. Ask him where in the audit report will come. He will say annexure 1, he will tell. No, I'm not asking annexure or annexure 2. I'm not asking how you are giving it. I am asking you in which part of the audit report will come. He would have definitely seen not less than 20-30 audit reports, but still it's not how many times you see, it's how many times, it's how much, it's to what extent you observe. That's important. So now audit report is much more informatory. So there are totally 43 matters on which you have to report. You have very big responsibility. Now in that, first we are going to discuss about Caro 143 subsection 11, that is Caro 2020. And to best of my knowledge, you would have already seen Caro applicability in CA Inter. I don't want to waste much time on applicability because it's same applicability of Caro. The applicability, I'm talking about applicability is same. Caro is applicable for all companies, including foreign company, except other than banking company, insurance company, getting it? And Section 8 company, 1% company, small company, and a private limited company subject to 4 conditions. Regarding that applicability part, I will explain later because that is not that much important. At CA final level, that is not that much important. So let us discuss about the applicability part later. Let's discuss about applicability part later when we are doing overall reading. That time I'll talk about. It's a very silly issue. It's a very silly topic. So what we need to discuss is, what are the 21 clauses? Sir, how to remember all the 21 clauses? Arey man, that's what I'm telling you. Don't remember. No one will ask you what are the 21 clauses. What they will be asking you is, they will pick out one clause in exam. One particular clause they will pick. What is to be reported inside this clause? That is what tested in exam. Remember, as a descriptive question. Or you may even get an MCQ or case-based MCQ question as well. Anyway, it can be tested. But what is tested is inside the clause. Content inside the clause is which is tested, but not clause numbers, not total number of clauses, not what are the total clauses. No, nobody will ask. That is what fake marketing. Okay, so what are the 21 clauses in Caro? So that auditor has to talk about. So I gave a material. So I gave material with a very I gave here the material with a clear highlighting about. See, actually, so until December 2021 exams, until financial year 2021, okay, the audit reports were prepared based on Caro 2016. I mean, the report on legal regulatory requirement, right? You will find only Caro 2016 points. You don't find Caro 2020 because Caro 2020 points from when you will find on the financial statements of 21-22. So they will come in May 2022 onwards. The financial statements will come into place. I mean, you will find a practical documents on Caro only on or after May. That's it. So what are the 21 clauses to be reported? For your advantage, for your once again clarification, I clearly highlighted these clauses shall be reported. Where? As part of auditor's report. As referred under is 700. Under which part of the audit report? Under the para or under the section reporting on legal and regulatory requirements. Don't worry, I will show you right now a practical example of audit report. So right now we will take a practical example of audit report. So we'll take Reliance will take 1920. It's the latest one, right? Yeah, this is the auditor's report of the Reliance company. So in this audit report, I think I would have showed you other information pair, all that information other than financial statements and auditor's report thereon. Okay, now you see here. What is this section? Report on other legal and regulatory requirements. Under that first point, you see, as required by company's auditor report order 2016, because I told you, right, in the old audit report is 2016, issued by central government in pursuit of 143 subsection 11. We give in the annexure 1 a statement on the matters. If you go and ask any of your senior or any practicing CEO where we will give Caro, he will say as part of annexure. We will give Caro as an annexure. Annexure means what? Is annexure a separate document or part of the document? Part of the document. When do we give annexure? When the content of the annexure is so huge, if we put it as part of the main document appears very lengthy. That's why what we do when so much content is there, working, see in exams also you're writing working note separately. Why? Because the working note will disturb the main answer flow. That's why you're keeping separately. Suppose the working note is one line. Will you write a separate working note for it? You will just put it in the bracket. Same way here also. Caro report is very so many clauses. No, earlier also 16 clauses we have in Caro 2016. So why to disturb the flow of the audit report? So what are we doing? Instead of giving entire Caro report as part of the main audit report, we are giving it as an annexure and mentioning it. So actually speaking, though we call it as annexure, is it separate document? No, Caro is given as part of report on legal and regulatory requirements here itself. You see, Caro is part of report on legal and regulatory requirement. So this is where Caro is reported. This is where 143. I told right 43 matters. 43 matters are reported here. 43 matters are reported here. How they reported, when they reported, all that is what we are now going to discuss. Now, so we'll go to annexure 1. How they have given annexure 1. So this is the report on legal and regulatory requirement. This is especially about annexure 1. Okay, so let's now go and discuss what is the first and foremost thing. Fixed assets. Fixed assets. So for the sake of convenience, like whoever is watching, especially auditing CA final, now in 2022, 2023 years especially. So because most of you would have seen Caro 2016 earlier. So instead of learning Caro 20 as a completely new thing, I just want you to make you understand Caro is not, it's not overall changeover. It's only an improvement. For Caro 2016, Caro 2020 is only an improvement. Improved version. You know, the first and foremost clause, the first clause or the first matter on which the statutory auditor like you and me, the first clause on which we have to report is fixed assets. We have to report about fixed assets. Sir, are we talking about true and fair value of the fixed assets? No. Remember in Caro, we are not giving opinions. We are giving comments. It may be a positive comment or it may be a negative comment. Actually, it is called as opinion, but it is not an opinion on the financials as a whole. That's different. Opinion on financials as a whole is there. As a whole is there in opinion section of the audit report. Here, there are some individual matters, okay, which company law want to know how they are. So fixed assets. You see here inside fixed assets, there are totally 5 subclauses A, B, C, D, E. Inside fixed assets, there are totally 5 subclauses. In examination, what will be asked you? Okay, what is asked from you is what are the reporting requirements for fixed assets under Caro? That is what in examination they'll ask for 5 marks. Minimum 5 marks will come. They will not ask you what are 21 clauses list out. No. Okay, so this is what asked. So please be clear. Understand what auditor has to report. Fixed assets. So I even gave side headings for your better understanding. Fixed asset register, auditor has to comment on. Auditor has to comment about physical verification aspect. Auditor has to comment about immovable property title deeds. Auditor has to comment about revaluation. Auditor has to comment about binomy transactions. This is newly added. and this is also revaluation point is newly added. Remaining 3 subclauses were there even in Caro 2016. Earlier in Caro 2016, fixed asset clause is there, first clause. Even in 2020 also the same is there. First 3 clauses A, B, C, they were same. Only D and E, they were newly added. That is a change for fixed assets clause from 2016 to 2020. But from now on, what I'm going to do is, I'm not going to refer about 2016, again, I'm not going to refer about that. I am straight away explaining 2020 style, because from now onwards it is final reporting requirement, right? So why should we unnecessarily talk about what is there in 2016, all that? Simple. Now you see. So first one, what auditor, what is there in the fixed assets? First point, whether if you look at the original Caro notification, you will not find all these side headings and all. That is for your convenience. In the material I improvised. Okay, so whether the first point they're asking, Mr. Auditor, in the audit report on other legal and regulatory requirements, inside that Caro 2020 is there. Inside that first clause, fixed assets, regarding that I'm asking you a question. What? Whether the company is maintaining proper records showing full particulars including quantitative details of property, plant and equipment and intangible assets, nothing but we simply call them as both together fixed assets, and situation of PPE. Situation of PPE, if you see situation of PPE, intangible is not there. Intangible, nowhere it will be situated, no? Intangible is invisible, that's it. Now you see what they're asking, whether the company is maintaining proper records. Now you just imagine about the balance sheet P&L. Balance sheet talks about what? Company fixed assets are 100 crores, depreciation 50 crore, net WD 50 crore. The breakup will be showed in the depreciation schedule, fixed asset schedule, which is there in the notes to accounts. But here, by looking at this audit report, shareholder is getting what information? He is getting information about physical aspects. He is getting information about internal controls indirectly. So company law is asking, dear Mr. Auditor, is company maintaining proper records showing full particulars including quantitative details of PPE and intangible assets and situation of PPE? This is what I call it as whether the company is maintaining fixed asset register. In reality, this entire sentence, this entire subclause, I can call it as whether the company is maintaining fixed asset register. Sir, what is fixed asset register? See, if your organization is very small, suppose look at a kirana store. What fixed assets you will have? A table, chair, some 2 fans or air conditioner, a small kirana store I'm telling you. And furniture, woodwork. That's the only fixed assets you'll be having. Yes or no? But imagine a company like Tata Consultancy Services, a company like Infosys. I did Infosys when I was in articleship. I did Infosys fixed assets physical verification. I did fixed assets physical verification. I did for 2 campuses at Chennai. I'll just modify that example and then give you here an idea about how that particular registers are maintained. So there is a concept called fixed asset register. What is this fixed asset register? Now imagine a company like Infosys or Wipro or TCS, especially IT companies. There is a campus. Approximately 130 acres campus is there. Let us assume the campus is in rectangular shape. And let us assume the campus is having entries from all the directions. What is the distance of this campus is 1 kilometer, and it is approximately 700 meters. Very lengthy, yes, very lengthy. And inside this, the green color thing are buildings. Inside this, these are all buildings. Between these buildings, the distance will be approximately 200 to 300 meters on an average. And entire this campus, if you see the entire this campus, let us assume campus in a rectangular circle. Entire this campus, surrounding this entire campus, there is a pipeline for fire. When the campus is caught with fire suddenly, so there are entirely here fire extinguishers, entire that water supply, everything will be there. And I told, right, there are buildings inside the campus, some 10-15 buildings will be there. Now let me just imagine about one building. Let us assume the building is approximately 10 floors. 10 floors. So each floor if you take, it is divided into two wings. It is divided into two wings. Ground floor is completely lobby. So, it's like a lounge. Sofa sets will be there, newspapers, coffee machine, all that. Let us go to first floor. The moment you enter into first floor, the room architecture, the first floor architecture is, there is a very big lounge area again, and this side a very big room, and this side a very big hall. Both are halls, big halls. Now this is called wing A, this is called wing B. By the way, wing A we are talking about building number 1, floor number 1, wing A. Now if you go to wing A, this is wing A architecture. I'm just showing you the architecture. Wing A, how it is. In this wing A, so these are all workstations. These are all workstations. These are all workstations. These are all workstations. Here employees will be sitting. Here employees will be sitting. In this wing A, approximately 200 employees will be sitting. 200 employees. Now imagine in wing A, what are the assets? In wing A, assets are chairs, computers, air conditioners, printers, photocopier machines, tables, storage units, workstations, telephones, fax machines, yes or no, fans, so many were there, so many electrical fittings, conference rooms, projectors, so many. Now imagine this campus is having, this particular building is having 10 floors. Each floor will have two wings like this. Now 20 wings in a building. 20 wings in a one building. Now these buildings are approximately 10. Totally 200 wings. 200 wings multiplied by 200 employees. 40,000 employees will be there in that campus. Approximately the capacity of the campus is 40,000 employees. Imagine how many assets are there. Inside the campus, big generators are there. Diesel generators, very big generators. Imagine now how big the campus is, how many assets are there. To these IT companies, generally, the entry is very restricted. It's not that easy. Only if you have a proper ID card with smart card system. ID cards means not you go to nearby photocopier shop, take a printer. No, not that. It's a smart card embedded. So only if you have smart card, as soon as if in order to enter the campus, there is a external security arrangement. Only if you scan with the smart card, you are permitted inside. Suppose you are a visitor, you don't have any ID card. At the security gate itself, there will be a lobby. So there they will give you a temporary ID card. Only with proper approval they'll give you ID card. Then only you are permitted to enter inside the campus. And the entire this campus is surrounded by electrical fencing. Nobody can enter into the campus. Look at the internal control. And entire surrounding the campus, approximately 200 cameras will be there. In the open area, I'm talking about open area, 200 cameras. Inside building, inside wing, inside launch, inside everything, there are again cameras. Only outside, approximately 200 cameras will be there. Approximately security personnel, 100 people will be there. This is how IT companies are managed. Imagine the expenditure in IT companies, so high, so heavy. Fine. So an employee will go inside. Again, he has to go to some building, right? Because he'll work in some building. Again at the building, he has to put smart card. So again, the building opens. Again, he has to go to wing. Again, for the wing, there is an entry. Again, he has to use a smart card and go inside. And then for logging onto the computer, there is a password protection, all that. Now tell me, in this kind of environment, is it possible for a normal employee to bring some particular asset and go take away outside? It's impossible. It is impossible. Very difficult for an employee to steal something. Why? Because so many are observing you. Is it possible for the main entire this campus has having a head, right? For him, is it possible? Yes. The campus head might steal something, yes or no? So tell me, as a owner, I always wanted to check, right, whether company is maintaining asset register. These many assets are there, no? How do company know whether all these are companies continuously buying every day? Every day they are buying, installing. But are they really available in reality? You are showing in the balance sheet 1 lakh crore worth of fixed assets. Is really 1 lakh crore worth of fixed assets, are they really existing? Company has to check, no. Is it company responsibility or not? That is what Caro is asking you, Mr. Auditor, to check. Check whether the company is checking. So they are asking you first, Mr. Auditor, check whether company is maintaining proper record, proper system, which contains quantitative details of fixed assets and location where they were installed. Fixed asset register, it's a very big register, completely maintained in digital format. It is impossible to maintain fixed asset register for big companies in physical format, only in digital format. So check whether company is maintaining record. Suppose yesterday they purchased one asset. As soon as they purchase, they should account it. They should record it in the fixed asset register. See, is it happening or not? In the opinion para, you only talk about value true and fair or not. We want to know, is company taking precautions to preserve the assets? So we want to know about that. So through Caro, you check that and then give opinion here. Now you see what Reliance auditors have commented here. The company has maintained proper records showing full particulars including quantitative details and situation of PPE. So they give a positive comment. Yes, dear shareholders, the company has maintained records. Full details have maintained. Now, so that's about the first clause. That's about the first clause of the Caro. Not first clause of the Caro, entire first clause. Subclause of the first clause. Second question they're asking you, Mr. Auditor, second question I'm asking you, within fixed assets, whether these fixed assets have been physically verified by management at reasonable interval. Whether these fixed assets, okay, register is maintained, so many lakhs of assets are there, thousands of assets are there. Whether are they really available, or is there any asset which is missing? Is there any asset which is stolen? Are they really available? Whether the management, whether the fixed assets are physically verified by the management at reasonable. So Caro is not asking you to verify. They're asking you to check, is management conducting physical verification of fixed assets at reasonable interval? See, what is reasonable interval depends upon the size of the organization. You know, IT companies, they do physical verification once in 3 years. It's not, in fact, I should say once in 3 years. Physical verification they do regularly. They do regularly. Yes, every day physical verification happens. See, Infosys is having campus at Chennai, campus at Bangalore, Mysore, Hyderabad. So many cities they're having. Pune. There are so many cities where they're having very big campuses. In Mysore they have 1 or 2 campuses. In Bangalore they have 1 or 2 campuses. Hyderabad 1 campus. In Chennai they have 2 campuses. Very big campus. Inside each campus so many buildings. So do you think every day in every campus physical assets will be verified every day? No. How, you know, for physical verification, how these companies do is they recruit some local auditors exclusively for physical verification. Exclusively. As part of internal auditing. The companies will recruit local auditors. What job will be given to them? They have to physically verify and check with the records, tally that. And shortage, excess, they need to figure out. So that is the job which will be given to the local auditors in every city. You know what? This task will happen in every campus, every point, any point of time. But it is not, it is, you know, once in a year they can't verify. It will take 3 years. It will take 3 years. Generally, you know, just a minute. Now you see here how Reliance auditors have gave wordings. I'll just show you and then explain. The company has a regular program. What? Regular program for physical verification in a phased periodic manner. The company will not do fixed assets verification entirely at a time. Phase by phase. First Chennai, then Bangalore, then Mysore. Likewise, phase by phase we will do verification. But it's a regular activity. So again, by the time we finish all campuses and come back to Chennai, it will take at least 3 years. Getting it? Which in our opinion is reasonable, having regard to size of the company and nature of the assets, looking at the nature of the assets, looking at the internal controls, looking at the size of the company, once in 3 years they are coming back to that asset which is verified. Again they are coming back to that asset once in 3 years and verifying, which is reasonable. That's what the auditors felt. Okay, so now, so whether the fixed assets have been physically verified by management at reasonable interval, and whether any material discrepancies were noticed on such verification. Management physically verified, no? Is there any shortage of assets? Or is there any excess assets found? Means assets physically there but not recorded in books. Unrecorded assets. If the unrecorded assets or shortage is material. Okay, if so, whether the same have been properly rectified, dealt in the books of accounts. If the management has identified material deviations, whether the same have been properly dealt in books, excess assets recorded, shortage written off, dealt properly, they are asking you. Generally, you see the auditor's comment, no material discrepancies were noticed on the verification. So on verification, there were no material discrepancies. So it's a positive comment. So they are saying company has a regular program of physical verification which is reasonable. No material discrepancies. Completely Reliance auditors gave which opinion? Positive. That's it. See, this is in, I mean, in this depth you need to understand Caro clauses. Only then you can answer well in exam. Otherwise, how can you answer? So until now, there are 2 sub-clauses relating to Caro that we need to answer. What are they? Whether the company has proper records. Whether the company is maintaining proper records containing full particulars, including quantitative details, full particulars and quantity. How many assets were there? Particulars, nature of asset, value, original price, date of purchase, date of installation, getting it, date of put to use, location where it was, first floor, second building, wing A. So location where it was installed, all these details shall be maintained in the record. So whether the company is maintaining proper records showing full particulars and quantitative details of PPE and intangible assets and the situation of the PPE, that is the meaning. Second point, whether the management is conducting physical verification at reasonable interval, and is there any material discrepancy identified by the management, and if so, if at all identified, how they were dealt in the books of accounts. So this is what Caro is asking the Mr. Auditor to comment. Third one, with respect to immovable property. Immovable property is also part of PPE. It's on a property, plant and equipment. Property means immovable property. So what they're asking, whether the title of immovable properties is held in the name of the company. Whether title deeds of immovable property, are they in the name of the company? See, if you look at immovable properties in the fixed assets balance sheet, you will find 2 types. Freehold property, leasehold property. Leasehold property, we record it as per accounting standard 9 in India's finance lease properties. Okay, freehold means completely owned by the company. But in case of freehold property, you need to check property deeds. In case of leasehold property, you need to check lease deeds. By the way, what are they asking to check by looking at the deeds? What are they asking? Are they asking you to check the deed is there or not? No, they're asking you to check deed is there or not. Important. Inside this deed, whose name is there? Is it the company name or is it director name? So that we need to check whether the title of immovable property is held in the name of the company. Whether the title of immovable property are held in the name of the company. If not, provide the details. Description of the property, building 1, gross carrying value 10 crore, held in the name of Mukesh Ambani, director. Reason for not held being in the name of, currently in the process of conversion from personal property to company property. So he's in the process of conversion. He's about to sell. As agreement was entered, but registration is pending. Or the company during the year purchased 100 crores worth of fixed assets out of amalgamation. Registration is pending. So you need to give that. You see here, Reliance. According to the information and explanation given by the management, the title deeds and lease deeds included in PPE, okay, they were held in the name of the company, except some 83 crores worth of leasehold land where allotment letter is received but pending agreement. Okay, so some lease lands were pending for letter. Registration alone is pending, but the remaining all are held in the name of the company except 83 crore worth of leasehold lands. See, this is what asked you. Okay, you need to report on these issues. Tell me, are these issues the information about these issues available in financials? No. Only through auditor's report, shareholder understands, okay, company is maintaining asset register, company is physically verifying, companies, all the immovable properties are in the name of the company only, so we need not doubt. So shareholder is getting more information through Caro. Next, fourth one, whether the company has revalued property, plant and equipment or intangible assets, okay, or both during the year, including right of use assets, nothing but leased assets. Okay, so simply they're asking whether the company went for revaluation. Simple. Whether fixed assets are revalued. First question, Mr. Order, did the company did revaluation of fixed assets? Yes, sir. If so, okay, company did revaluation. Check this point. Whether revaluation, is it based on valuation by a registered value? Whether the revaluation is based on a registered value or certificate. Company should not revalue without registered value or certificate. That's not correct. Okay. And okay, yes, sir, registered value only, sir. Without registered, how the company will do revaluation? So they took the help of valuationer, sir. Okay, fine. Specify the amount of change. Specify the amount of change if the change is 10% or more in the aggregate of the net carrying value of each class of PPE. Net carrying value of each class of PPE. Example. Just a minute. Example. Generally, we do calculate depreciation after revaluation, correct? We generally don't do revaluation after calculating depreciation. We do revalue before calculating depreciation. Now, last year 100 crore is gross block value, 50 crore is depreciation, net carrying value 50. Net carrying value is 50. Now, current year, before depreciation, the revalued figure was 70. The revalued figure was 70. The revalued figure is 70. Actually, let us show one thing. Okay, fine. So it is 70. What is the change? What is the change? More than 10%. More than 10%. Specify the change. If there is a more than 10%, they're asking you, specify the amount of change. Specify the amount. How much amount it has changed? If the revaluation is 10% or more in the aggregate of net carrying value of each asset. Net carrying value of each class of asset means what? Each class of asset. Suppose plant and machinery, buildings, furniture, electrical. For each item, you need to calculate the percentage of difference because of revaluation. Percentage of increase in valuation, percentage in if it is decrease. Suppose, see, revaluation, because of revaluation, it might go upward or it might go downward. So it might either increase or decrease, whatever. Now I am asking you, calculate percentage of change. So if the percentage of change is more than 10%, it may be upward percentage or downward percentage. The percentage is more than 10% for each class of asset, you shall report. Suppose no furniture, no revaluation, 0. Equipment, electrical fittings, no revaluation, no revaluation. Buildings, no revaluation. Plant and machinery, there is a revaluation and the percentage is more than 10%. How much amount has been revalued? What is the amount that is revalued? Before revalued, what is the figure? After revaluation, what is the figure? That information you need to give. That information you need to give. I hope you are understanding. What is the amount of change? When you need to give this amount of change, if the percentage of change in revaluation is 10% or more in the aggregate of net carrying value of each class of asset. Each and every plant and machinery, no need to check. Some companies having 10 plant and machinery, 10 together, aggregate of net carrying value of each class of asset. Each class of asset means plant and machinery is one class of asset, building is another class of asset, intangible is another class of asset, furniture is another class of asset. I hope you understood. So fourth clause, they're asking you whether the company has revalued its PPE including leased assets or intangibles during the year. If so, whether the revaluation is based on valuation of a registered value, and if specify the amount of change, if the change is 10% or more of the aggregate of net carrying value in each class of assets of each class of PPE. That's it. So that's about the fourth clause. Fifth clause, disclosure of binomy transactions. What is it? Whether any proceedings have been initiated. whether on the company under Binomi Transaction Act any proceeding initiated, or are there any pending cases against the company under Binomi law? Sir, what is Binomi law? You will understand this in economic laws paper 6D, or I think you might get this Binomi laws in paper 4 as well. In corporate and other laws, I think you have Binomi transactions law to best of my knowledge. Okay, if at all your optional paper is not economic laws, okay, don't worry, don't think too much. There is a law called Binomi transactions, like if I acquire property, but not it is in my name, but it is in the name of somebody else. That's called Binomi transaction. We simply call it as Binomi. Binomi, money laundering, all this. Economic laws is a very important paper, not only from exam. I'm just talking about in reality. If you understand FEMA, Binomi transactions, money laundering thoroughly if you understand, and SEBI, if you're able to integrate all this with Companies Act, you can become a very good legal advisor. Don't think I'm a very good legal advisor, because I've never studied all of them. I only know a glimpse of each and everything, but I don't know in-depth knowledge. I don't have any in-depth knowledge. Fine. So simply clause number E is asking whether any proceedings have been initiated or pending against the company for holding any Binomi property. Binomi property means what? These properties were as part of company fixed assets, but company is not owner originally. Somebody else is the owner. Binomi. Okay, and rules made thereunder. If so, whether the company has appropriately disclosed the details in the financials. Binomi transactions details company has to properly disclose as whenever a proceeding has been initiated, that proceedings details, pending proceedings details, whether they disclosed in the financial statements or not, they're asking you. Now you see Reliance audit report, you will not find only up to C.5. You will not find revaluation point, you will not find Binomi point. Why? Because this is based on Caro 2016. Whatever you are seeing here, that is Caro 2016. Whereas revaluation point, Binomi point, there in which Caro 2020. That's it. I hope you are able to understand. So totally there are 5 points which auditor has to comment relating to fixed assets. Whether the company is maintaining proper records showing full particulars including quantitative details and situation of fixed assets. Second one, whether the company is verifying whether the physical verification of fixed assets, nothing but PPE, were conducted by management at reasonable interval. If so, whether any material discrepancies were noticed on such verification and how they were dealt in the books of accounts. Third one, whether immovable property title deeds including lease property, they were held in the name of the company. If not, details of the property, in whose name it is held, why it was not held in the name of the company, reason. Okay, and gross carrying value. Then revaluation, whether the company has went for revaluation of PPE or intangible assets including leased assets. If so, is it done by registered value? If the percentage of change is more than 10%, specify the amount of change for each class of asset. If the percentage of change is more than 10% in the net carrying value of the aggregate of each class of asset, so you need to indicate. And whether any proceedings under Binomi law initiated against the company or pending against the company, have they been properly disclosed in the financial statements? Check it out and then comment here. That's it. If the point is not applicable, we will say it is not applicable. There were no Binomi transactions initiated or pending against the company. Accordingly, this subclause is not applicable. We will mention like that if it is not applicable. Revaluation during the year, based on the information and explanation and based on sufficient appropriate evidence, company has not revalued the property. Accordingly, this subclause is not applicable. If D and E point are not applicable, you have to say not applicable. Sometimes no, some auditors out of over intelligence, what they do, if D and E clause is not applicable, they'll delete it. Deleting is wrong. See, every clause of the Caro must appear in the audit report. Sir, what if it is not applicable? Mention it. Say that it is not applicable. Say that it is not applicable. Don't strike up. Say that it is not applicable. That's it. That's about fixed assets under Caro. Next, I will discuss inventory point also, and then I will close this session. In the next session, we will continue. Physical verification, inventory. So what are they asking? Same physical verification point. Whether physical verification of inventory has been conducted at reasonable interval by the management, whether any discrepancies of 10% or more. Sir, in fixed assets, no. Property, plant and equipment, no. Whether any material discrepancy word is used. Whereas here they are saying 10% or more discrepancy. Indirectly, company law says if the discrepancy is 10% or more, physically 100 units were there, records 115 units were there, 15 units, percentage more than 10%. So here inventory, they specifically defined what is material. So they didn't even give you judgment. The law itself says if the difference is 10% or more, suppose management verified inventory, 100 units were there on physical count, but as per inventory records it shows 110, so it is 10%. If the discrepancy is 10% or more in the aggregate of each class of inventory were noticed in respect of each class of inventory, there are three classes of inventory: raw material, work in progress, and finished goods. Raw material, work in progress, and finished goods. Okay, in respect of each class of inventory, if the difference is more than 10% discrepancy found, if the difference is found for more than 10% discrepancy, whether they have been properly dealt with, it may be shortage or excess. If it is excess, they would have recorded. If it is shortage, they would have written off. So see whether they have recorded and written off properly the difference. So you need to check out. Now here, sir, here reasonable interval they said. In fixed assets also, they are asking whether management is doing physical verification of fixed asset at reasonable interval. In fixed asset, reasonable interval. In inventory, reasonable interval. Are they same, sir? No. Fixed assets, they were always constant. There will not be inflow and outflow. Only inflow, no outflow. Only at the time of disposal it is outflow. In fixed assets, generally movement will not be there. That's why once in 3 years also, if at all you count, that's okay. But inventory, regular movement will be there. Inflow, outflow. Again, it might return sometimes, sales return. So it's a regular movement will be there. So you have to verify inventory more frequently than fixed asset. The shortage between, the time gap between two physical countings for inventory, the time gap should be lesser compared to fixed asset. You know what the guidance note on Caro says? Inventory must be verified at least once by the management. At least once. Best example, as on 31st March, valuation has to be done, right? Stock valuation. How can you do stock valuation without inspecting the stock, without checking the stock physically? Correct or not? So Caro guidance note says at least once in a year company must do 100% physical verification of inventory. If the company has not done that, it's clear violation. Clear violation. That's why you see supermarkets and all, especially during March to April month, they will close the store for 1 day. Customer no access will be given for 1 day. The reason, in fact, I have seen in one of the D-Mart, board, physical verification audit is going on. Audit is going on, they put some board, audit going on. What audit? Physical verification. Auditors also will do sometimes. But here, they are not asking you to do. They are asking you to check whether management is doing physical verification. In gold shops, gold jewelry, big shops, Lalita Jewelers, Kalyan Jewelers, Josa Lucas, they do everyday physical verification. But do you think the same everyday physical verification required in a rice go down, in a cotton go down, in a iron and steel go down? Not required. So they may have to physically verify once in a month. But minimum requirement is what? Once in a year is minimum for any type of organization. So auditor has to check whether physical verification by the management is performed or not. Working capital loan, second point, this is newly added in Caro 2020. So what are they asking here? Whether during any point of time of the year, nothing but during the financial year, suppose you are doing audit of 21-22. What is 21-22? 1st April 2021 to 31st March 2022, 365 days. In these 365 days, whether the company has been sanctioned working capital limits in excess of 5 crore. Okay, during the year, did the company got more than 5 crore approval? Is the company having more than 5 crore working capital loan approval sanction? They're not asking you, have you taken the loan? Disbursement there or not, they're not asking you. They're asking only sanctioned limit. They're only asking you sanctioned limit. Whether the company was sanctioned more than 5 crore, working capital limit in aggregate from all banks, FIs on the basis of current assets. On the basis of current assets, we call it as floating charge in company law point of view. Okay, by keeping all current assets under hypothecation, company has got working capital sanction. Fine. How much sanctioned? More than 5 crore. If so, if the more than 5 crore, if the condition is yes, then check the second point. Whether the quarterly returns, statements, filed by the company with such bank, financial institution, or in agreement with the books of accounts. They are in agreement with books of accounts of the company. If not, give details. This is to eliminate, this is to overcome, or to reduce fake certificates given. This is to reduce fake certificates. Companies know earlier what they do, they'll give banker will ask stock certificate in order to give you working capital loan. It's a hypothecation. Working capital loan will be given against inventory. Do you think bank will take the inventory and keep? Suppose you have a coal mine, but looking at that coal mine, I'll give you some working capital loan. Will I take the coal mine and keep it in my bank? Not possible, no. I'll do hypothecation. If you did not repay, I will take the charge of coal mine. That is what hypothecation works. It is not physical movement. It is not physical transfer of ownership. Physical transfer of possession will not be there. Pledge physical possession will be there. But many companies, what they're doing, they may have 1 crore worth of stock, but they'll do a fake stock certificate, 10 crore, give it to the bank. They'll get 5 crore sanction, withdraw 5 crore, default. This is happening so many times. So what is there in books of accounts? 1 crore stock. But when they're giving it to the bank, stock certificate, stock statement, quarterly statement, how much they're mentioning? More than that. Now they want to eliminate. The company law want to identify through Caro. Dear Mr. Auditor, this company has got working capital loan for more than 5 crore. It's a very big borrower, large advance. It's a large advance. Okay. Now since it's a large advance, this company will be giving quarterly statements with the bank, to retain the sanctioned limit. In order to maintain the sanction limit, in order to maintain the loan, okay, the company will continuously file stock statement, right? What amount of inventory there in the stock statement? 10 crore. Is it matching with books of accounts? Check it out. As on the date, is it matching with books of accounts? I am the auditor. I checked it. Array, company management on some 30th September stock statement they filed 10 crores. As on 30th September, inventory is 4 crores only. Hey management, why did you over reported in stock statement? Sir, managing, sir, business is like that. No, I will report it in Caro. The company has got more than 5 crore sanction limit, and the quarterly statement filed by the company reflects a higher amount than what is there in the books of accounts. It's a clear violation. It's a fraud. In fact, it's a fraud. And the person who certified that, like you and me, chartered accountant, we will be indulged in that fraud. These are the frauds which are happening. Through Caro, we may not prevent the fraud, but we can detect the fraud. Now you might get it. Sir, what if the auditor also colluded and not reported? Tomorrow, if this is found, you will understand what is the punishment in professional ethics chapter. What if auditor did not discharge his duty properly? You will understand what is the punishment for that in the professional ethics chapter. That's it. So once again, I'll repeat this point, working capital point alone, whether during at any point of time, the company has been sanctioned, working capital limit in excess of 5 crore in aggregate from all banks together, you got 5 crore limit sanction overall, not from each bank. Some ICICI bank gave 1 crore sanction, SBI gave 2 crore sanction, HDFC gave 2 crore sanction, another bank gave 1 crore, total it is 6 crore. Then this clause is applicable. If so, whether quarterly statement filed by the company with such banks, FIs, are in agreement, whether the quarterly statement data, stock certificate, are they in agreement with the books of accounts of the company? If not, give the details. Definitely books of accounts cannot be manipulated, correct or not? If they manipulate and rectify, I will understand, no? Simple. That's it. So that's about inventory. So with this, 2 important clauses in Caro we have completed. Total we have 21 clauses. All the clauses are actually important. In fact, in these 21, what is not important we have to figure out rather than what is important. Almost all are important. 4th clause may not be that important. So I will explain you what is not important. Listen to this Caro topic carefully. May 2022 attempt. I am predicting for sure a 5 marks question. Unless ICI withdraw the Caro 2020 applicability for the exams. Last time also in 2021 year, May 2021, actually originally Caro 2020 is applicable in May 21 attempt itself. But in the month of March, ICI came up with a notification saying, okay, students relax, Caro 2020, let us ignore, follow 2016 only. Originally it is applicable. May 2022, materials of the ICI Institute Caro 2020 only. Even ICA gave a notification, Caro 2020 only. But ICA mind may change in the month of April. They may suddenly come with a notification saying, dear students, okay, for the sake of benefit of the students, Caro 2020 we are relaxing. For you, May 2022, Caro 2016 might be applicable. This possibility is there. This possibility is there. But it's okay, ignore it, learn properly. So carefully. That possibility is 5%. That possibility is 5%. 95% Caro 2020 is applicable from May 2022 examination onwards. Whether you're a final student or inter student, doesn't matter. So that's about inventory point. Working capital, all that. I hope you understood fixed assets and inventory. The next one is regarding investment guarantees, loans and advances. Investment guarantees, loans and advances. Earlier, it is only related to related parties, but now the scope has been widened. But anyhow, I'll discuss about the third clause in the next video. That's it. Come to the next video. I hope you're able to enjoy. So before you come to the next video, one small request. Give a single reading to entire fixed assets clause and entire inventory clause. If possible, only for Caro, do this exercise. Before reading the third clause, give single reading to the third clause also. Give a single reading to the third clause. Once just give a reading. Then you listen. You see how much better you understand. If possible, do that. Only for Caro related discussion, you do that. That's it. Okay, carry on. Come to the next video. So in our previous session, we started Caro 2020 and we have already covered two clauses. One, fixed assets and inventory. And we understood in fixed assets there are totally 5 sub-points on which auditor has to specifically give his comment, whether it is positive or negative. And I told you clearly, if a particular point is not applicable, auditor shall mention that it is not applicable. You should not delete that point. Then inventory we have 2 points, physical verification, working capital point. And now the third clause in the Caro. This third clause is also there in the previous Caro as well, but it is slightly improvised. Okay, so fine. So first let's look at what is the third clause is dealing with. Investment guarantees, security, loans or advances. Actually, third clause and fourth clause both are dealing with the same aspect. Fourth clause is little extension to the third clause. Okay. Now, so what is this third clause is dealing with? Now, before I read, I just want you to have one small observation. Loans or advances in the nature of loans. What are they talking about? Loans or advances in the nature of loans. And here also, loans and advances in the nature of loans. Loans and advances in the nature of loans. Loan or advance, or you can also call it as loans and advances. There is no significance for this word or and. There is no significance here. There is no legal interpretation for or and here. It just randomly they used. Loans or advance or loans and advance, again here. What is it? In the nature of loan. Again below. Any loan or advance in the nature of loan. That's it. So you see everywhere they highlighted about loan or advance which is in the nature of loan. First of all, look at here. What is this clause is actually dealing with? It is dealing with, investments made by the company, guarantee given by the company, security given by the company. Security given by the company means not security in a loan. No, not that. Guarantee or security means surety. The concept of surety comes here. Okay. Or, loans or advances. Here please extend. Loans or advances. Please add in the side heading. Add one more word. Loans or advance in the nature of loan. In the nature of loan. Loan or advance in the nature of loan. Sir, we already know what is meant by investment. We know that. And we know what is a guarantee security. We know loan or advance also. But actually you think that you know loans or advance meaning. But actually you don't know. I'll prove it right now. Don't worry. Loan or advance in the nature of loan. They have not used the word loan or advance isolatedly. They used the word loan or advance with a continuation sentence in the nature of loan. Loan or advance in the nature of loan. Which means you may call it as advance. You may call it as loan. The name, the nomenclature is not we are talking about. The nature we want. Is it in the nature of the loan? Loan or advance, whatever nomenclature you may use, you can use. But is it in the nature of loan? Then only third clause is applicable on that loan. Suppose I gave a loan or I call it as advance, but the nature is not loan. The nature is advance. This clause do not apply. Sir, first of all, what is a loan? What is an advance? Both are same, no? They're just synonyms, right? No, there is a difference. There are three terms that you need to understand: loan, advance, deposit. I am not talking about the nomenclature. I'm talking about the real meaning of these three words. What is a loan? You gave me some 10 lakh rupee on a condition that I have to pay back within 2 years or 1 year or 6 months or 3 years, whatever. You gave me. We both executed an agreement. We both executed an agreement. Getting it? I approached you, you gave me. Understand? I approached you, you gave me. Are you getting the point? And there is some rate of interest, or there may not be a rate of interest. The repayment made by me, it is in the form of equated monthly installment or whatever. So that's a loan. What is an advance? You are a buyer, I am a seller. You want some goods which are available with me, which I will be selling. So for that, you sent me some advance for purchase of goods. Advance given to supplier. You gave me an advance. I am a supplier. You gave me advance to for making an order for purchase of goods. You placed an order with me. For that, a token advance you gave. Some actual order value is 1 crore, but you gave me 10 lakhs. I delivered goods and I raised an invoice 1 lakh. In that invoice, I clearly set off 10 lakhs advance given by you. Balance amount is 90 lakhs. Then you paid that 90 lakhs later on within the credit period given to you. Over. Here, what you gave me is not a loan. What you gave me is advance. Advance word is used when it is settled against a transaction later on. Advance is generally not repaid back. Advance is not given back later on. You just gave me advance, I will settle it against sale made to you. You know, advance received from customer. I will settle that against sale. Advance paid to supplier will be settled against the purchase. Then only we call it as advance. So advance, there will no repayment, technically speaking. Then what is deposit? Loan, I approach you, whereas deposit, you will approach me and keep it with me. Or a deposit means you will approach and keep it with me. Getting it? Or I will approach and keep it with you. Example, rental deposit. Okay, I'm talking about asset to asset items. I'm not talking about liability items. I'm not talking about loan taken, advance taken, deposit accepted. No, I'm not talking about that. I am talking about loan given, advance given to supplier. Getting it? Deposit made with a house owner, deposit made with a factory owner, deposit made with a electricity department, deposit made with a telecom department. Loan given, advance given, deposit given, which is an asset for me. I'm talking only about asset here. Here, investment given, guarantee given, security given, loans or advances. Getting it? All these are in the context of assets. However, guarantee and security, they are neither asset nor liability. Why? They are contingent liabilities. Actually, they're contingent liabilities. So that's ignore guarantee security because that is very rare aspect. But investments made by our company, loans or advances given by our company which are in the nature of loan, Getting it? So we are talking about asset item of the balance sheet. We are not talking about liability item. We are talking about asset item. This entire third clause is dealing with asset item, not liability item. First, make it clear. And I hope now you understood what is the difference between loan, advance and deposit. Deposit made, it is neither loan nor advance. Example, security deposit given for office building at the time of lease contract. So that and all comes under deposit. But anyhow, this clause number 3 talks only about which type of transaction, loan type of transaction only. Sir, advance word. No. Though the word is advance in the nature of loan only we are talking about. So how the clause is used? Loan or advance, which are in the nature of loan. What do you mean by loan? What are the characteristics of loan? Where there will be a repayment, where it is not set off against a transaction. So that is when we call it as nature. That is when the nature is called as loan. Advance nature is what? Advance is settled. Generally in our daily parlance, in our day-to-day thing, rental advance word we generally use, where suppose you want to take a house on rent, 2 months rental advance. Actually, it is not advance, it is deposit. What is it? It is deposit. In some cities, it is actually treated as deposit, but in some cities like Hyderabad metros and all, last 2 months you need not pay. Vacate at the time of vacation, 2 months no need to pay rent, which means against a future transaction advance is adjusted. You will not get back. There you can use the word advance technically. Are you getting it? Otherwise, suppose cities like Bangalore and all, Mumbai, 10 months rental deposit they will take. 10 months. And they will ask you intimate 2 months prior. You intimated 2 months before vacating. 2 months amount they will set off. Remaining 8 months they will return it to you. That's deposit. Deposit will be returned back to you. Returned back. It is not repaid back. Understand? Returning is different from repayment. On deposit, there may be an interest, there may not be an interest. 99% of security deposits, there will not be any interest. 99% of the loans, there will be an interest. Exceptionally, interest will not be there. I hope you understood. So now the Caro is talking about, the third clause is talking about what? Investments made by the company, guarantee given or security given by the company, loans or advances given by the company which are in the nature of loan, only loan characteristics, which means the third clause is not talking about advances given to supplier, getting it? Advances given to a service provider, advance given for telephone expenses. No, that is not talking about advances of that nature. Are you getting the point? I hope you understood clearly. Here the word advance is used. But that is which advance? Advance which is in the nature of loan. You may call it as advance, but actually it's a loan. Suppose employee staff loan. Generally employee loans companies will give, right? Company. Suppose employee asked, sir, next month salary, right now can you give me? I'm having little urgency. I gave, next month I did not pay salary. That's an advance. Sir, can you give me 10 lakhs loan, sir? Every month in my salary, next to 20 months, 50,000 please deduct, sir. Yeah, I gave 10 lakhs loan. Next to 20 months, I deducted 50,000 from the employee. That's a loan. Understand? I hope you're able to understand. So the difference between loan and advance. Now, so what is that? Here we are discussing about first. So what is the first point that auditor has to report? Whether during the year the company has provided loans or company has provided advances. But both are in what nature? Both are in the nature of loans only. Whether the company has given loans or provided advances in the nature of loan, or stood guarantee, or provided security to any other entity. Actually, security word here you need to interpret as a surety point of view. Okay, nothing but guarantee. Guarantee or security is used simultaneously generally. Okay, and this point, if you check, this point is not applicable to a company whose principal business is to give loans. Sir, This point is not applicable to a company whose principal business is to give loans. Banks, you're talking about banks, no? Not banks. For banks, Caro itself is not applicable, man. For banks, Caro itself is not applicable. Then then which entity will have principal business of giving loan? NBFC. So this point is not applicable for NBFC. Sir, by the way, is Caro applicable for NBFC? Yes, because NBFC is not a banking company. Caro is not applicable for bank, not applicable for insurance. Section 8 company, one person company, small company and private limited company subject to few conditions. But Caro is applicable. Caro is applicable to NBFC. Caro is applicable to NBFC. Understand? Yeah. Now, so whether during the year the company has provided loans or advances in the nature of loans or stood guarantee, provided security to any other entity, if the company has given, if the company gave, if so, please indicate. They are asking you, Mr. Auditor, give the following details too. Okay, the aggregate amount during the year, given, and balance outstanding at the balance sheet date with respect to such loans or advances and guarantees or security to subsidiaries, associates and joint ventures. Very simple. Whatever loans or advances, guarantees, security, whatever is given by the company, total loans 100 crore, bifurcate. To related parties how much, to unrelated parties how much, bifurcate and then show. What you need to give information, what is the aggregate amount given during the year and what is the balance outstanding at balance sheet date. And this breakup you should give separately for related parties and unrelated parties. And you know what, coincidentally, as per accounting standard on related parties, we are supposed to give like this. Even schedule 3, the presentation in notes to accounts, generally in the financial statements, we clearly show how much loans and advances were given to related parties, how much were given to others. We generally show that breakup. So the auditor, you need not struggle much. Open notes to accounts of the company, open that how much loans or advances given to related parties, keep that amount. What is the balance outstanding? Disclosure requirement is there, no? So keep that amount. Unrelated parties, how much loans given? Give that amount. Balance outstanding, give that amount. Very simple. I hope you understood. And what is the aggregate amount during the year and balance outstanding at the balance sheet date with respect to such loans or advances, guarantees or security to parties other than subsidiary, joint venture, associate? If it is joint venture, subsidiary, associate, it is covered in the above. If it is other than joint venture, subsidiary and associate, covered below. Simply, what is this point is talking about? Just a minute. Sorry. Yeah. What is this point is talking about? So loans or advances given by the company, given by our company means I am auditing a company, they gave a loan means what item it is? Balance sheet asset item. So this in that the auditor has to show related parties, unrelated parties. What he need to show? What is the total amount given and what is the balance outstanding? Here also, what is the total amount given and what is the balance outstanding as on balance sheet? It's simple. This is the subclause A in the clause number 3 requirement. Oh, very simple. Next. See, just because I'm scribbling or writing diagrams, don't scribble everything whatever I scribble here. So just for making you understand, I'm scribbling. Don't think by copying this your job will become easy later on. Never do that. Every time whenever you're reading, read full sentences like this. What happens when you read full sentences like this? Your command on the terminology improves every time you read. Suppose if you directly read from a diagram, loans and advances given, related party, total amount given, balance outstanding, unrelated party, total amount given, balance outstanding, this has to be reported. You only read in cut short here. And if the same thing is asked in exam, you read half sentences, you present quarter sentences. So you wrote correct answer, but you not complete answer. That's why you'll never get full marks. The reason why I discourage students not to go with chart books, the only reason why I discourage you to go against a chart book. Don't go for chart books at all. Even if your friends are doing it, don't tell them. Chart books will give you information, but will not give you command on the terminology, but cannot give you command. See, it is not whether you understood it, whether you revised it. It's about how much you're able to write in exam. That is important. And that writing skill will improve only when you read thoroughly. If you are a good reader, you can be a good writer. Simple. Now, next. So that is the first point. So if the company has given any loans and advances, the first thing auditor has to give the breakup between related parties, unrelated parties, amount given, balance outstanding as at the balance sheet date. That's it. By the way, I used the word related party, but actually here in the law, did they use any related party? You see, these all side headings I am using for your convenience. The side headings I'm using it for. In actual Caro, you will not find all the side headings. You will find clause number 1, clause number 2, straight away 1, 2, 3, 4 like points only you will find. You will not find side headings and all. I am giving side headings for you. So I am calling it as related party. In exam, you should not write it as related party. In exam, you should write it as a subsidiary, joint venture and associate, subsidiary, joint venture and associate. This is what you have to write. Subsidiary, associate, joint venture are nothing but related parties. That's it. Next. Then second point, dear Mr. Auditor, in balance sheet, as a shareholder, I know how much amount of loan given to related party, how much amount is given to unrelated party, how much is the balance outstanding. As a shareholder, company is showing in the balance sheet and notes. Fine. Now, we don't know terms and conditions. On what terms and conditions loans were given? We don't know that. Whether the terms and conditions are okay, whether the terms and conditions are reasonable, whether the terms and conditions are prejudicial to the company, unfavorable to the company, as a shareholder, we don't know. We are not having, we are privy to the contract. We are not having the privilege to look at the terms and conditions. You, Mr. Auditor, you went to the company, right? Through Caro report, please tell us the company gave loans and advances in the nature of loan, whether the terms and conditions based on which the company gave loan, whether the terms and conditions based on which the company gave loan are the terms and conditions not prejudicial to the company interest? Are they not unfavorable? Are they not unfavorable? Not unreasonable. Not unreasonable means what are they asking? They are asking you whether terms and conditions are reasonable. Whether the terms and conditions are reasonable. Not prejudicial means nothing but Caro is asking, dear Mr. Auditor, check whether investments made by the company, guarantee security given by the company, terms and conditions of the loans and advances which is in the nature of loan, are they not prejudicial to the company interest? Are they reasonable? What do you mean by reasonable? Very simple. Don't apply too many concepts. Reasonable, so much interpretation. Very simple. Generally, articles of association will give some powers to board of directors. Correct? You would have heard in company law paper. Board of directors can take some transactions. They can give some loans to some extent. And articles of association itself will prescribe if a company wanted to give loan, what should be the rate of interest? What should be the rate of interest? The percentage will also be given in the articles. And articles will give a power to the director to develop a policy of loan, policy of advances, all that. And that policy has been approved by articles, which is approved by shareholders. Now, if at all the company directors are giving a loan, okay, as per the policy of the company or as per the articles of the company, we call it as reasonable terms. Suppose articles of association says a 10% rate of interest applicable, but the director gave a loan to one of the related party. Getting it to one of the related party, he gave a loan at 5% rate of interest. It is not prejudicial for the company. It is not at the interest of the company. It is against the company rule. Very simple. So not prejudicial. When do we say the terms and conditions are not prejudicial? When the terms and conditions are against bylaws of the company, against policy of the company, against articles of the company. Simple. Don't apply too much interpretation. This is enough. This is enough. Okay, sir. We understood. So first question in Caro, third clause, first point they're asking loans and advances given. If so, what is the breakup, related party and unrelated party, amount given, what is the balance outstanding? Second, we are getting one more information from auditor, insight. We are understanding through auditor's word, through auditor's report, whether terms are reasonable or not. Auditor is telling us, happy. Third one, we wanted to know, okay, the balance sheet shows what is the outstanding amount. But this outstanding amount, is it because of the default or is it regular? I mean, we just wanted to know how the repayment is made. We gave loan, that's fine. Are they repaying us properly? We want to know as a shareholder. We want to know whether our funds are properly given. Especially this point is applicable for NBFC. Only A point is not applicable. Only A point is not applicable for NBFC. B point is applicable for NBFC. C point is applicable for NBFC. They are applicable for NBFCs. Okay, so whether in respect of loans and advances in the nature of loan, whether schedule of repayment of principal and payment of interest has been stipulated, and whether repayment receipts are regular. So whether the loans and advances given, repayment terms, are they given in the agreement? Yes, given. If so, is it as per the terms and conditions? See, whether they're asking repayment is regular. What do you mean by regularly repaid? Regularly means monthly we are paying. Is it? No. Regular means, are they repaid within due date? Are they repaid as per terms and conditions? If at all the borrower is repaying me always before, on or before due date, I call him as regular. If the borrower is not repaying me on due date, we call him as defaulter, non-regular, irregular borrower. Regular means every month I'm paying, no, which means regular activity. No, not that. Regular means within due date. Regular means as per terms and conditions. Understand? So, just a minute. Yes. So, in respect of loans and advances in the nature of loan, whether schedule of repayment of principal and repayment of interest, is it stipulated in the loan agreement, and if so, whether the repayment receipts are regular, nothing but are they as per the agreement, are they as per the terms, are they within due date. That's it. Sir, suppose there are some default, suppose there are some defaults, the company has defaulted, sir. I mean, the company gave loan to some related party or some unrelated party, they defaulted, there is a overdue loan. Okay, if there is a default, okay, fine, report that default in the C point. Suppose if the amount is overdue, state the total amount overdue for more than 90 days. Suppose there are some overdue loans. There are 10 loans given which are overdue, but out of which 2 loans were overdue, due date crossed, installment not yet received, interest not received, principal not received, due date crossed, 90 days already lapsed. Okay, and whether reasonable steps have been taken by the company for recovery of principal and interest, whether 90 days overdue in respect of loans where repayment due date already crossed, 90 days also over, in those kind of loans, this company, you are the auditor for our company, no, this company gave a loan, the other party defaulted, 90 days also over, NPA norm already satisfied from banking point of view, what steps a company did? What steps a company took to recover the loan? I am asking you, Mr. Auditor, check what steps company has taken. It is our money. Okay, the company showed 10 crores we have to receive, but the 10 crores is overdue from past 90 days. Balance sheet shows this much we have to receive. That's fine. But more than 90 days, the amount is overdue. So whether it is recovered by the company, did the company taking proper steps or not? This is where we also call it as prudence. So they are asking you to be prudent. You know, they are asking you to do propriety audit. They are asking you to do propriety audit. Check whether what steps company is taking. See, as an auditor, generally what is my duty? Balance sheet picture true and fair or not. That's it. Company gave 10 crore loan. Outstanding amount 10 crore. Balance sheet also shows 10 crore. True and fair. I'm not asking you here true and fair. You gave an opinion. I'm asking you, out of the 10 crore outstanding, how much is overdue for more than 90 days? If so, what steps company has taken? Check it out, Mr. Auditor. So you are asking me to do a owner job also? Yes. Caro is insisting upon you to do a owner job, propriety job, propriety audit. I hope you understood. So if the amount is overdue, what is the total amount overdue for more than 90 days, and check whether company has taken reasonable steps to recover the principal and interest. So that's another point. Next, another point. Again, this point is not applicable for NBFCs. NBFCs, this point is not applicable. This point is not applicable. Now they're asking whether any loan or advance in the nature of loan which has fallen due during the year has been renewed, extended, or a fresh loan granted to settle the overdues of the existing loan to the same parties. To the same parties. They are asking you, there are some loans. Opening balance 10 crore. Out of that opening balance, 3 crore amount due in the current year I need to get. But to COVID situation, customers whoever have taken the loan not repaying me. So accordingly, what the company did, the loans were renewed for another 6 months, or the repayment period is extended for another 6 months. This is called moratorium. Or company did, array man, we have to unnecessarily face all the litigations and all. Do one thing, I will give you fresh loan. Take this 1 crore and repay existing loan, so that nobody will see a default here. So I gave you loan, you repaid. This is called refinancing. Actually, refinancing is different. Loan refinancing means, suppose I have a loan from State Bank of India. I went to ICICI Bank and closed State Bank of India loan. Then that's called refinancing. That's different. Okay, fine. So if any such incident, any such loan renewal, loan extension, fresh loan given to repay the existing loan, if there is any such incident, auditor has to give information, specify, give information, what? Aggregate amount of such dues renewed, aggregate amount of such due extended, aggregate amount of loans, fresh loans given to settle the existing loan, and what is the percentage of aggregate to the total loans and advances which are in the nature of loans granted during the year. So this point is not applicable whose principal business is to give loans. This point is not applicable for a company whose principal business is to give loans. So what are they asking here? What are they asking? So here also, let me summarize once. So, opening balance is, let us assume 10 crore. Out of this 10 crore, 3 crore is due during the year. In 2021 year, it is actually due. But this 3 crore, no, he did not pay. Though it is due, customer did not pay. Fine. So is this 3 crore renewed? Yes. Or is this 3 crore extended? Yes. Or did you give 3 crore fresh loan? Yes. And repaid the existing loan. If this situation is there, what is the amount of such due, renewed, extended, settled? 3 crore is the one where I extended or renewed or gave a fresh loan. And what is this percentage? 3 crore divided by 10 crore, 30%. Oh my God, during the year 30% of the loan which we are supposed to receive have not received. Okay, moreover, it is extended, renewed, or fresh loan is given. So this will give you additional information. See, I am trying my level best, okay, without even looking at practical implementation of how this is. Okay, we have not yet have seen any practical reports on this, but soon in the month of May or June 2022, practical reports also will come on this. So next time when I'm doing Caro recording, okay, probably in again June or August, again I'll be doing fresh recording, probably, maybe. So that time we will have this Caro report of some company. So that time it will be even more interesting. Okay, fine. Anyhow, not a big deal, but I hope you are able to visualize. That's it. So that's about rescheduling or extension of overdue loans. Then demand loan without repayment period. Generally, a company cannot give demand loans. Prohibited. Even NBFCs are prohibited to give demand loans. Not demand loans, sorry. Demand deposits, not demand loans. Sorry. Demand deposits. NBFC is prohibited to accept demand deposit. A company is also prohibited to accept demand deposit. That's about deposit accepted. It means a liability for the company. No, I'm talking about loans given. Suppose whether the company has granted any loans and advances which are in the nature of loan, either repayable on demand. Okay, company gave a loan. When it will be repaid? Whenever I demand. Or I gave a loan without specifying any terms, no terms and conditions, hand loan kind of. Or without repayment period. The company gave some loan, company gave some advance. Both are in the nature of loan, which is repayable when the company demands, or the company gave a loan without terms, the company gave a loan without repayment period. If so, what is the total amount, percentage thereof to the total loans granted? During the year, total loans granted 10 crore, out of which demand loans are 1 crore, 10%. Oh my god, during the year 10% of the loans were granted, which are repayable on demand without any repayment period. And aggregate amount of loans granted to promoters. Okay, out of these demand loans, how much is granted to promoter? How much is granted to related parties? Give breakup. Demand loans. So that's about the F point. You see, that's why I beautifully give side headings as well. Okay, beautifully give side headings. Whether the company has provided loans and advances, first give breakup between related party, unrelated party, amount given, outstanding amount. Then check terms and conditions and tell to the shareholders whether they are reasonable or not. Check whether the repayment is regularly made. Suppose if there is a default and the default is for more than 90 days, what steps a company has taken to recover? And now whether any loan due in the current year, if the company has extended, renewed, or gave a fresh loan to repay the current loan, how much amount, and what is the percentage of that renewed loans to the total loans percentage? And last one, demand loan. If the company has given any demand loan or company gave any loan without repayment period, what is the amount and how much of it is given to the promoters and related parties? See, this is called summarization. I explained each and every point for almost more than 20 minutes. More than almost 30 minutes, I can say. Last 1 minute, see how I able to summarize. Every time whenever you read a very typical topic, once you finish reading, what is there at a glance, imagine. That's how your memory power will increase. When you summarize, your memory power will increase. That's it. Summarization we call it as. Okay, I hope you understood. So that's about the third clause in Caro. The next one, okay, extension. Actually, this is an extension. Fourth clause is an extension to third clause. So whatever loans, investment, guarantee, security provided by the company, check whether 185, 186 terms and conditions complied. 185 section, 186 section. Company law provisions, are they satisfied or not? That also you check. In the third clause, we only spoke from contractual obligations. We didn't speak from law point of view. Now here they're asking you, just check 185, 186. That's it. 185, 186, all these are covered as part of your director's provision in company law. You just have to check 185, 186 terms and conditions. I'm not discussing what is 185, what is 186, all that. If I sit and discuss all that, Caro itself will be 10 hours. Next. So next, coming to the fifth clause of the Caro. I hope you understood the third and fourth clause. Right now, please pause the video. Please pause the video. Read 3 clauses. Give a single reading to the fixed assets. Give a single reading to the inventory and also to loans, advances, investment, guarantee. Loans and advances in the nature of loan. Always use the word in the nature of loan. And by the way, we are only talking about loans, advances, investments, guarantee, all from asset point of view. That's it. Next, deposits. Here, deposits given by company or accepted by company. Which one? Accepted by the company. That is what we call it as liability. That is what we call it as liability. Now here, what are they asking? Did the company accept deposits from the public? Acceptance of public deposits. If so, company has accepted public deposits. How much percentage? Maximum 10%. A company can accept deposits from public. 25%. 25%. There are provisions of deposits which you learned in CA intercompany law. So if so, verify compliance with company law provisions, compliance with directives issued by RBI if any, and compliance with company law board, court or any other tribunal. Okay, and if there is any non-compliance with any of these, what is the non-compliance nature, contravention nature should be mentioned. Simple point. Company accepted deposits. Check company law provisions, RBI directions, NCLT, CLB or court orders, are they followed? If not followed, which condition they failed? That nature of condition, what is the punishment for consequence, all that consequences please indicate. That's it. Very simple. Next, cost record. Cost records. Whether maintenance of cost records has been prescribed by central government. Whether maintenance of cost record, is it prescribed by central government for your company? For your company where you are doing audit, is cost records applicable for this company? If so, check whether such accounts and records have been made, whether such accounts and records have been maintained, whether the records are made and maintained. Check it out. That's it. Just a minute. So that's about cost records. Very simple point. Very simple point. So I'm showing you right now. Muthoot Finance thing. Okay, just now we have finished the third clause and 4, 5, 6. Let me show you how they were reported in old Caro of the Muthoot Finance, which is an NBFC. This is Muthoot Finance Auditors Report. Third point you check. According to the information explanation given, the company has granted loans to the parties registered. Actually, earlier it only talks about related parties. Now there is no such difference. We have to talk about related party loans, unrelated party, everything. Right now as per Caro 2020. Okay. So see, they just auditors gave this much loans given to these many parties and this is the balance outstanding. The terms and conditions of the grant of loan are prima facie not prejudicial. So Muthoot Finance auditor said the terms and conditions are reasonable. The above mentioned loans are repayable only at the end of the loan tenure and there is no repayment schedule. Means nothing but there is no installment schedule. Only tenure of the loan. Once the tenure over, they have to repay. It's a fixed tenure loan. Interest payment is regular. Positive comment. There is no amount overdue for more than 90 days. So that is also a positive comment. And here Muthoot Finance auditors, loans, investments, guarantees, everything are complied in as per 185. And further, in our opinion, according to information, the company has not accepted any deposits from public. So there is no public deposits. Accordingly, this particular clause is not applicable. The central government has not prescribed any cost records. For NBFCs, there is no cost records concept. So accordingly, the provisions of this particular clause is not applicable. Suppose you check Reliance Industries audit report, no, they will say the central government has prescribed cost records to be maintained. We examined the cost records based on our prima facie examination. The records were made and maintained. However, we have not made any detailed examination. Auditor need not maintain detailed examination. Dear Mr. Auditor, dear Mr. Chartered Accountant, you are the stat auditor, not the cost auditor. You need not make a detailed examination. You need not make a detailed examination of cost records. Check, are they available? Yeah, cost records are made. They were maintained. That's it. Just comment that here. That's enough. So with this, totally 6 clauses we completed. And the next one, 7th one, statutory due. The 7th one is statutory due. So what statutory due we have to report? 2 things we have to report. Undisputed due and disputed due. First, before I go into undisputed, disputed, first of all, what is a statutory due? What is a statutory due? So now, see, statutory dues are something which are repayable because of levy. Because of levy under a law. Levy under a law. What are all the levies that a company generally pays in lifetime? Generally, what are the levies under law? Income tax, GST, once upon a time excise duty and service tax. Okay, once upon a time. Now customs duty, octroi, VAT or CST once upon a time, profession tax, provident fund, employee state insurance. Okay, these are all levies which company has to pay as part of a statutory obligation. The company has to pay for sure as part of statutory. It is a statutory obligation for the company under the law. So their levies are statutory liabilities. Getting it? So these are all simply called as statutory dues. Now my question, is electricity a statutory due? Is electricity or power charges, electricity charges, is it a statutory due? Yes sir, because we are paying it to government only. No. Electricity is a commodity. You are purchasing the commodity, using the commodity and paying the charges. Yes or no? Suppose you didn't have electricity connection at all, why you have to pay? Why you have to pay? Electricity is a consumer durable, understand? It's a consumer product. You know what? Once upon a time we have a CST, Central Sales Tax Act. What it says? Electricity are goods. How sir? Electricity, how come you call it as goods? Electricity is movable, right, from one place to another place. Electricity can be stored, right? Electricity can be, electricity, since movability, portability, movability, marketability, both are there, it is goods. In fact, I will add my own style of definition. You can touch and feel electricity. Yes or no? Anything that we can touch and feel, we call it as goods. No, electricity is a good. That itself is example. If you want, you touch and see, you can feel it. Okay, so accordingly, electricity is a good. So So you are buying goods and using. So that is not a statutory. You are paying electricity charges to electricity distribution companies. You are paying charges to electricity distribution companies for purchasing the electricity. So simple. So that is good. That will not come under statutory due. Okay, fine, sir. We understood what is statutory dues or profession tax, provident fund, ESI, any amount repayable under gratuity law. All these are statutory dues. Because of the statute, I have to pay these amounts. So that is why we call it as a statutory due. Now the Caro divided statutory due related reporting requirements into two parts. What are they? Undisputed statutory dues and disputed dues. The Caro divided statutory dues into two parts, undisputed due and disputed statutory due. Sir, what is disputed due? What is undisputed due? Very simple. Disputed due means in income tax, I hope you have some idea about direct taxation. You know, we all know once we file the IT return on a random basis, the department will take up one of the case for scrutiny. Yes or no? If you don't know, I'll just tell you the procedure. Once we file the return, or even without filing the return also, department will take up your case. That is a different thing. But example, I filed the return. Crores of people along with me filed the return. You know, in random selection, my case was selected. They asked me to produce all the bills, books, documents, everything. And the department officer has not convinced with what information I gave in return, what information I provided. He did not convince. He levied additionally 10 lakh rupee tax on. He levied additionally. He passed assessment order. He passed assessment order on me that you have to pay additional 10 lakh rupee for assessment year 18-19. He passed an order on me. Okay, if I pay the tax, no dispute. I did not pay the tax. I went to do CIT appeals. I went to appeals. I went against income tax officer, assessing officer order. I went to his higher authority and filed a case against him. What case? I need not pay, sir. Assessing officer, without giving me reasonable opportunity, without considering the evidence given by me, he passed an order on me. Please grant me relief. I went to the appeals. Now this appeal person, he will listen to you and assessing officer and somehow resolve the case. Okay, now here I filed case against the assessing officer order. No, right now 10 lakhs amount is due. I have to pay. But is it undisputed or is it disputed now? It's a disputed due. Right now it's an undisputed due because the 10 lakhs amount I am not agreeing to pay. I am denying to pay, and now the case is in dispute. Sir, what if sir CIT appeal passed order against you only? He said you have to pay 10 lakhs. I went to do income tax appellate tribunal. Now here also the case is pending. This is also disputed due. You went to do high court, still due. You went to Supreme Court, still it's a disputed due. Until you acknowledge and decided that you will pay, or until Supreme Court said that you have to pay ultimately. Getting it? Until that due we call it as disputed due. We call it as disputed due. Suppose assessing officer passed an order for 10 lakhs. I also convinced, fine, I made a mistake in filing the return. Yeah, my tax liability is additional 10 lakhs is there. I don't want to go for appeal. I want to pay the tax. That's undisputed due. Another example of undisputed due. In fact, this example you can ignore. Main example of undisputed due, the intention of undisputed due in Caro, you all know. You have studied provident fund. Every month company will deduct from employee. Every month company out of its pocket add that money and pay to PF authority every month. Next month 20. Current month due we have to pay by next month 20. Employee state insurance current month due we have to pay by next month 10, 15 or 20. Some date will be there. Profession tax company has to pay every month. Company has to deduct TDS as per income tax provisions and pay every month. Company has to collect GST and pay every month. Every month, irrespective of order of the government tax department, every month voluntarily we have to pay some statutory due, right? We are all paying that without a dispute, right? Without even question of department, without being questioned by department, we are paying voluntarily, no? Those statutory dues, without any dispute, you are paying voluntarily, and those are called as undisputed statutory dues. Those are called as what? Undisputed statutory dues. Okay, sir. Now we understood the meaning of undisputed due and also what is a disputed due. Now tell me, sir, what is the reporting requirement under Caro? What Caro is asking, sir? Caro is asking you to give the following information. The Caro is asking you to give the following information. With respect to disputed due, auditor, please get this information and disclose here. You need not give opinion, Mr. Auditor. What you have to do? Give information. What information? What is the nature of due? What is the nature of due? And what is the amount due? And to which period it relates to? To which period it relates to? Nature of statutory due means act. And fourth one, forum where it is pending. Forum where it is pending. Let us see how Muthoot Finance reported this. They will definitely have, you see, name of the statute, service tax, tax on some foreign related thing. What is the amount in dispute? 17 lakhs. What is the period? 2006-7 related due? Oh my god. Where it is pending? Sestat Bangalore. Forum where the dispute is pending. Where this dispute is going on? Sestat, Central Excise Service Tax Appellate Tribunal. Service tax, income tax. You see, 1463 lakh, 143 subsection 3, demand, assessment year 1011 related. Oh my god. Okay. So see how many? CIT, Kochi, CIT, Commissioner of Income Tax, all that. See. So likewise you have to give. So according to information explanation given to us and as per the records of the company verified by us, the particulars of statutory due as on 31st March 2019 which have not been deposited on account of dispute. We didn't deposit. Why we didn't deposit? We didn't agree, no? That is why the dispute. They passed order. We didn't deposit. That's why there is a dispute. So we have to give this information. Next. Now, sir, okay, sir, disputed due we understood. Now, undisputed due, what auditor has to comment? Only two things, sir. Undisputed due, we just have to tell, is the company regular? Is the company regular? Is the company regular in depositing undisputed due? Is the company regular in depositing undisputed dues? Regular in depositing means what? You know, current month TDS we have to pay by next month 7th. Current month GST we have to pay by next month on or before 20. Current month Provident Fund, ESI, all that you have to pay by next month 2nd or 3rd week. Some due date will be there. If at all we are paying everything within due date, we call it as regular. If at all we are paying after due date, it is not regular. So auditor has to check whether all the statutory dues voluntarily payable by the company, are they paying regularly or not? That is first question Caro is asking you. See, as a shareholder, see, by this time you should have understood how much valuable information auditor is giving us. Auditor is not just talking balance sheet, P&L, true and fair or not. He is talking about whether company is paying taxes on time, whether loans and advances terms are reasonable, whether company maintaining registers for the fixed asset, whether company physically verifying the stock, physically verifying the fixed assets, working capital loans, so many points, so much of insight. Mark my word, Caro 2020 is having approximately 21 clauses and you are in 2022 discussing, listening to this Caro 2022 year you are listening. Okay, maybe for November attempt or May attempt, whatever, or maybe 2023 examination attempt you might be listening this. Mark my word, right now 21 clauses. In future, in the coming 5 years, by 2025, this Caro will even more revised. Caro will revise even more. Even more number of clauses will be added. Even more number of clauses, more number of reporting requirements. Right now there are totally 43 reporting requirements we have under the audit section, report on legal and regulatory requirements section of the audit report. We have 43 reporting requirements under company law. In future it may be more than 60 as the series of scams increases, as the vulnerabilities in the financial system increases, reporting requirement on the auditor increases. As simple as such. So by the way, so whether company is regular or not, you have to report here. Second point, with respect to undisputed due, what auditor has to report? With respect to undisputed due, what auditor has to report? Very simple. Undisputed due, auditor has to report, second point, As on 31st March, you are signing balance sheet on particular date. Now suppose in our example, Muthoot Finance balance sheet date is 31st March. In that balance sheet side, income tax payable some 10 lakhs is a TDS outstanding amount. If this outstanding amount is lying for more than 6 months, if this outstanding amount is lying for more than 6 months, it is not March month liability, it is 6 months before liability, still outstanding. More than 6 months it is outstanding. It's a due liable to be paid 6 months ago. But as on 31st March, it is still outstanding for more than 6 months. As on 31st March, I'm signing on the date, no balance sheet. There is an outstanding tax, outstanding TDS, outstanding statutory due, no dispute still no dispute. But it is outstanding. But is it a fresh due outstanding? No, it's outstanding from more than 6 months as on the last date of the financial year. Please report that long outstanding statutory due in Caro. Dear Mr. Auditor, any such kind of long outstanding statutory due, please report it. I hope you understood. So look at this point. So disputed due. In case of the due which have not been deposited because on account of a dispute, the auditor shall indicate amount involved in the dispute, forum where the dispute is pending, 2 points. But in reality, nature of the due, period to which it belongs, that also we will report customarily. Note point, a mere representation to the concerned department shall not constitute a dispute. Just because you're going to an income tax department for some representational purpose, we will not call it as a dispute. There must be a case against the assessing officer's order. Only then we call it as a dispute. That's it. Next, undisputed due. Is the company regular? Regular means what? Regular means what? Within due date. Within due date. Is the company regular in depositing undisputed statutory due? Undisputed statutory due, I also call it as voluntary payments. Voluntary statutory dues. Voluntarily we pay every month. Voluntary compliance. Okay. Voluntary payments. Whether is the company regular in depositing undisputed statutory due? Okay. With the appropriate authorities. It may be Provident Fund, ESI, income tax, or any other statutory due or GST, whatever. And if not, suppose if the company have not paid some taxes on time, what is the extent of arrears of outstanding statutory due as on the last day of the financial year, which is outstanding for a period more than 6 months from the date they become originally payable, shall be indicated by the auditor. Here also only information you have to give, not opinion. Okay, this entire statutory due point, you just have to give information. Is it regular? And how much is outstanding as on last date for more than 6 months? From the date it became originally payable, please indicate that. Disputed due. What is the nature of the due? Amount, forum where it is pending, period to which it belongs to. That's it. So that's about statutory due point. I hope you understood. Next, discovery of undisclosed income. Discovery of undisclosed income. Discovery. This is generally discovered through search and seizure. Income tax, right? You would have heard, no? You will understand about search and seizure 133, all that in direct tax. Okay, I'm not that expert in that. Okay, just so very simple here. Whether any transactions not recorded in the books of accounts have been surrendered or disclosed as income during the year in the tax assessments under income tax law. If so, whether the previously unrecorded income has been properly recorded in the books of accounts during the year. This is what we call it as prior period items. From accounting language, we can also call it as prior period items. That's what I gave another note. Maybe treated as prior period item in accounting records. Like income tax department have conducted a search or raid company books and all, they verified. They discovered so many incomes that were not recorded in the books in the last 2 years. Now income tax department taxed it. Naturally, you didn't record that income, in accounts also, right, last time. Now is it recorded or not, they're asking. Whether any transactions not recorded in books of accounts have been surrendered, disclosed as income during the year in a tax assessment. If so, whether the previously unrecorded income has been recorded in the books of accounts. Look, it is talking about income point of view. It is talking about income point of view. That's it. So that's about discovery of undisclosed income. Side heading I named it as discovery of undisclosed income. Is it accounted in books of accounts? Simple question. If the income tax department discovered unearthed undisclosed income and taxed it, whether the company recorded that in the books of accounts. So we just have to check it. Next. So that's about the this one. Next, ninth clause. With this ninth clause, I will close this video. In the next video, we will be discussing about the other clauses. Whether the company has defaulted, repayment of borrowings of loans to financial institution, bank, debenture holder, and or government. They are not talking about loans taken from related parties. They are not talking about loans taken from unorganized sector. They are only talking about loans taken from bank, financial institution, debenture holders, and governments. So whether the company defaulted, see, from the Caro report of the auditor, we are able to understand, is our company paying regularly the loans and amount? So this also they are talking about liability only, loans taken by the company. Or we are asking auditor, dear Mr. Auditor, is the company repaying to all the banks regularly? Is the company repaying to all the financial institutions, debenture holders, government regularly? If there is a default, if so, what is the period for which default is made? What is the amount of which default is made? Lender wise, please report, Mr. Auditor, nature of the borrowing, okay, unsecured loan, name of the lender, ICICI Bank, okay, amount not paid on due date, 10 lakhs was not paid on 10th February, whether principal or interest, both, okay, principal 8 lakhs, interest 2 lakhs, delay number of days, 35 days delay, remarks if any, company agreed to repay in the month of May. Simple. If the numbers are higher, no, we create a table. Nature of borrowing, name of the lender, amount of period, all that we will create. So ICICI Bank, we will give like this 1, 2, 3, likewise we will give. That's it. So they are asking lender wise, this entire concept I can simply put it as one-sided heading. Lender wise default you have to clearly mention. Lender wise default. That information auditor has to give. Whether the company has defaulted in repayment of loans or borrowings to a bank, FI, debenture holder, government. If so, lender wise indicate the following details: name of the nature of the loan, name of the lender, period, amount, principal or interest or both, and any other remark, delay and any other remark. Next, B. You, Mr. Auditor, you check the company, bank, and how the relationship of your company with the bank, all that, right? Is our company, I'm a shareholder, is our company declared as a willful defaulter by any bank, FI or other lender? The lenders, did they declare our company as a willful defaulter? Please tell us. If there is so, we will be careful in decision making. Tomorrow, after everything is over, we are coming to know that this company is a willful defaulter. So tell us, is this company was declared as a willful defaulter by any bank or FI or lender? RBI has given a master circular, okay, when a bank will classify a borrower, as a willful defaulter, there are some criteria. Suppose you are having capacity to repay the loan, still you did not repay. You borrowed loan by producing false information and defaulted, you are a willful defaulter. You gave some security and borrowed loan. Without informing the banker, you sold the security. Willful defaulter. Very simple. You borrowed loan using false information or whatever terms and conditions there in the loan agreement. Intentionally, you did not comply. See, because of COVID situation, your business is affected. Really, you are in cash crunch. And naturally, you couldn't repay the bank. You are not a willful defaulter. You are unwillful defaulter. Okay, willful defaulter means what? I have loan, I have money, still I defaulted. Then we will be called as willful defaulter. So Caro is asking, Mr. Auditor, please check the company where you're doing audit. Is it declared as a willful defaulter by any bank or FI? If so, please mention that. Whether the term loan whatever taken by this company, you're doing audit of a company, right? The company has taken some term loan. Whether the term loan were applied for the purpose for which the loans were obtained. The company got a term loan for construction of a factory. Is it applied for the same factory construction? No, sir. It is used for payment of salary. If so, the amount of loan so diverted and the purpose for which it is actually used shall be reported by auditor. Even the purpose for which you raised loan, as per the loan agreement, for that purpose you did not use, you have used it for some other purpose. This is also one of the factor for willful defaulter. This is also one of the factor for willful defaulter. Okay. So the terms loan, whether the terms loan were applied for the purpose for which they were obtained. If not, what is the amount of loan so diverted? This is called diversion of funds. This is called diversion of funds. You need to figure out all this when you're doing audits. You know, loan taken, sir, balance confirmation, vouching. No, not that. Check how much loan taken, where it is received, and what is there in the loan agreement, where it is repaid, the bank balance, where it is routed. Is it routed to the loan agreement cause or not? If not, diversion of funds is there, you have to report it here. You have to report it here. That's how you need to do audit. I don't know many of how many you all are doing audits, right? Private company audits, all that in your articleship. What do you do? First of all, we plan, generally when we are doing articleship, we generally plan for eating. Major, not everyone, but many are like this. Articles audit means vouching. People don't know how to do vouching, first of all. They think vouching means amount matching, ticking and all. No, vouching is a very great job. It gives you lots of information. Through vouching, you can discover internal control systems, all that. It's okay. Anyhow. Next. Whether, another question they're asking regarding loans, regarding 8th point, regarding borrowings. Whether funds raised on short-term basis, have they been utilized for long-term purpose? If yes, nature and amount to be indicated. This is also a type of diversion of fund. Please report it. This case also will come under willful defaulter, purview. Next, another point. Whether the company has taken any funds from any entity or person on account of, means reason why the company has taken, on account of or to meet the obligations of the subsidiary, obligations of the associate, obligations of the joint venture. I taken a loan, not for my purpose, but for my subsidiary, joint venture, associates purpose. I took the loan. Okay. If so, details thereof with the nature of such a transaction and amount in each case I have to report. Suppose, I got loan. How? By pledging shares. Which shares? The shares which are held by me in subsidiary company, in joint venture, associates. Nothing but where my balance sheet item as investments is there, no investment in subsidiary, investment in joint venture. That investment worth of securities, I gave it to a banker and got some loan. Regarding that, whether the company has raised any loans during the year on pledge of securities held in subsidiary, associate, joint venture, means the investments I have in related party, that investment I gave it to a banker as a surety, security, and then got loan. If so, give details and report whether the company has defaulted. So your subsidiary company, you have some shares. That shares you kept to a banker. Dear banker, take the shares as security. These are my shares in the subsidiary company. That's a profitable company. Very good. Give me 10 crores loan, and I defaulted that loan. So I have to report. If I default that loan, what happens? A bank will become the owner for the shares. When bank become owner, they become holding company. Actually, it is not. A bank will become, as a shareholder in fiduciary capacity. The bank will become as a shareholder in a fiduciary capacity. It is not considered as a holding company, subsidiary company. Getting it? That's it. So what is there in this 8th clause, default related clause? First one, if you have taken any loan or borrowing from bank, FI, government or debenture holder, and if you defaulted, you have to give details. And are you declared as a willful defaulter? Give information. Term loans you raised and you used it for some other purpose, diversion, report it. Short term loan used for long term purpose, report it. And you took some loan not for you, but for your subsidiary company, associate company, joint venture company needs, report it. You have some subsidiary, joint venture, associate, right? How they are subsidiary for you? Because you invested in the shares. That shares you went and gave it to the banker as a security and got that loan. Report it. Defaulted. Report it. Simple. That's about the 8th clause of the Caro. That's about the 8th clause of the Caro. 10th clause I will 10, 11, 12, 13, 14, 15. Okay, fine. We'll discuss from 10th clause onwards in the next lecture. Right now, what is your job? Immediately refer 5, 6, 7, 8 and 9. 9, yeah, up to 9th clause. Yeah, up to 9th clause you have to revise. Please kindly immediately after this video give a single reading. That's enough. You know, in examination they may ask you write about reporting requirement for borrowings from banks, FIs under Caro 2020 5 marks. You have to write about the entire 9th point. Entire 9th point. Okay. Or they may ask you write about end use of funds raised in Caro as per Caro requirement. Or they may ask you write about reporting requirement for statutory due. Write about reporting requirement for fixed assets under Caro 2020. Anyway, they can be asked. In May, there is a high possibility to get this question either in MCQ or a direct question, because a new topic applicable for the first time from May 2022 exams onwards. So May and November attempt students, please be careful. That's it. So with this, till now we have completed 9 clauses, almost at the previous video 1 hour, this video 2 hours, more than around 2 hours we spent only on 9 clauses. Still we have another few more clauses, but they are not as lengthy as these clauses. Remaining, I think, to best of my knowledge, 1.5 hour maximum. We will be finishing remaining all clauses. Okay, let's take it as 2 hours, no problem. So total Caro only clauses discussion 4 hours. Out of 43, 21 will be over with Caro. Still you'll be having 22 clauses. So they will take another 1.5 to 2 hours minimum 2 hours it will take. So entire reporting requirement, audit report. Okay, I'll just approximately in this audit report, this pink color highlight you see, that section of the audit report on other legal and regulatory requirement, totally 43 matters. These 43 matters discussion approximately it will take totally 6 hours approximately. Major topic. That's it. Okay, and this 6 hours whatever you spent, minimum guaranteed marks are how much? Minimum 2, maximum 6 marks guaranteed, believe me. That's it. Okay, carry on. Come to the next video. In the previous lecture we discussed up to clause number 9. So now we'll discuss from clause number 10. Mostly in this particular lecture itself, all the clauses we will be completing, because major big clauses we have already completed. Now whatever we are going to discuss are all small clauses. Okay. Now, whether, first point, end use of funds raised. So what is this talking about? So here they are asking whether the money raised in the form of initial or further public offer, means IPO or FPO. You may raise debt instrument, bonds, shares, preference or equity, whatever, doesn't matter. But you raised funds from initial public offer and further public offer. Are they utilized for the purpose for which they were raised? The purpose you can find it in the prospectus. When a company is going for public issue or when a company is going for private placement, the intimation form or the prospectus will contain for what purpose the company is going to raise this money. So here they are asking in Caro, here also it is something about diversion of funds only. Here also something about diversion of funds. In the previous clause, we discussed about a diversion of bank loans. And diversion of bank loan is called as a willful defaulter. If at all you default and you diverted and later on you defaulted repayment of loan, you will be classified as a willful defaulter. So here you are raising money from IPO and FPO, further public offer. Whether that money are you utilizing for the same purpose or have you diverted? So that point they're asking. Second one, suppose if not, means if there is a diversion, of fund, or if there is a delay, if not, the details along with the default. Default means any diversion if there, and a delay means suppose you raised money for utilizing that money within 1 year, but you didn't utilize, so there is a delay by 1 year, so that's called delay. And subsequent rectification. What is subsequent rectification? You raised money for construction of a big factory, some share capital you raised, but temporarily you used it for CSR activities, example. Later on, again when you got back collections from your debtor, you again used it for factory construction. So temporarily though you defaulted, you once again subsequently rectified. Even though you subsequently rectify, even that fact auditor shall be, auditor shall report. Simply speaking, diversion of funds is not tolerated. The moment you raise money, keep it for the same purpose. See here, very important financial lesson you need to listen, learn. Very important financial prudency related lesson you need to learn. Tomorrow when you're doing business, when you are getting some money, never use it even for 1 or 2 days also. Never use it for other than the business purpose. Maybe in that your profit is there, take that profit. You are absolutely having authority to take that profit, but the money whatever you collect, you have to distribute this money to your employees, like owners or suppliers. Never touch that money. Think that it is not your money. Follow most important prudent, this is business practice. The moment you start cross utilizing your personal funds and business funds, you will reach one particular stage where you will not having clarity on what is your own capital, what is business related funds, and sometimes you may default. So please keep this in mind. So if the company has raised any money in IPO or FPO, whether there has been IPO or FPO, whether the company has utilized that money only for the purpose they raised. If not, what is the delay? What is the default? When subsequently rectified, shall be reported. Generally here you will not find any comments in the real audit reports, or everywhere positive comments only. Then next, another one. Now another question they are asking here, whether the company that you're doing audit, it has made any preferential allotment, or it had made any private placement of shares. It may be fully or partly convertible or whatever it is, private placement of shares or debentures simply during the year under review, during the year under audit. If so, the company raised some money out of private placement or preferential allotment. If so, check section 42 provisions have been complied or not. Private placement cannot be made from more than 200 persons. Getting it? So there are some limits. Again, for listed companies, private placement, they need to comply with SEBI regulations, all that. And whatever the amount raised, is it used for the purpose for which they were raised? Even when you're going for private placement offer, you will mention for what purpose you're raising money. Today, many companies are raising under private placement method because it is easy. Like public issue, you will not have that many compliances or formalities. If the private placement provisions are not complied, or if the purpose for which money is raised not utilized properly, the details in respect of amount involved, nature of non-compliance, all that auditor shall explain. Auditor shall report. That's about the 10th clause. I hope you understood. Next, reporting of fraud. Here in the material, your edition 22 student, edition 2022 student, you got this material. Even for edition 1, I gave bridge material. Inside that, not bridge material, I think Caro material is already there in edition 1 as well. In edition 1, Caro 2020 material is there already in audit report part. Here, there is a small rectification. Here you see, I'm just highlighting. This one I'm highlighting, right? This one, whatever I have highlighted, right? That highlighted part, nothing but you just keep a bracket. Please ignore, okay, and substitute with this whether any fraud by the company or any fraud on the company. That's it. please substitute whatever I wrote. Any fraud by the company or any fraud on the company. Simply speaking, by its officers or employees. This word if you strike off also it is same. This word if you strike off it is same. You see, whether any fraud by or on the company, or whether any fraud by the company or any fraud on the company, both are same. Just that officers and employees word, please delete it. That is not there in Caro 2020. Earlier in Caro 2016, the word officer is there. Whether any fraud by the company committed, whether the company has committed any fraud where third party is affected. Okay, by the company means obviously management and employees. Company is an artificial person, right? Who is managing the company? Directors and employees, officers and employees. So they commit a fraud against third party. Or any fraud on the company. Earlier, on the company means company is the aggrieved party. On the company who did fraud. Earlier, only officer or employee scope only covered. Now that word is removed, which means company did a fraud on third parties, covered in Caro. Third party or management or employee committed fraud on the company, against the company. Company is the aggrieved party because of anybody. The scope has been widened. The scope of Caro has been now widened relating to fraud. Any fraud committed by the company, any fraud committed on the company, whoever it is, okay, are they noticed or reported during the year? Ask management. Ask management. Ask management whether frauds noticed or reported during the year. It may be a fraud by the company on third parties or by anybody on the company. So get a management representation. Sir, how should we, do audit procedure here? We have a exclusive questions. We have at the end of this chapter additional questions to be discussed. In that it is already there. So we are discussing about, guidance note on fraud reporting in Caro. So we have a separate exclusive discussion on this, how to report on fraud, especially under Caro. That is already there. If yes, suppose if any frauds are noticed or reported during the year, if the answer is yes, what is the nature of the fraud? What is the amount involved shall be indicated. Very simple. If any frauds are noticed or reported, the nature and amount shall be indicated. Once again, this entire point I will be explaining in the additional questions, okay, regarding the fraud. Even if suppose if at all you are an addition 1 student, it is already explained for you in the videos. Just that remember this. Here, who committed the fraud on the company? Officer, employee? No, anybody. Officer, employee, anybody. Company committed fraud on whom? Third party. So whether any fraud by the company on third parties, on the company by third parties, or employee or officer, everything shall be reported here. What is the manner of reporting the fraud? What is the manner of reporting this fraud? We have a separate question, additional questions to be discussed. There I will be explaining it. There it is covered. Edition 1 students, it is already covered. Even for edition 2 students, in the upcoming videos, it is covered already. Next, 143 subsection 12. This is another subclause. Like this particular subsection I have not yet discussed for you. Edition 22 students. 143 subsection 12, fraud reporting. There is a concept called fraud reporting. What is that? You would have learned in CA Inter this point. Sir, if auditor detected any fraud for more than 1 crore, you know this. In CA Inter you learned this. If any fraud is detected for more than 1 crore by auditor, who identified this? Auditor detected. That fraud shall be reported to central government within 60 days by filing ADT 4 form. You know this? That particular fraud information auditor has to give once again in Caro. Earlier, you will report to central government in ADT 4. That's enough. Caro reporting is not there in 2060. But in 2020 Caro, if auditor identified any fraud which is reported to central government, in that whatever information, please give here also in Caro. That's it. So whether any report under 143 subsection 12 has been filed in Form ADT 4 with the central government. So check it out. Next, in listed companies, it is compulsory that there should be a whistleblower mechanism, whistleblower policy. Accordingly, the companies which are listed, they will be sometimes getting whistleblower complaints, for which the company has to maintain registers. Whistleblower register, whistleblower complaints related registers the company has to maintain. The Caro is putting your responsibility now. Dear Mr. Auditor, have you considered, have you checked, have you verified, have you gone through whistleblower complaints received during the year by the company? This company has received some whistleblower complaints. Have you checked it? Sir, what is a whistleblower complaint? This is an indicator of fraud. This is an indicator of fraud. See, just because somebody complained, that is not necessarily a fraud. It's an indicator of fraud. It's a symptom of fraud. Okay, now suppose if you think this is a risk factor, an indicator, okay, investigate based on this. Suppose you discovered a fraud, and if it is more than 1 crore, report it to central government and report it even on the Caro 2020 report. Simple. So this note point I gave, not required, not required. It's okay, you can ignore. You can completely ignore that note point. Next, Nidhi company. What is it about? Next reporting requirement is Nidhi. Obviously, this reporting requirement is applicable only for Nidhi company. Suppose you are doing audit of a Nidhi company which has to comply with Nidhi rules. Only to them this clause is applicable. For other than Nidhi company, suppose I am doing an audit of a manufacturing company, this point do not apply. I am doing an audit of NBFC which is not a Nidhi. This point do not apply. For whom this point is applicable? Only Nidhi companies. Sir, what is a Nidhi company? All that you would have understood already in company law paper 4 CA final. You have exclusive topic on Nidhi companies. There you would have understood what is a Nidhi company, what are the conditions that a Nidhi company shall comply, all that. And relating to that Nidhi company, the auditor of Nidhi company shall report on clause 12 of Caro 2020. It is there in old Caro also, there in the new Caro also. We all know there are some conditions that a Nidhi company shall comply. What condition? They should maintain net owned funds to deposits ratio of maximum how much? 1:20. What do you mean by that? Suppose if the Nidhi company is having 10 lakhs net owned funds, maximum deposits that Nidhi company can accept is how much? 200 lakhs. From members, how much deposit a Nidhi company can accept? 200 lakhs. Provided net owned funds of the Nidhi company is 10 lakh. Sir, how to calculate net owned funds of the Nidhi company? I explained this topic. You will get this understanding in NBFC audit chapter, which is chapter number 15, which is covered as part of module 2. So Nidhi company Caro reporting requirement, what is net owned funds, all that you will understand as part of module 2. And this particular chapter 15 is not available actually for smart course students. Only for full course students this is available. Look, clause number 12 reporting requirement applies only for Nidhi companies, not for any other company. Now what are they asking here? Whether the Nidhi company has complied with net owned funds to deposits criteria. Okay, that is for every 1 rupee of net owned funds, Nidhi cannot accept more than 20 rupees of deposits from members. Nidhi cannot accept deposits from outsiders. Nidhi can only accept deposits from members of the Nidhi company. Mutual benefit companies, these are actually. And second, there is another point, another condition which Nidhi company has to comply. Nidhi company shall maintain minimum 10% unencumbered term deposit as specified in Nidhi rules to meet out the liability. What is this 10% unencumbered deposit? What is this 10% unencumbered deposit? Suppose what Nidhi company do actually is, they collect deposits from members. Suppose Nidhi company collected 200 lakhs. Out of 200 lakhs, up to 90% only they can give as loan to members. Nidhi company business is collecting deposits from members, giving loan to the member who wants it. How much maximum loan they can give multiplied by 90%, 180 lakhs. You know what? Nidhi company collected 200 lakhs deposit. okay, and gave 180 lakhs loan. 10%, it should be unencumbered. 10% should be unencumbered. As a term deposit, you should maintain 10%. You should always maintain. Whatever total deposits collected, the total deposit shall not be given as a loan. Only 90% they can go. Minimum 10% shall be maintained as a minimum balance within the Nidhi company books. More about this you will understand in Nidhi company rules as per paper 4 company law. Further, whether the Nidhi company has defaulted in payment of interest on deposits or repayment thereof for any period, if so, auditor shall give those details as well. So they're asking 3 questions to report with respect to Nidhi companies. You are the auditor of Nidhi company. Is the company maintain 1:20 net owned funds to deposit ratio? Is the company maintaining 10% unencumbered term deposits? Is the company repaying interest and principal and repayment everything regular? If not, give the details. Simple. So that's about Nidhi company point. I hope you understood thoroughly. Then related party transaction under Caro 2020, which is same as per old Caro. Simply here, auditor has to check whether Companies Act provisions when executing related party transaction, when entering into transactions with related parties, whether company law provisions complied or not, and whether accounting standards disclosure requirement in financial statements complied or not. Simple. Whether all transactions with related party is in compliance with provisions of Companies Act and details have been disclosed in financials as required by applicable accounting standard. It may be Ind AS or it may be a normal accounting standard. Very simple. Is it complied as per accounting is it as per Companies Act, and whether the disclosure is made as per Companies Act requirement? That's it. Very basic question. Then 14th one, internal audit system. In the upcoming videos you will understand what is internal audit. Okay, using the work of internal auditor, we have a standard called SA 610 where the statutory auditor is using the work of internal auditor. Okay, how to use, when to use, that we are going to discuss in the upcoming SA 610 video. So regarding that here, whether the company has an internal audit system commensurate with size and nature of the business. See, many public limited enterprises and listed entities, they are maintaining internal audit system and all properly. But even section 138 of the Companies Act, it is applicable even for private limited companies subject to some criteria. But there are many private limited companies who are not having internal audit function, even though they have, just for a nominal sake, just for name's sake, they are maintaining one internal auditor. Okay, but the company law intention is what? Once internal audit provisions are applicable, the company shall have internal audit department that should commensurate, that should be in proportionate with the size of the company. Suppose if the company is, let us assume 1000 crores turnover company, the company should have internal audit department and should have at least some 3 staff members. Example. See, what do you mean by commensurate? Not defined anywhere. Not defined anywhere. So you need to look at the size of the company, nature of activities, financial transactions volume. Accordingly, how many internal auditors should be there? You need to apply judgment and then comment here. The statutory auditor has to check whether the company has internal audit system that is commensurating with the size and nature of the business. And they're asking you, Mr. Auditor, internal auditors are there? No. They have given internal audit report? No. Whether the report of internal auditor were considered by you, have you considered their report? Have you gone through the report? Yeah, how to go through the internal auditor's report? That is what ACA 610 we are going to discuss in the upcoming videos using the work of internal auditor. That's it. So that's about internal audit. So regarding this is actually newly added in Caro. Earlier it is not there. See, from Caro, through Caro, so much valuable information shareholders are getting. Shareholders are not just understanding whether financials are true and fair. They are understanding from you on 43 different matters. Report on legal and regulatory requirements. 43 different matters shareholders are getting knowledge from auditor. Then next, another question, another clause, another fact, another point where auditor has to report whether the company has entered into any non-cash transaction, nothing but non-monetary. Here non-cash means through bank asset. No, not that. Okay, non-cash means simply speaking money is not involved. Other than money is involved. Whether the company has entered into any non-cash transactions with the directors, if at all there provisions of 192, are they complied or not? Whether provisions of section 192, example, company allotted sweat equity shares to directors. Okay, so you need to check whether provisions of 192 has been complied or not. Is it considered as part of director's remuneration or not? There are so many things. 192 links with many other provisions which you understand in paper 4. So that's it. Next, 16th point. This is again related to NBFC topic, which you will understand once again in chapter 15. But anyhow, I will tell you here. See, you know, there is a criteria based on which whether your business is considered as an NBFC business or not. Suppose 50% or more than 50%. 50% or more than 50% of your total assets or financial assets. 50% of your total income is from financial asset. Just a minute. More than 50% of the income of your company is coming from financial assets. More than 50% of your assets constitute financial assets. What are financial assets? Bank deposits, investments, securities, shares, all that. Debtors is not a financial asset. Okay, good. Debtors, no, not debtors is not a financial asset. Loans and advances is a financial asset. Okay, so where you purchased shares, purchased securities, so we call it as financial assets. What do you mean by financial assets? More in depth you will understand in NBFC chapter. But when a company is liable to register under NBFC law, if 50% or more than 50% of the total assets are financial assets, so 50% of more than 50% of the income of the company is from financial assets, that company must obtain NBFC registration. That company must obtain NBFC registration. Must. It is must. Without obtaining NBFC registration, if it is carrying on NBFC activity, it is a violation of RBI guidelines. That point here Caro is asking, dear auditor, you're auditor for one company. The company is like, as per objects clause of the memorandum, it is involving in the manufacturing activity. But you know, this company balance sheet total assets 100 crore. 60 crore worth of assets or investments in shares, securities, all that, loans and advances. And more than 50% of the income of this company is from financial assets. This company is liable to get registration under NBFC Act as per RBI guidelines. But this company is continuing manufacturing operations without getting NBFC registration, doing NBFC activity majorly. Majorly they are doing NBFC activity without NBFC registration, which is violation of RBI provision. See, whether the company is required to register under 45 IA. If so, whether the registration has been obtained. Is the company liable for registration under NBFC law? If so, check is the registration obtained. Whether company has conducted any NBFC activities without valid certificate of registration from RBI. Is the company conducted any NBFC activity, housing financial activities? Simply both are actually talking same. And see, there are many NBFCs actually. You will understand that in NBFC chapter. NBFCs are two types: deposit taking NBFC, non-deposit taking NBFC. Again, non-deposit taking NBFCs are further classified into systematically core important NBFC, non-systematically core important. So I don't want to confuse you at this moment. Once you come to NBFC, you'll understand that much better. Next, whether the company is a core investment company. What do you mean by core investment company? More than 90% of assets, more than 90% of the assets of this particular NBFC is in the form of shares and securities. Of another body corporate. Then only we call it as a core investment company. Example of core investment company: Tata Sons Private Limited. Tata Sons Private Limited is involved in which business? No business, NBFC. They are just holding company of Tata group of companies. Tata Sons Private Limited, if you take, no, their total balance sheet, no, let's assume 1000 crores, no, more than more than 900 crores. That is in the form of investments only. Not just 50, 90%. If more than 90% of the assets are represented in the form of investment, we call it as a core investment company. We call that company as a core investment company. So what the Caro is asking you here, whether the company is a core investment company as per RBI guidelines. If so, suppose the company that you are auditing is a core investment company, whether it continues to fulfill the criteria for CIC. When a company is called as a core investment company, there is some criteria. Is this company fulfilling the criteria? Suppose this company, Tata Sons, originally obtained CIC license, core investment company license. Now the company is continuing as a core investment company. You need to check, is it complying with the criteria later on also? Okay, last year it's a CIC. Now in the current year also, is it satisfying the criteria for core investment company? Okay, whether it continues to fulfill the criteria. Whether group has more than one CIC. Suppose if that group has more than one core investment company, if yes, how many number of core investment companies are there as part of your group of companies? Once again, whether the company is a core investment company as defined in RBI regulations. If so, whether it continues to fulfill the criteria as a core investment company, and in case the company is an exempted or unregistered CIC, it's a CIC but not registered with RBI, whether it continues to fulfill such criteria, which means core investment company may be registered as an NBFC with RBI, core investment company may not be registered with RBI. Sir, what is registered with RBI, not registered with RBI? Don't worry, you will understand this point much in depth after NBFC audit. Once you read NBFC audit, come back to this and then read. Once you listen to NBFC audit classes, come back and then see, you'll understand beautifully how it is, what it is. I explained very practically in NBFC how many types of NBFCs are there. Core investment means what, core investment systematically important, core investment non-systematic, so many combinations is there. You will understand there all that. Next, 17th point, cash losses. This cash losses point was there in 2011 actually in Caro. Later it is removed, now again brought. So Caro 2020 once again brought back cash losses reporting. So here what are they asking? Whether the company has incurred cash losses in the financial year and in the immediately preceding financial year. If so, in the current year do you have cash loss, or in the last year do you have cash loss? If so, mention the amount of cash loss. So what do you mean by a cash loss? What do you mean by a cash loss? Very simple. In profit and loss account, you'll have a profit figure, right? Either it may be a profit or it may be a loss, whatever it is. No, if it is profit, no. Generally cash loss concept might not come. Yeah, cash loss concept might not come. Suppose if it is a loss, the loss company has got, how the loss is calculated after reducing depreciation, after reducing provisions, all that you will get a loss figure. But provision is a non-cash loss. Provision is a non-cash expenditure. Depreciation is a non-cash expenditure. Ignore these two. How much is the actual cash loss suffered by the company? That you will understand. How much is the actual cash loss suffered by the company? You will get it. So whatever loss is there, for that loss, add back non-cash items debited in P&L. You will derive cash loss figure. So that cash loss figure, if it is there, report it. Suppose originally there is a loss in the P&L. I added back non-cash items. It turns into profit, which means there is no cash loss. There is no cash loss. I hope you understood. This is something similar to unabsorbed depreciation concept in income tax. Fine, it's okay. Don't think too much. Next, that's about the 17th. Next, resignation of auditor. Resignation of auditor. Suppose you are the auditor who is giving the audit report on this company. You are the one preparing Caro, but you are not originally appointed for this company. Some other auditor was there. He resigned. Because he resigned, casual vacancy arised. You were appointed, and now you are giving audit report. Okay, so whether there has been any resignation of the statutory auditor during the year. Yes, I was appointed because our existing auditor resigned. Then this point is applicable. Suppose I am the auditor originally appointed, I didn't resign. I am only giving audit report. This clause itself do not apply. So whether there has been any resignation of stat auditor during the year. If so, whether the auditor has taken into account the issues, objections, concerns raised by outgoing auditor, whoever left in the resignation, have you considered, you accepted, right? Have you considered the issues, the objections, the concerns, whatever? You know, we have in professional ethics chapter, you will understand one point: communication with previous auditor. You know, when a company requested you for appointment, you need to talk with the previous auditor who resigned from the company or who vacated from the company because of whatever the reason. You need to communicate. Get no objection certificate from him. Only then you can accept. Naturally, you will do this process, right? Naturally, if it is resignation, earlier auditor has resigned from the company, what are the issues he faced? What are the objections he raised? What are the concerns that he is having? Are these considered? Have you taken these into account and accepted this audit? Check it out and tell me. So that is what Caro reporting. You know, even if the Caro did not tell this, even if the Caro did not speak about this, we will do this because it is an ethical responsibility. It is a mandatory requirement as per clause number 8 of schedule 1 part 1 of, you know, code of ethics issued by ICI. It is compulsory task. You will understand all this in professional ethics chapter. You will understand this in professional ethics chapter. Next, 19th point, material uncertainty. We have already seen in our previous video SA 570. Like I told in the SA 570 explanation, many auditors are not checking, but now auditors have to consciously check material uncertainty because auditors have to report on this. What is this point? First, let us read and understand. On the basis of, dear Mr. Auditor, check this. On the basis of financial ratios, aging and expected dates of realization of financial assets like debtors and all, and payment of financial liabilities like creditors, other information related to financial statements, and the auditor's knowledge of the board of directors and management plans, you know, management plans, all that, whether the auditor is of the opinion that no material uncertainty exists as on the date of auditor's report, that the company is capable of meeting its liabilities existing at the balance sheet date as and when they fall due within a period of 1 year from balance sheet date. Indirectly, they are asking you, company is performing well, events conditions not identified, SA 570 no symptom identified, still that and all ignore pa. The auditor compute financial ratios for this company, do aging analysis, look at when the financial assets are realized, loans and advances given, debtors, everything, when they will be realized, and when the creditors amounts and all has to be paid by the company, and you know some other information also, that you know what are the directors and management plans for the future of the company. Consider all this. Consider all this. Just a minute. Consider all this, and now tell me whether are you in the opinion that no material uncertainty exists. Go through financial ratios, go through assets and liabilities, realization dates and payable dates. Okay, as on the date of audit report, you are giving audit report somewhere in July, as on that date, look at the balance sheet of the company, you know, take balance sheet date as benchmark date, check all the ratios, everything. Within next 1 year, within a period of next 1 year, is the company having the capability to repay? Is the company having the capability to repay all the dues that are going to fall in the next 1 year from the balance sheet date? Okay, is the company having that capability to repay all that? Okay, even you are signing audit report today, no? Once again today check. Last 2 months back, there is a balance sheet. As on that date, these are the liabilities, these are the assets. Next 1 year after balance sheet date, these are the amounts that company has to pay. Will the company pay without any default? Check it out and tell me. You checked it? No defaults? No material uncertainty? Say that there is no material uncertainty. If you think there is a shortage, cash shortage is possible, report it immediately. report it immediately. You know, many auditors are not doing this as part of standard. See, standard is already there. 570 is already asking you this point already. As part of audit, you need to comply with auditing standard. SA 570 already compelled this. But many auditors are not following whatever said in SA 570. They simply said, no symptoms I found, so I did not apply any procedure. I did not check any ratios and all. No symptoms I found, he said. Very simple. So today, with Caro 2020, from the financial year 21-22 onwards, whether any event or condition or symptom, financial indicators, operating indicators, whether those indicators present or not, doesn't matter. I should have actually linked this point there itself, but because when I'm explaining SA 570 Caro, we have not yet started. I have not linked it. Now I'm linking it. Whether 570 conditions events present or not doesn't matter. Every auditor of every company shall check as on the balance sheet date whatever liabilities that were there which are due in the next 1 year, whether the company can repay or not. When you will check this point, you will check this point on the date of auditor's report. On the date of auditor's report, I will explain you more clearly. Suppose I am doing audit of 21-22. 31st March 2022 is the balance sheet date. Whereas I am signing the audit report today. Let us assume. What is today? Let us assume that today is 10th July. 10th July 2022. I am signing balance sheet as on this date. When I'm preparing the audit report, no, on 10th July I'm preparing audit report, no. I saw Caro this point. On 10th July, Mr. Auditor, tell me, as on 31st March, company has some 10 crore financial liabilities. Whether this 10 crore is due in the next 1 year. Before 31st March 2023, the company has to pay 10 crore. Before 31st March 2023, will this 10 crore, will the company repay? Do company has capability to repay? You see financial ratios, you see other information, you know management plans and future budgets, all that. Based on all that information, do you think this 10 crore will be repaid before 31st March 2023 without any default? You checked it already in April month. That's okay. You checked it at the time, you felt the company will repay. No. Once again, as on 10th July, once again check it. Will the company will repay within next 31st March? Company can repay 10 crores outstanding amount or not? Sir, already 4 crores repaid, sir. By the time I signed audit report, 6 crores only there. Company is having cash balance of 20 crore. Company will definitely repay. No material uncertainty. Give positive comment here. I hope you understood. So that's about material uncertainty point. So irrespective of events, conditions as per SA 570, irrespective of that, you have to check this and report in Caro. Indirectly, the auditors have to try to figure out compulsorily whether any event, condition that cast a significant doubt on going concern, because Caro has made compulsion on the auditor to check that point. As a owner of the business, whatever I have to do, you, Mr. Auditor, has to do. Whether the company, this much amount is there, I have right now in hand, this much liability is there, these are the due dates, can I repay or not? A company has to check. You also have to check and report. Owner's responsibility was given to you. Propriety, as if you are a owner, you need to check this point. Such a big responsibility. I don't know how in reality people are going to do this. I don't know how many will really understand this point. I don't know how really people understand this point. So this and for 570 are interrelated indirectly. Next. So that's about the 19th clause in Caro. Just 2 more clauses. With that, Caro will be completed. CSR fund. Every one of you know that. Section 135 deals with CSR provisions. Every company has to spend certain percentage of profit, average profits, for CSR activities. If any amount is unspent, if the amount is unspent, it has to be transferred to a separate bank account, and from that bank account it has to be spent, as per the guidelines given under CSR rules. relating to that. Whether in respect of other than ongoing projects. If the ongoing project is going on, fund is already allocated, that's okay. Other than ongoing project, whether the company has transferred unspent amount, means amount is liable for spending towards CSR, but we have not yet spent, amount is still idle. So whether the company has transferred unspent amount to a fund specified in Schedule 7 to the Companies Act within a period of 6 months from the expiry of the financial year, it is a compulsory requirement. If any amount of CSR related expenditure is pending, that amount must be transferred to a special fund maintained under Schedule 7 of the company law within 6 months from the end of the financial year. Whether any amount remaining unspent because of ongoing project, has it been transferred to special account in compliance with the provisions with respect to ongoing project, is it spent in a separate account? So with respect to ongoing project, we have to keep it in a separate account. Other than ongoing project, we have to keep it in a separate account. The CSR related provisions also in depth you will understand in paper 4 company law. Next, almost this is third hour where we are discussing only clauses in Caro. Only clauses in Caro. So that's about CSR related one. Then 21st clause. First of all, understand Caro report we have to give only in respect of standalone financial statements. With respect to consolidated financial statements audit report, I told you even when I'm explaining 706 600 that we will give audit report on consolidated financials as well as standalone financials. But inside this audit report, 12th section, report on legal and regulatory requirement, inside that 143 subsection 11 Caro, this will come only for SFS financials. Caro do not apply on consolidated financial statements. First remember this point. Caro report will not be given in the audit report which is given on consolidated financial statements. Suppose I'm preparing audit report on standalone financials. As part of this audit report, Caro report will come into picture. So now they're asking what? Whether there has been any qualifications, adverse remarks by the respective auditors in the Caro report of the companies which are included in the consolidated financial statements, which means this point 21st clause, okay, this is generally applicable. This is generally applicable for holding company auditors. Suppose I'm the auditor of this company and this is a holding company. I'm the auditor of this company and this is the holding company for many companies. And this company, because it's a holding company for many companies, this company prepare two sets of financials, consolidated and standalone. I will give Caro report only in the audit report on standalone financials. Inside that audit report, inside that Caro, I need to give this comment. If yes, indicate details of companies and other paragraph numbers of the Caro report containing qualifications or adverse remarks. So more clearly, let me explain it here. Suppose Tata Sons Private Limited is there. This is having subsidiary companies. Okay, Tata Consultancy, Tata Steel, Tata Power, Tata Beverages, Tata Chemicals likewise. I am Ram, the auditor of Tata Sons Private Limited. I am the auditor for Tata Sons. This Tata Sons prepares a standalone financial statements and consolidated financials. What is consolidated? This entire group. What is standalone? Only this picture. Yes or no? Now tell me, I am giving audit report on standalone financials. I am giving audit report on consolidated financials, both. Now I am giving audit report on standalone financials, right? Here only Caro report also will come. Yes or no? Yes. Whereas in consolidated financials, will Caro report come? No. Okay. Yes sir, Caro report I am giving on standalone. Now inside this Caro report, 21st clause. Who? Ram on Tata Sons standalone financials, related audit report, inside the report on legal and regulatory requirements, inside that Caro related reporting requirements, inside the 21st clause. Inside the 21st clause, under 21st clause, what should I report? Now, this Tata Sons is preparing consolidated financials, right? In this consolidated, many companies were also included, right? Now, these companies will also have standalone financials, yes or no? These companies will also have standalone financials. And on these standalone financials, audit reports were given, yes or no? And in these audit reports, Caro is there, yes or no? In these Caros, auditors would have given some modified opinion, no objections. That objections you have to list out. Such a big, actually it's very simple point. If you understand, very simple. If you don't understand, it's a very crux. It's a very big confusing point. Little more detailed I'll explain. Holding company, subsidiary company. Conceptually I'll explain. I am Mr. Ram, holding company auditor. Mr. X is subsidiary company auditor. Subsidiary company prepared standalone financials. X gave audit report on standalone financials. In this audit report, Caro report is there. Somewhere in clause number 10, Mr. X gave modified opinion. Okay, fine. Now, I am Mr. Ram. This is holding company. This company will prepare consolidated financials and standalone financials. I am giving audit report on standalone financials as well as audit report on consolidated financials. This I am not bothering. I am talking about this audit report. In this audit report, I am giving Caro report. In this Caro report, 21st clause is there. Inside the 21st clause, I should mention about this modified opinion given by subsidiary company auditor in the Caro report. I hope now you understood. Now you see. One second I'll read. That's why you need to read specifically. You know, whenever you're getting a doubt, don't directly come and ask me. Think, read twice, thrice. Okay, try to resolve on your own and then come and ask me a doubt on Telegram. So what are they saying? Whether there have been any qualifications or adverse remarks by respective auditors. Means I am not the auditor. Respective auditors. In the Caro report of the companies which are included in consolidated financial statements. If yes, means which companies are included in consolidated financial? Subsidiary, associate, joint venture. Okay, which companies here? Subsidiary, associate company and joint ventures. So in these audit reports, respective auditors gave some qualification or adverse remark. If so, indicate I am the holding company auditor giving this audit report on standalone financials. Here details of companies and paragraph numbers, report containing qualifications and adverse remarks. So I need to give a schedule here. Typically speaking, I need to give a schedule. Suppose I am the auditor of Tata Sons Private Limited. I am the auditor of holding company. Inside this Caro 21st clause, what should I do? Subsidiary company 1. Mr. X is the auditor. Clause number 10, he gave an objection, so and so. Subsidiary company 2, Mr. Y is the auditor. Clause number 14, he gave so and so objection. Likewise, I need to give a table. That's it. Who should give this? Auditor of holding company. On which audit report? Standalone financial statements related audit report. In audit report, in which section? Report on other legal and regulatory requirements. Inside that, which subsection? Caro. Inside that, under which clause? 21st clause. That's it. So that is what 21st clause is all about. Hope you understood. Finally, what is the reporting requirement under Caro? The reporting under the above matter is mandatory. Obviously, it may be positive or negative. Suppose if the response obtained is negative, if you got negative, please give reasons also. Company has not conducted physical verification at reasonable interval. You qualified. Why they have not conducted? If possible, give reason also. The company has not verified the company has not conducted physical verification at a reasonable interval. What is reasonable interval? You define according to you. Where auditor is unable to give opinion on any specific issue in the 21 clauses, on a particular clause you are unable to give, the report shall indicate such fact. Please indicate that you are unable to comment on that along with reason why you are unable to give that opinion. So that's the reporting requirement. Almost we spent close to 3 hours only on discussing the 21 clauses. Still not yet over. You know, I'm now discussing applicability provision for Caro. Very simple thing. Applicability provision is very simple thing. The Caro is applicable for every company, including a foreign company, and it shall not apply for the following classes of companies: banking company, insurance company, section 8 company, 1% company, small company, and a private limited company which satisfies four conditions. All private limited company which satisfy all the following four conditions. All the conditions, if they satisfy, only Caro is exempted. It is not a subsidiary, not a holding of a public company, which means it's a private company. It is not having holding company which is a public, subsidiary also which is a public. Sir, for a public company, can a private company be a holding company? Yes. Entire Tata group of listed companies, who is the holding company? Tata Sons Private Limited. And the total paid up capital and reserves and surplus shall not exceed 1 crore as on balance sheet date. As on balance sheet date. And you see the conditions is end. Total borrowings from banks and FI shall not exceed 1 crore at any point of time during the financial year. Total borrowings from banks and FIs, all borrowings from all banks and FIs. Okay, so during the at any point of time during the year means what, you know? At any point of time during the year means what, you know? Suppose day 1, bank number 1, I'm having 10 lakhs loan. Bank number 2, I'm having outstanding loan of 9 lakhs. Bank number 3, I'm having outstanding loan of 5 lakhs. Some financial institution, NBFC, I'm having a loan of 4 lakhs. Total 10 plus 9, 20, 19, 5, 24, 28 lakhs. Day 1 means day 1, the total outstanding loan is 28, not exceeding 1 crore. Okay, day 2, some all like this only you have to compute. Day 2, 30 lakhs. Day 3, 27 lakhs. Day 4, some 40 lakhs. Day 5, so likewise I'm going. Day 365, it is still less than 1 crore. In all 365 days, always the loan is less than 1 crore only. Total borrowings is less than 1 crore only. Then only condition 3 is satisfied. Suppose on day 5 you just issued check for overdraft for more than 1 crore. On day 5 alone it is more than 1 crore. Remaining 364 days it is less than 1 crore. Condition failed. If condition failed, for the private company, Caro becomes applicable. Only 4 conditions complied, private companies exempted. 99.99% of the private companies that you see in the market, not 99, I can say 90%, Caro is not applicable because most of the companies are small private companies. Only few private companies will satisfy Caro. See, capital should be more than 1 crore. Private companies capital more than 1 crore. Or at least borrowings must be more than 1 crore. Only then Caro is applicable. Paid up capital and reserves and surplus shall be less than 1 crore on the date of balance sheet. You have to check. Which balance sheet? Preceding year balance? No. You are doing audit of 21-22, then 31st March 2022, that balance sheet. Sir, at any point of time during the year means this year only. And what turnover shall not exceed 10 crore, okay, which is calculated as per schedule 3, including revenue from discontinuing operations during the financial year. So the total turnover of the company shall not exceed 10 crore. For a private limited company, Caro is not applicable if it satisfies the following 4 conditions. Condition 1, not being a holding, not being a subsidiary of a public company, and paid up capital and reserves and surplus shall not exceed 1 crore as on the balance sheet date, and total loans and borrowings from banks and FIs shall not exceed 1 crore at any point of time. Debenture holders is not covered. Turnover shall not exceed 10 crore, which is calculated as per schedule 3, and the turnover shall be computed by considering turnover from discontinuing operations as well. That's it. Now while you are calculating all the above parameters, what are the points to be considered? So what do you mean by paid up capital? It includes both equity and preference. Share application money pending allotment, we will not consider. Calls in arrears, calls in advance, we will not calculate as part of paid up capital. Reserves, it includes all reserves. Even revaluation reserve shall also be taken into consideration. And you know, when you are totaling paid up capital and reserves and surplus, suppose if the profit and loss account is having debit balance, set off and then count. Set off. Suppose I'm having reserves 1 crore, P&L debit balance 20 lakhs, set off 80 lakhs only. So paid up capital plus reserves and P&L debit balance all should be set off. Getting it? Wherever negative balance is set off. Everything is positive balance, total it. After totaling everything, if it is 1 crore, as on balance sheet date exceeding 1 crore, then only Caro applicable. So if there is any excess debit balance of P&L after adjustment to reserve, that such excess shall be net off against paid up capital, which means nothing but paid up capital plus reserves and surplus plus debit balance of P&L, if any, all that should be summed up and see what is the amount. Less than or equal to 1 crore, condition satisfied. More than 1 crore, failed. Private company, Caro applicable. Provisions, they are not reserves. Provision is different, reserve is different. Provisions are excluded because it may be depreciation or diminution, whatever. Provision is not a reserve. Provisions are not considered at all. Then coming to borrowings. Loans taken from banks and FIs only to be considered. Debenture holders shall not be considered. Loan taken from another company shall not be considered. It includes all loans, irrespective of nature. It may be term loan, demand loan, working capital, cash credit, OD, bills discounted, whatever. It may be secured or unsecured, whatever. That limit shall be aggregate borrowing from all banks shall be considered cumulatively, but not each bank wise. The limit shall be considered at any point of time in the entire 365 days. Even on one day, total loans and borrowings from banks and FIs exceeds 1 crore, enough. Condition failed, applicable. Where the company has taken any OD against fixed deposit, gross amount of OD shall only be considered. Like bank, I took one credit card, I swiped, or OD I took 1 crore I used. In the same bank, I have fixed deposit for 50 lakhs. Should I set off? No. Borrowing should be considered gross. Amounts outstanding in respect of credit card shall also be considered. Non-fund based credit facilities, to the extent such facilities have been devolved and have been converted into fund based credit facilities, should also be considered as outstanding. Nothing but guarantee given by the bank, the guarantee was invoked. Okay, non-fund based credit facility. Originally overdraft is a non-fund based facility. The moment I utilized overdraft, it becomes fund based. Suppose if the overdraft, I have overdraft facility for 2 crore, but I have not used a single rupee. Where is the borrowing? Zero. The moment I used overdraft, it becomes fund based facility. Getting it? The figures of outstanding borrowing shall also include amount of bank guarantee issued by the company where such guarantee have been invoked. The moment you gave guarantee to a bank, now the guarantee you have to pay. Bank invoked the guarantee, you have to pay. That's again a borrowing. Suppose you gave a guarantee not yet invoked by the bank. Okay, third party is still paying. On behalf of whom you gave guarantee is still paying. He defaulted, you have to pay. Then only it's a liability for you. And interest accrued but not due. But not due means it's not a borrowing, not a due. No, it shall not be considered as part of borrowing. These items are important for MCQ. By the way, remember all these points, borrowings, reserves, paid up capital, all these points we are discussing with respect to which company? Private limited company. Whether Caro is applicable or not. Next. That's not required. Turnover. What do you mean by turnover? Revenue means aggregate amount of sales affected by the company, including revenue from discontinuing operations. It includes goods, services, any other operating revenue. GST shall be deducted because it is not turnover. It excludes sales return, trade discounts, if any. That's it. And additional points in case of holding and subsidiary. The limits for applicability of Caro should be computed on the basis of standalone financial statements of holding and subsidiary companies separately, but not on the basis of consolidated. The second point, please strike off. Please strike off. Not required. Okay, that's actually wrongly mentioned. Sir, what if company is having branches, and for branches we have appointed separate auditor? So how should Caro limit shall be computed as a whole company point of view. Do you think branch will have separate paid up capital? Stupid. Branch will not have separate capital. Capital will be for the company, but turnover will be there branch wise. Borrowings can be branch wise. When you're checking Caro applicability for a private company, total corporate office plus branches together figures you need to consider. Together figures you need to check and then check applicability. Once applicable, branch auditor shall also give Caro report as part of his audit report, and main auditor shall consider branch audit report, check Caro report and consolidate it with the main audit report and give one audit report. How main auditor will use the work of other auditor we discussed already in SCA 600 while discussing SCA 706. So the limit for the purpose of applicability of Caro, especially for private companies, shall be computed from entire company view, including branches, not with respect to each branch. Once it is applicable to the company as a whole, then each and every branch of the company will be covered under Caro. Therefore, all the branch auditors of the company are also required to report on all the, 21 matters. Please replace 21 matters in their branch audit report of the concerned branch. And main auditor shall consider those points and accordingly prepare main audit report. And in the main audit report of the other matter paragraph, we will clearly mention branch related items we are not responsible. I hope you are able to figure out. With this entire Caro applicability, all the clauses of Caro we thoroughly discussed and understood. We have so many questions as well on Caro. We have so many practical questions in this chapter, audit reporting. Okay, so additional questions, we have some questions. Even in practical questions, we have few questions. Even in question bank, we have few questions. So many were there. Actually, I'm noticing in some Telegram groups and channels that the weightage in audit report and company audit is actually 0 they're mentioning, which is absolutely wrong. In fact, you take standards which is being tested in exam, whether you take December 2021 attempt or July 2021 attempt or January 21 attempt or November 20 attempt or 2019 November attempt, you check any attempt from reporting company or altogether weightage is high. And remember, only if you understand these reporting concepts thoroughly, you can understand standards thoroughly. Otherwise, you can't answer standards that easily. Getting it? And I always tell you, it's not just from exam point of view which you need to prepare. You need to prepare beyond that. And if at all exam paper, whenever exam paper came tough in audit, it is from reporting chapter. Questions majorly asked from reporting topics. These questions were only, in fact, in every question, some or the other way, reporting questions were connected. Only then students felt tough. So please be careful. Don't believe all that. Don't believe whatever is shared on social media. Use your brain. Don't work for marks. Don't work for qualification. Work for knowledge. And I'm telling you, when you work for knowledge, naturally you will beat qualification so easily. So easily. You need to have this kind of understanding. Qualification can only give you entry. It cannot give you growth. What you want is growth in life, not qualification. Understand? So with this, Caro is completely done. So like coming to the section of the audit report, still we are actually discussing how to prepare audit report. No, in this chapter we are actually preparing how to prepare audit report. In this, we started 12th section. Inside the 12th section, we understood there are 43 matters which auditors has to report. Out of the 43 matters, 21 matters, nothing but Caro 2020 we understood. Almost 3 hours it took, more than 3 hours. Still we have how many matters? 22 matters. Still we have 22 more matters which auditor has to report under 12th section of the auditor's report. So what are those 22 matters? That we will be discussing in the next class. The next class I'm going to discuss about those 22 matters. Once we finish all the 22 matters, then we have pending standards like 610, 260, getting it? So that we will be discussing. Then we will be discussing pending topics in 700, pending topic in 705, like we will be reading. Then we will be discussing all the practical questions and illustrations. With that, this chapter will be completed. Company audit reporting chapter segment will be completed. Only until this tough topics are there. Standards onwards, you will feel little easy the topics. Okay, not as tough as this. Of course, I don't think it is tough for you because you're interested. I think you feel very interested with respect to this topic. I hope I created lots of interest in audit. So you think as long, mostly you'll be thinking audit is a boring subject or theory subject. We don't understand anything. We have to mug up. I don't think you need to mug up now. You have to understand the things, thoroughly analyze the things. Naturally you remember. No need to mug up. That's it. Carry on. Come to the next session. So in the previous session, we have completed Caro 2020. All the 21 clauses we discussed. Still, the 12th section in the auditor's report. Which section? Report on legal and regulatory requirement. And I told you there are totally 43 matters which the auditor has to talk about, which the auditor has to give his comment, where the auditor has to give his opinion on these 43 matters, out of which 21 we have completed. Now still 22 more matters left. And within this 22 matters, there are 6 matters, or we can also call it as 6 enquiries, which are discussed under 143 subsection 1, and logic 16 matters, approximately remaining 16 matters. We are now going to discuss it under 143 subsection 3. 16 matters. Actually, if you take 143 subsection 3, it is only 10 matters. But the 10th matter contains 6 subpoints. Inside the 6, fourth point will contain 3 subpoints. Getting it? So typically speaking, 16 plus 1 plus approximately 18 points will be there. 18 matters the auditor has to talk about. But anyhow, 10 matters, 10th matter contains 6 items. So totally 16. You can count it as 15 or 16 items. That's it. Now let's read first 143 subsection 3. So 143 subsection 3. First we'll finish 143 subsection 3 and then we will go to 143 subsection 1. That is enquiries. 143 subsection 3. See here in 143 subsection 3, it is something like a checklist. Just a minute. Let me take audit report as well. Let me take audit reports as well. Example. Reliance Industries Limited, financial year 1920 audit report on I'm taking. Just a minute. So this is the auditor's report. Wait. Yes. Yes. So 143 subsection 3. So what we will do is, first we'll understand the provision in our material, then simultaneously we'll see how the Reliance auditors have commented about the same. So 143 subsection 3, what is it talking about? Duty to report on certain matters. Under 143 subsection 3, auditor has duty to report on certain matters. You know, I call these matters as checklist. I call these matters as checklist. These are checklist. This is a final checklist to the auditor. Or we can also call it as affirmations. We can also call it as affirmations. Affirmation is nothing but an additional confirmation, explicit confirmation by auditor. That is called as affirmation. Explicit confirmation is called as affirmation. So what are they asking here? The auditor's report shall also state where these points have to be stated. In the 12th section of the auditor's report, report on other legal and regulatory requirements. You see here also the Reliance auditors report on other legal and regulatory requirements section in the audit report. First section they spoke about Caro. Second point 143 subsection 3. They are talking about 143 subsection 3 if you observe. So they are talking about 143 subsection 3. So first one they're asking company law is asking you, Mr. Auditor, whether he has sought, means whether the auditor has sought and obtained all the information and explanation which to the best of his knowledge and belief necessary for the purpose of audit. Have you obtained all the information, explanation necessary for the purpose of audit? Dear Mr. Auditor, in the opinion section you gave opinion. In the opinion section of the auditor's report, you gave an opinion that everything is true and fair. And in basis for opinion section, you clearly mentioned that you obtained sufficient appropriate evidence. You already mentioned, but that you mentioned as per standard, because the standard and audit format is like that. You mentioned already. Now here company law is asking you, have you obtained sufficient appropriate evidence? Nothing but have you sought means asked and obtained necessary information and explanation, whatever is necessary for the purpose of audit. Have you got necessary information for the purpose of audit? You will see when you give unqualified opinion here in this A point, you cannot comment otherwise negatively. Yes or no? Here you said, so no, company so and so information company did not give me. You cannot say like that. Why? Because when you give unmodified opinion, it clearly indicates you got all the material evidences, whatever you need. Next. Second question, second point. I mean, now you see what Reliance auditors have commented. What they commented. We have sought and obtained all information and explanation which to the best of our knowledge and belief were necessary for the purpose of audit. Whatever information, explanation necessary for the purpose of audit, we got it. So positive comment they gave. But of course, Reliance auditors gave unmodified opinion. So obviously here they have to give positive comment. Obviously. Then, what is the second point or second affirmation which auditor has to make? Actually, here no, in the second affirmation, there are two sub-points are there actually. First point I'll highlight in blue color. Whether in his opinion, proper books of accounts as required by law have been kept by the company so far as appears from his examination of those books. And that's another point actually. Whether proper returns adequate for the purpose of his audit have been received from branches not visited by him. Look, branch audit is not compulsory. Branch audit is not necessarily to be done by another auditor. Generally in many private sector companies, private limited companies, other than banks, one auditor only will be appointed for entire company. If at all company is maintaining separate accounts for branch, this auditor only will visit the branch and do audit of that branch as well. He will not prepare any separate branch audit report and all, nothing generally. See, first of all, is it compulsory to have branch accounts separately? Is it compulsory that every company should maintain accounts separately for branch? No. Generally, suppose you take Reliance Industries Limited, you take Reliance Fresh, or you take DMart. DMart maintains centralized accounting. DMart is having more than 200 stores across India. 200 stores more than. Only billing will happen. Accounting happens centralized. There is no branch accounts in DMart company. Able to understand? There is no branch account. Okay, so this point, the second branch accounts, branch audit and all do not come into picture. When branch audit concept generally arises, branch is maintaining separate accounts and main auditor, he said, I cannot go and do the branch audit. Or the law says branch audit shall be conducted by separate auditor. Example, for banking company, branches audit is performed by branch auditors. It is not possible for the main auditor to do branch audits. So the law generally makes it mandatory to do audit of branches by separate branch auditors. Now, when branch auditors will be there, because there are branch accounts separately. Understand? Okay, fine. I'll come to that later. First B point. First, what they are asking, whether proper books of accounts as per the law have been kept by the company as far as your examination of those books. You saw the books of accounts. See, we shareholders, we can only see financial statements, but we don't know how the books of accounts are like. Have you seen books of accounts? Are they kept as per the requirement of the law? They are asking. Are they kept as per the requirement of the law? So that is what they are asking. And now, actually, now we know, there is a section called 128. Now in 128, they have added one more condition. 128 section has been modified. 128 talks about books of accounts under company law. 128, they amended, making it compulsory from the financial year 22-23 onwards. From the financial year 22-23 onwards, the books of accounts which are maintained in electronic format must have, the software must have the feature called audit trial. The software must have a feature called audit trial. Audit trial is nothing but it's a logbook. Once transaction is entered in books of accounts, suppose if it is modified later, in that logbook, so and so transaction entered by Mr. X, accountant. Later it was modified by Mr. Y, finance manager. Modification was on so and so date, that is version 2. Version 1 means original transaction when it is recorded. Version 2 means updated. Version 3, version 4. So when accounts are modified, no auditor can understand, okay, originally at this amount on this date with this narration it is recorded. Version 2, later narration modified like this, date modified like this, amount is modified like this. Version 3, why it was modified I can understand. Why it was modified I can understand. Are you getting it? So it is more better method for discovering frauds. It is even more better method for discovering the frauds. So whether in your opinion books of accounts required by law, are they kept in the proper manner so far as your examination is concerned? First point. So you see Reliance auditors have commented positively. Now you see second part of this, have you received proper returns adequate for the purpose of the audit have been received from branches? You know, the company has maintained some accounts at branches and there is no branch auditor also for that accounts. Have you received summary returns of the branch? Have you received summary return of the branch? When you are doing audit of the company, have you received the branches not visited by you, those summary data, financial data? They're asking. You see Reliance Industries, they don't have any branch accounts separately. So they did not comment on that point. They did not comment. You see here, B point. They only spoke about proper books of accounts as required by law have been kept by the company as far as examination is concerned. And proper returns adequate for the purpose of audit were not, that and all they didn't comment. Why? You will not find branch accounts anywhere nowadays. In this centralized, in this electronic world, in this internet world, you will not find branch accounts separately. Today entire accounting is integrated, centralized. From anywhere you can pass an entry. QuickBooks. Over the internet you can pass books of accounts. Through an Android application you can pass accounting entry. Today by passing one accounting entry, journal entry, entire books of accounts are being prepared automatically. Next. C point. Whether the report on accounts of any branch, whether the report on the accounts of any branch office of the company audited by a person other than company auditor, that is branch auditor, has been sent to the company auditor, and how company auditor dealt with while preparing the report. Him means company auditor. He also here means company auditor. So this point is applicable generally for banking companies. What is this point is dealing about? Suppose you are the auditor for whole company. For some branches, branch accounts were maintained there and company has appointed separate auditors. Company has appointed separate auditors for that branch. Okay, fine, let it be. I told you SA 706, SA 600 when I'm reading, when I'm explaining it, I told you. When branch audit is conducted by somebody, we know that his audit report, he will prepare audit report on the branch. Based on the branch balance sheet, based on the branch P&L, based on the branch books of accounts, he will prepare branch audit report. But that audit report, we will not give it to public, because for the public, they don't want to know branch audit figure. They don't want to know branch affairs. The public want to know, shareholders want to know, everybody want to know overall picture of the company, standalone financial statements, overall picture, consolidated picture of all the branches and head office together. They want audit report on the overall company. So they want my audit report. But tell me, in SA 600 also I told you, in order to give my main audit report as a whole company financials, which includes financial amounts of branches as well, which are not audited by me, which are audited by another auditor. In that case, what should I do as per SA 600? First, I should get his audit report. Yeah, he said branch accounts are true and fair. And those branch accounts are already as part of the main financial statements, and remaining financial statement item I audited. Branch amounts he audited. They are true and fair. Mine are true and fair. So overall, I give true and fair opinion. In other matter paragraph of my audit report, I mentioned that branch accounts were audited by somebody else. I clearly mentioned that. So here they're asking your confirmation, dear Mr. Auditor, for the company there were branch auditors. You are giving audit report on overall company, right? This audit report, Reliance audit report we are reading, this is overall audit report on the overall financials. Within this financial statement, some financial information audited by some other auditor, right? Have you received that report? Have you considered it? When you're preparing this overall report, they're asking you. If you forget, it's a reminder. Have you considered branch audit report while preparing your overall audit report? Look, we as a shareholder get only your overall audit report. We don't know what is happening in the branch audit. You know it, right? Have you considered it? Have you considered impact of the branch auditor's report when you are preparing your overall audit report? So, whether the report on accounts of any branch office audited by other than company auditor, that is branch auditor, has been sent to you, and how he was dealing with while preparing his books of accounts. Just a minute. Yeah, sorry for the disturbance, interruption. Yeah. So, have you received branch auditor report? And have you considered this branch audit report when you are preparing overall audit report? That is what this point is asking you. You see, in Reliance audit report, there is no branch audit concept itself. So that point itself is skipped. There's no branch auditor in Reliance company. Entire Reliance company maintaining centralized accounting, no separate branch account. So they have centralized accounting. Main auditor is enough. You take State Bank of India, you take branch accounts are there, branch auditors are there separately. Understand? I hope now you're able to connect more with respect to the concept of branch audit report, branch accounts, all that. But still, in company audit, we kept that question pending. Branch audit related question we kept pending, and I told you that as part of audit reporting, I will continue all those concepts. So once I come to branch audit, branch accounts, I will explain you even more detail there by connecting, integrating all 706, 600, all these points. I will integrate and explain you that. Next, what is the next reporting requirement they're asking? Dear Mr. Auditor, whether the company balance sheet and P&L are, that are dealing with this report, you are giving audit report, no, whether the audit report given by you, the company balance sheet P&L, are they in agreement with the books of accounts and returns? Returns means branch returns, branch related returns. So whether the balance sheet P&L, whether the financial statements that you signed, are they matching with books of accounts? They are asking you. Same question, only repetition. Getting it? B point, they are asking whether company maintained proper books of accounts, and you are giving opinion as a whole on financials. Indirectly, they are asking whether accounts are proper or not. Here in D point, once again they are asking books of accounts, financials, are they matching? Next, whether in his opinion financial statement comply with accounting standard. They are asking you one more specific question. Have you checked all the accounting standards? See, indirectly, by asking your comment here, indirectly company law put a responsibility on you. Company law is asking you, Mr. Auditor, you need to check whether financials are satisfying with accounting standards. Why? Section 129 subsection 1. Every company shall prepare financial statements as per Schedule 3 accounting standard, and they must be true and fair. They must be true and fair. This is what the preparation of financial statements, accounting standards must be complied. So 143 subsection 3 is asking the auditor whether the company financial statements comply with accounting standards applicable. Next, dear Mr. Auditor, do you have any observations? Do you have any comments with respect to some transactions, with respect to some matters which have any adverse effect on the functioning of the company? Do you have anything to say regarding some transaction or some matter which is bringing negative things to the company, which is negative for the company, which is bringing adverse remarks to the company? Do you have anything to say like that? Suppose example, during the year, company has accepted one project which is not a government project also. Some out of, some relationship they have with the other person, they accepted, which is actually bringing huge loss. They know, in spite of knowing that it is bringing loss, they accepted. Is there any reason behind accepting a loss-making project? No reason. No reason was there. Just out of personal interest of one of the director, this project was accepted. Report this. Report this. See, indirectly here, they are putting you a ownership responsibility, or onerous responsibility kind of. So that is about F point. Next, G. Now you see here, by the way, Reliance audit report will simultaneously. What they are saying, the balance sheet, statement of P&L, all these are in agreement with books of accounts. In our opinion, the above standalone financial statements comply with accounting standards. So that's it. So they gave positive comment. Next, G. Whether any director is disqualified from being appointed as a director under 164 subsection 2. Dear Mr. Auditor, there are some 14 directors in Reliance company. Is there any director who is actually disqualified but still continuing as a director? Whether any director is disqualified from being appointed as a director. So he is actually not eligible to become a director. He is actually disqualified. Is there any director in this company who is disqualified? They are asking you. They are asking you. So here auditor has to again check, is there any person who is acting as a director who is not validly appointed, who is actually disqualified? Auditor has to check. But you know, director disqualification is not something that we can check directly, because director disqualifications depends upon certain other acts by the director in some other companies. If a director did something in some other company, is disqualified until that fact is revealed in public. We don't know that this fellow is disqualified. So whether a director is disqualified or not, we cannot check completely. That's why what we do, you know, we will take a declaration from the director. We will take a self-declaration from the director. Dear director, I'm the auditor. I have to give report in G point in audit report that whether is there any director who is disqualified. So these are the disqualifications reasons under Companies Act. Please read each of you. I will give disqualification list to all the 14 directors. Please read each of you all the disqualifications and tell me whether any of the disqualification applicable for you. Directors, all of them said, no sir, no disqualification is applicable to me. Okay, give me a written declaration. They gave written declaration that none of them are disqualified. You see Reliance auditors how they commented? On the basis of written representation received from the directors. On the basis of written representation received from the director. On the basis of declaration by the director. I did not verify. He gave a declaration. Based on that, none of the directors are disqualified. I did not confirm that they are disqualified or qualified. Based on their declaration, I am believing they are not disqualified. Able to understand, I hope. Here, whether a director is qualified or disqualified, I can't check completely. All the disqualifications I cannot check. So I have to believe upon his words. Are you disqualified? He said no. Give me a declaration. He said I am not disqualified. We are just copy pasting. On the basis of written representation received from the directors, none of the directors are disqualified. That's it. Next, H point. Again, actually H point is like a repetition. H point is like a repetition to the B point part 1. B point part 1. What is B point part 1? Whether proper books of accounts have whatever required by law have been kept by the company as far as your examination is concerned. Whether in your opinion proper books were kept by the company, they're asking. In H point they're asking what? Do you have any qualification? Do you have any reservation? Do you have any adverse remark relating to maintenance of accounts and other matters connected therewith? B point they're asking, are books of accounts proper? H point they're asking, do you have any problem with books of accounts? Both are same now. Are you fine? I'm asking a question, are you fine? Second way, are you not fine? Both are same, no? The answer what I'm going to get is same, right? Sometimes this kind of mistakes happen, and you know why this kind of mistake happened? I'll tell you. This mistake happened while we are translating Companies Act 1956 to 2013. In 2014, this mistake happened. In Old Companies Act 143, in Old Companies Act, there is a section called 227. Inside that, there are 6 to 7 matters to be reported. But now in 140, in New Companies Act, the same section is 143 subsection 3. In Old Companies Act, it is 227 subsection 3, if I remember correctly. As per that, there are only 6 or 7 matters. Whereas in 143 subsection 3, they were copy pasted. Additionally, they have added few more points. By, you know, see, do you think all these 10 points are recommended by one fellow in the parliament? Do you think all these 10 points are recommended by one lawmaker? I told you there is an inconsistency in law while making. In company audit chapter also I spoke about that mistake. So one fellow said in the B point, hey, auditor has to check, auditor has to tell whether books of accounts are proper. Somebody have recommended, hey, whether is there any problem with the books of accounts? Do you have any remarks? Do you have any qualification, reservation with respect to maintenance of accounts and other matters connected therewith? Logically speaking, both are asking the same way, directly or indirectly. And next, Next, what they're asking, whether the company has adequate internal financial control with respect to financial statements in place and are operating effectiveness of such controls. They're asking you whether the company has adequate internal financial controls with respect to financial statements in place and how they are operating effectively. So whether company has IFC and how they are operating effectively. So generally, auditors will give as a separate report. Annexure 2 for listed entities, we have to give a separate IFC report. So like a separate audit report, like how we are giving audit report, in the same size we will give IFC related report. So more about IFC, we have a separate question, exclusive question, there I will discuss. With respect to IFC, we have additional questions to be discussed at the end of this chapter. There I will discuss more in depth about IFC. Next. And such other matters as may be prescribed. So the last point of 143 subsection 3 is such other matters as may be prescribed. Accordingly, rule number 11 of the company auditors rules prescribed some matters to be included. So the auditor report shall include their views and comments on the following matters. Totally how many were included? 6 items. Totally 6 items were included. In the fourth item, there are totally 3 points. In the fourth item, there are totally 3 points. Okay. So J point, whether the company has disclosed the impact of pending litigations on the financial position in the financial statements. Company generally will have so many pending litigations, right? What is its impact on the financial position of the company? Is it disclosed? Nothing, but they are simply asking whether company has disclosed all the contingent liabilities. Whether impact of pending litigations, is it properly disclosed in the financial statements, they're asking. Obviously, see how Reliance auditors have commented this. How Reliance, you see, the company has commented the impact of pending litigations on the financial position in the note number 34. If you go note number 34, it talks about contingencies, all that. Simple. Then second point, whether the company has made provision as required under any law or accounting standard for material forcible losses on long-term contract including derivative contract. Whether the company has made provision as required by law or as required by accounting standard for all material foreseeable losses, it may be a long-term contract or derivative, whatever. Simply they're asking, as part of prudence, as part of accounting standard requirement, or as part of legal requirement, company has to create some provisions. Whether company created all the provisions. So again they're asking here something similar to Ind AS 37 requirement or accounting standard 29 requirement. Here also they are asking something accounting standard 29 requirement. Provisions, contingencies. So they're asking here whether company disclosed all contingent liabilities. Second point, they're asking whether company created provision for all possible material forcible losses. Simple. Next, third point, they're asking whether there has been any delay in transferring amounts which are required to be transferred to IEPF, Investor Education Protection Fund. Company has to transfer some funds to IEPF. Example, company, once dividend is declared, within 30 days we have to pay. If at all we did not pay within 30 days, from that particular day, within few days we have to transfer it to unpaid dividend account. If that amount is lying in unpaid dividend account for 7 years, after the end of 7 years, the company has to transfer that unpaid dividend from the unpaid dividend account to IEPF. Getting the point? So once 7 years is over, there is a time limit within which we have to transfer to IEPF. Whether the amount is transferred to IEPF or not is what they're asking. Whether there has been any delay in transferring amounts to IEPF by the company. You see Reliance auditors comment? First of all, the company has made provisions as required by law or accounting standard, positive. There has been no delay in transferring amounts to the Investor Education Fund except 1.63 crore which are held in abeyance due to pending cases. Except some 1 crore, 1.6 crore, rest all other transferred. Why 1.6 crore is not transferred? Because of some pending litigation. Because of some pending litigations. Next. See, this fourth point is newly added. is newly added because of notification came in March 2021. Okay, for the first time, this is applicable from December 2021 attempt onwards. Of course, May 2022, November, and all other subsequent attempts, these are applicable. But first time this was came in December attempt. That time I already uploaded amendments, plus all these points already covered. Okay, but once again, I'm doing fresh videos, right? So for you, I'm giving it here. So fourth point and fifth point, sixth point, they were newly added. They were newly added. So nothing but the newly added amendments. So what I'll do is, anyhow, since it is an amendment, since this is an amendment newly added, I'll do record it as a separate video. I'll do record it as a separate video. Okay, as a continuation to this video. So I'll put it as a separate video. So that you can just watch this alone later on if at all you want it again, because it's an amendment, newly added provision, anti-money laundering, anti-terrorism financing. With that objective, these were added. Of course, diversion of funds. Simply speaking, to eliminate diversion of funds or to eliminate money laundering, to eliminate to eliminate terrorism financing, the various objectives. See, what is the reason behind a particular provision? Unless government tells, whoever introduces this provision, unless he tells us, we can't predict it. But based on the existing scenarios that are prevailing around, we have to give some suitable logic to it. That's it. So this 4, 5, 6, I will explain it in the next video. So in the next video itself, I will cover 143 subsection 1 as well, where 6 inquiries are there. So that entire report on other legal and regulatory requirements section, 43 matters we will complete. That's it. I hope still you're able to enjoy. So this is a short duration lecture, roughly some 30-32 minutes. Okay, it's okay, no problem. So come to the next lecture. So let's continue here. The fourth point in the J point, yes or no? Like we are discussing 143 subsection 3 checklist, 143 subsection 3 checklist. So I just told you that in the last one, the 4, 5, 6 were newly added subclauses where auditor has to report on. So in that, the fourth one we are discussing, because these are newly added. So I'm recording it as a separate file. That's it. Now, so what that auditor has to report here? First, let's read what auditor has to report. Before we discuss about reporting, first let's read what is given here. And I told you this fourth clause is added. This fourth clause is added to avoid benami transactions, or to avoid money laundering, or to avoid terrorism funding, terrorism financing. There's so many objectives. Till date, the guidance note have not yet, there is no guidance note has been released on these points yet to understand exactly what is the true intention behind this. It is just added. But I can relate this particular case with Yes Bank case, where the Yes Bank CEO has faced allegation that he diverted some of the bank funds to some personal accounts, to some accounts through which he will get investment in his entities. So I think I can relate that case also here. So simple, as the new frauds are increasing, the auditor observatory points will also increase, reporting points will also increase. We have seen in Caro, I think 19th clause of the Caro, material uncertainty point. Material uncertainty point. Earlier, auditor is to bother about material uncertainty only when event or condition is identified as per SF 570. But now, irrespective of all that, you need to do a due diligence. As part of the audit, you need to do some due diligence. What you need to do? As on 31st March, whatever assets and liabilities were there based on the ratios, and when you are giving audit report on the date, once again check back whether the company can repay all the debts or not within the next 1 year, whatever is becoming due. Do the company have potential? Look at the management plans, look at the management budgets, all that. Based on all that, do you feel company can repay? So indirectly they're asking you whether company can be, whether company is solvent or insolvent. They're asking you. Fine. Anyhow, so come to this. So what the auditor has to report it here? What the auditor has to report here? Whether the management has represented that. First, let me read the entire para, then we will decode the para. Whether the management has represented that to the best of its knowledge and belief, other than as disclosed in notes, no funds have been advanced, loaned or invested by the company or in any other person or entities, including foreign entity with understanding, whether recorded in writing or otherwise, that the intermediary, whether directly or indirectly, lend, invest in any other person or entities identified by the manner whatsoever on behalf of the company, the whom we call them as ultimate beneficiaries, or provide any guarantee, security or like on behalf of the ultimate beneficiary. Sir, what is this? We are unable to understand. Fine. So let's take the example. Let's take an example. So let's put it as a diagram. Let's put it as a diagram here. So what is the saying? Whether management has represented that. Whether management has represented that. Ignore that. That's about a representation. To the best of its knowledge and belief. That is also not part of main provision. No funds have been transferred. It is nothing but no funds have been transferred, advanced, loaned or investment. In an investment, in an advance or a loan, what happens? Fund will transfer. So let us call it as fund transfer. For the time being, let's call it as fund transfer. No funds have been transferred by the company. This company means what? We are doing the audit. To or in any other person. To means loan or advance. In any other person means it is used in the context of investment. No funds have been invested by the company in any other person. No funds have been transferred by the company. No loan has been transferred by the company to any other company. The word to and in, when to is used, when in is used. In the word in is used for investment. The word to is used for loan. Let me do one thing. I'll highlight it with a different color. Okay, I'll highlight it with a different color. You see here, advanced or loaned, the word to is used. Getting it? Invested, the word in is used. I hope you are now getting clarity. The word in is used. So now you check. No funds have been transferred. No funds have been transferred. No funds have been advanced or loaned to any other person or entity. No funds have been invested in any other person or entity. I hope now you understand. Getting it? Simply speaking, no funds have been, here you assume it as transferred. No funds have been transferred to any other person or entity. It may be a foreign entity. Okay, no funds have been transferred. They're asking what here? Suppose I am doing audit of Reliance Industries Limited. They made a fund transfer. They made a fund transfer to an entity. It may be a foreign entity, whatever. It may be a foreign entity. They transferred funds. Example, 1000 crore they transferred. Example, they transferred some 1000 crore. Now, so intermediary with an understanding. So that particular other person or entity, we call this person as what? We call this person as what? Intermediary. We call this person as intermediary. Intermediary means they're just a mediator. They are not the final party for whom we are giving the fund. So our company has made a fund transfer. In what form? They may call it as advance, they may call it as loan, they may call it as investment. They may call it as investment. So the company has made an advance, loan or fund transfer to an entity or person, including a foreign entity, which is called as intermediary, with an understanding. With an understanding means nothing but with a condition, with an understanding. You see here, with an understanding. It may be a condition in writing, or it may be otherwise. It may be a oral understanding, or it may be a written. There may be an MOU written that intermediary shall. So with an understanding, it may be in writing or oral, anyhow. Now what intermediary has to do now? That this intermediary in turn, what they have to do? See, that the intermediary shall, whether directly or indirectly, lend, invest in any other person So again they need to do a transfer of funds. Again they need to do a transfer of funds. It may be in the form of loan, it may be in the form of investment. It may be in the form of loan or it may be in the form of investment. Other person or entity identified, other person, which entity here? There is another entity. There is another entity. We call him as ultimate beneficiary. We call this entity as ultimate beneficiary. This company can directly transfer, but the company is not directly transferring. The company is routing through an intermediary. This may be a hawala operation also. This may be a kind of hawala operation as well. Anything can happen. It may be in the form of hawala. Hawala means what? We give money to one mediator and he will go and give the money to somebody else. Getting it? I am giving money to this fellow hawala operator not for the purpose of his enjoyment. I will give him with an understanding that he will give to somebody. This is also a hawala route. Hawala is famous for money laundering, terrorism financing, all that. So that is why I started this provision with an explanation that all that. Fine. So ultimate beneficiary identified by or on behalf of the company. So this company identified. This company told who is ultimate beneficiary. Thus this company was told who is ultimate beneficiary. Okay. So now what is happening? Reliance Industries Limited transferred some funds, example, to some intermediary with a condition that that intermediary shall directly or indirectly lend or invest in any other person identified by the company on behalf of the company. Are you getting it? So identified by this company. So this intermediary shall transfer funds to this beneficiary. On whose behalf the intermediary transfer? Intermediary will transfer on Reliance company behalf. So I give funds to my agent will go and give funds to somebody on behalf of the principal. Or I will give money to this intermediary. This intermediary will not give loan, will not give an investment. He will give a guarantee. He will give a security, surety to the ultimate beneficiary. It may be a lending or investment, or it may be a guarantee or security. Are there any of these incidents happened in the company which are not disclosed in notes to accounts? They are asking you, Mr. Auditor. They are asking you, dear auditor, is there any of this kind of transaction happened? Obviously, so many transactions will happen this kind in day-to-day life of the company, big companies. But every transaction is generally disclosed in books, disclosed in financials. Is there any this kind of transaction that is not disclosed in notes to accounts? That is what the starting sentence now got emphasis. Other than disclosed in notes of the book transaction, of the book transactions, we call it as, of the financial statements transactions. It's not off the balance sheet item. It's not off the balance sheet. Contingent liability is an off the balance sheet item. That is different. I'm talking about unrecorded items, unrecorded transactions. Getting it? So here, or the transaction might have been recorded, but that transaction is not disclosed in the notes. So now once again let me read this. I hope now you understand. Now you understood the point. Now you see here, I think this question was asked in the December exam. I think so it is asked. Now once again let's look at, okay, whether the management has represented. Indirectly they are asking you, take management declaration. Take management declaration. Dear Mr. Auditor, take a declaration. What declaration? What that declaration should contain? Declaration should contain, management should declare that to the best of their knowledge and belief, no funds have been advanced, loaned or invested either from borrowed funds or share premium or any other source. You may have the fund from any source, but you didn't advance, you didn't loan, you didn't invest. Okay, so no funds have been advanced, loaned or invested by the company to any other person, invested by the company in any other person or entities. It may be a foreign entity, Okay, we call them as intermediary. Now we are giving funds to them, right, in the form of loan or in the form of advance or in the form of whatever investment, whatever the way we are giving fund to them. We are giving fund to them. Actually, how did we got the fund? We may have got the fund in any format. We might have got, we have got these funds because of the loans or because of the share premium or any source, whatever, doesn't matter. For us, what is the source doesn't matter. I gave funds to an intermediary. What? With an understanding that the intermediary directly or indirectly lend, invest in another person, another entity identified in any manner whatsoever by or on behalf of the company. Our company will identify whom this intermediary shall transfer. Getting it? So whatsoever manner I may identify, but I will identify the original funding party. We actually call this company as a funding party. The original, suppose if Reliance is giving amount to intermediary, intermediary is giving to beneficiary. So here three parties are involved. Funding party is involved, intermediary is involved, beneficiary is involved. So whether the funding party transferred funds to intermediary with an understanding that that intermediary directly or indirectly transfer funds to the ultimate beneficiary, or intermediary will provide guarantee, security or like on behalf of the ultimate beneficiary to somebody. I hope you're getting simple. Now let me replace this example with slight even more simpler example with technical names. So funding party, intermediary and ultimate beneficiary. Whether the funding party has transferred, the funding party has fund transferred, the fund transfer may be advance or loan or investment, with an understanding that intermediary will loan or invest, we will lend or invest in the ultimate beneficiary, or another one, the funding party will fund transfer, it may be in the form of loan or advance or investment, okay, to whom? Intermediary. Now intermediary will provide guarantee or security on behalf of ultimate beneficiary to some third party. So ultimate beneficiary is ultimately getting either fund or indirect fund. Here they are getting direct indebtedness. Here they are getting indirect support. That's it. So whether any of these transactions happened in the company, but they were not, other than they were not disclosed in the notes, they were not disclosed. Is there any this kind of transaction? You asked management, you did your due diligence, you found no, nothing. There is no such kind of transaction which is not recorded. Every transaction, whatever happened, is disclosed honestly. Get a written declaration. Get a written declaration that there is no such kind of transaction which is not recorded. See, there can be a transaction like this, but if this is not recorded only, the problem is. If this is not disclosed in the notes only, the problem is. If it is disclosed, everything is honestly disclosed. The board of directors said, dear auditor, we disclosed all these kinds of transactions. You mean to say all these transactions are disclosed? Yes. Okay, give me a declaration. That is what this point is about. That is what this point. So here we are the auditor of the funding party. In the first point, we are the auditor of the funding party. Sometimes you may not be the funding party. You are acting as an intermediary. Now for intermediary, as an intermediary, you would have received some amount from funding party with an understanding that you have to lend or invest in ultimate beneficiary identified by the intermediary party. That is what the second point. Okay, if now just first point is asking, get a management declaration that it did not act as a funding party, or it might have acted as a funding party, transferred funds to intermediary, intermediary transferred to beneficiary, but everything is disclosed. There is no undisclosed item. Get a declaration. Second point also, get a declaration that other than disclosed in notes, there is no other transaction. Get a declaration that other than disclosed in notes, there is no other undisclosed item. Here, what declaration? No funds have been received. There you have see, no funds have been advanced, loaned or invested. Here they have received by our company from any person or entity, including foreign entity. We call them as funding parties now. Earlier, we are transferring funds to another person or entity or foreign entity which is intermediary. Now we are receiving that money. We may be anything. The other person, whoever is giving us, that may be any person. So funding party is giving. You received money from funding party with an understanding that the company, our company, shall directly or indirectly lend or invest in other person or entities identified by funding party. Who are that other persons? Ultimate beneficiaries, or provide any guarantee or security or like on behalf of the ultimate beneficiary. So in the first case, in the case one, you are, our company is funding party. So they are asking whether funding party transfer funds to intermediary. Intermediary will again transfer the funds to ultimate beneficiary or give guarantee on behalf of ultimate beneficiary to somebody else. And these transactions are recorded and disclosed in the financial statements. If the, give me a declaration that there is no transaction which is not disclosed, which is omitted from disclosure. That's one. Now, second 4 subclause 2, it is talking about intermediary. You are the auditor of intermediary. Whether have you received any money from the funding party with an understanding that you need to transfer to ultimate beneficiary or give a guarantee on behalf of the ultimate beneficiary? And if so, all these are disclosed. Check it out. Yes, disclosed. Is there anything which is not disclosed? No, there is nothing. Everything is disclosed. No omission. Get a declaration that no omissions made. Get a declaration that no omissions made. Even with respect to intermediary also, get a declaration that in the intermediary's balance sheet, P&L, financial statements, notes to accounts, nothing has been hidden. That's it. Hope you are able to understand. Almost took more than 15 minutes to decode the definitions. So any complicated sentence, if you break and read, for me to understand this, it took approximately 4 to 5 readings. 4 to 5 readings it took approximately. That too because I'm having little exposure to all that Hawala transaction, all that. So it took for me to decode this entire thing in 4 to 5 readings probably. Sometimes even you can do this. Maybe for you, some of you might even be faster than me. Maybe in 2 readings or 1 reading itself you might figure out. Or some of you, if may not be 4th or 5th reading, 6th reading or 7th reading, you will figure out. See, it's all about brew. It's a principle called brew. Break, read, understand. A paragraph, first break in multiple parts, read and understand. You're not getting proper meaning. Break it in different way, read it again and understand. So this is what I do. That's it. Then third point, dear Mr. Auditor, you also did audit procedure, right? You did some audit procedure, right? Okay. So, and did you came to their, nothing has come to their notice that has caused them to believe that representations under 1 and 2 contain any material. So in 1 and 2, you're getting management representation. I hope it is true. Management is giving a declaration that nothing has been hidden. Management might be a funding party. Management might be an intermediary. Whatever it is, everything has been disclosed in the financial statements notes and nothing has been hidden. Like that, they gave a declaration. Do you believe the declaration is true and fair? Do you believe the declaration is honest? Have you came across any circumstance? Have you came across any circumstance, Mr. Auditor? Have you came across any circumstance that representations given under 1 and 2, they are materially misstated? Have you came across? Nothing, but they are indirectly asking, management acted as a funding party, or in the second case, management acted as an intermediary, but that particular transaction they did not disclose in the notes, but they gave you a representation, they gave you a written declaration that they disclosed everything, which means in spite of non-disclosure, they are giving a declaration that we disclosed everything, which is material misstatement of the representation. Have you came across any such circumstance, incident, symptom, tips? That is what the third point is about. First point, get a written representation that wherever the company acted as a funding party, transferred money to beneficiary, intermediary, where the intermediary will transfer to ultimate beneficiary, getting it, and all the transactions are disclosed, nothing has been hidden in the notes. Get a declaration. Second one, get a declaration that wherever company has acted as an intermediary, received funds with an understanding that that fund will be transferred to some other beneficiary or give a guarantee on behalf of beneficiary, because it is guaranteed by funding party. And every of this transaction is disclosed. Nothing has been hidden. Get a declaration. You got declarations. Management give declarations as per the section requirement. Third point they're asking, I hope these declarations you got are true and fair. I hope you didn't came across any circumstance. I hope you didn't came across any circumstance. Nothing has come to their notice that has caused them to believe that representations are containing material misstatement. I hope you didn't receive anything contrary that representations, whatever you got, are materially misstated. So it's a negative framing sentence. I hope based on audit procedures performed, the auditor has considered reasonable and appropriate in the circumstance. Nothing has come to their auditor's notice that has caused them to believe that representation received from the management by the auditor is materially misstated, is fraudulent. That's it. So they're asking your affirmation once again clearly. By keeping this kind of checklist, see how much they're expecting from the auditors. How much they're expecting from the auditors. Very recently, ABC shipping, ABD shipping yard, 23,000 crore fraud. Let us see what is the news. I'll show you. Let's look into what is the news. There is a shipping yard for fraud. ABD, yeah? Something like ABD shipping, fraud. Just let's see. Not that. Bank fraud, recent bank fraud. Yes. How ABG shipyard. Approximately, there is a company called ABG shipyard. Approximately over a period of 5 years, they took loans from 28 bank, 23,000 crore, India's biggest bank fraud, which has been detected on February 13th. February 13th or 14th around. What happened? Let us see what is there here. Between 2012 and 17, ABC Shipyard, which is a Gujarat-based firm, purported limits intentionally defrauded banks to the tune of 22,842 crore. This revelation has caused Narendra Modi government to come under fire, with the opposition Congress accusing and aiding loot. Nothing okay. The scope and scale of the fraud is staggering, but the crux of deception, as the CBI is discovering, was the novel way in which the company apparently created a web of transaction. So complete new way of doing fraud. Okay, to cheat on consortium of 28 banks, including SBI, IDB, ICICI. According to CBI, the shipping yard took loans from these banks and diverted them. Something related to our point. It allegedly made investments in overseas subsidiary from the loan amounts, purchased assets in the name of affiliated. Arey man, exact sync with this, our provision, whatever we discussed, and also transferred money to several related parties. It also alleged that company whose account became non-performing in 2013 violated its arrangement for cooperation of debt restructuring, a relief mechanism in which lender bank either reduce rate of interest or loan, whatever. So this is ABG shipping and exactly did something what we are discussing about, this concept. So ABG shipping has borrowed some loans and through affiliated entities invested in foreign subsidiaries, something similar to this, but were not disclosed anywhere in the notes to accounts. That is why it was discovered now. If at all they discovered earlier, continuously taking loan, investing in foreign entities, banks would have figured out, what are you doing? Somebody would have questioned it, but it is not disclosed. Maybe complete picture we have to yet to receive. Okay, ABG shipping yard. You can take ABG shipping yard. ABG shipping yard limited fraud, approximately 23,000 crore fraud, 28 banks involved approximately. See, people are discovering new ways of fraud, and as an auditor, you should not be dumb. Sir, for us exam, sir, we have to qualify exam, sir. What exam today? You need to realize, you need to understand how the market is. There are so many students who are just attending campus interviews and turning back without any opportunity. What is the use of qualifying exam in such a way? There's no use. If you still target exam, first I will target exam, then I will learn. You will never learn in your life. I'm telling you. There are 99% of the students who think that, okay, first let us finish exam, then we can learn. best example in CA Inter or CA Foundation, you left some topics. Maybe you would have felt after examinations, in the leave time or some other time, I will learn all this. At least learning is important. Did you ever went back and learned? No, right? Just okay. Anyhow, so that's about the fourth clause reporting requirement. Then the fifth clause. What are they asking here? Whether the dividend declared or paid during the year by the company is in compliance with section 123. Very simple. Dividend shall only be declared and paid only after declaration of, only after charging depreciation, and dividend has to be declared from various sources: current year profit, previous year. If at all you're declaring dividend from previous year profits, you need to transfer some funds to reserves, so something like that. There are provisions which you will understand in company audit. I already gave dividend lectures, all that 123 to 127 section I already gave lectures. That's enough. You can see in company audit it's already there. We directly discussed from ICI study material. Next, sixth point, very simple. Whether the company in respect of financial year commencing on or after 2022, which means this financial year not yet started, 22-23 financial year, in the 2023 in May month we can see these points practically. Okay, whether the company in respect of financial year commencing on or after April 22 has used accounting software for maintaining books of accounts which has a feature of recording edit log facility, audit trail, and the same has been operated throughout the year for all transactions recorded in the software, and the audit trail feature has not been tampered with, and audit trail has been preserved by the company as per statutory requirement for the record retention. Company has to retain books of accounts for 8 years. Same way the trial log shall also be retained for 8 years. I told you in the previous session also what is audit trail. Okay, what is an audit trail? It's a step-by-step sequential record which provides evidence of the documented history of financial transaction to its source. An auditor can trace every step of the financial data of a particular transaction right from general ledger to its source document with the help of the audit trail. What happened first? What happened next? Who modified? So in version 1, transaction version 1, version 2 deleted, version 3 reloaded, version 4 updated with amount, version 5 narration changed, version 6 invoice number changed. So once transaction is generated, earlier in computer, in technology, tally, you know, right? Very simple software. Let us why to take so and so. Tally is there, no? If you change any amount and all and enter the transaction, can you figure out that amount has been changed? Can you figure out? You can't. Yes or no? You can't figure out that amount has been changed, because in technology, once we change anything, naturally what it comes is, again the new item will replace old data will be replaced with new data. And do we understand that data has been replaced? We don't. Now we will understand what is the old data, what is the new data, what replacement happened. We can understand it. That's it. So that's about 143 subsection 3 checklist item. Almost half an hour we spent in understanding 10 clauses, and half an hour we spent in the previous session, half an hour. This session is approximately half an hour only on 3 clauses. This especially intermediary. Luckily we got very beautiful example, ABG shipping yard, but don't take it as a concrete example. But since the whatever the terminology we understood here syncs with that example, I immediately correlated. But to best of my knowledge, this is what would have happened. To best of my knowledge, I can figure out, I can sense that. Unless we get entire case details, we can't exactly interpret it. But anyhow, now onwards auditors cannot escape. You have so many duties. Remember, future is going to be even more dynamic. If you think future is like, you know, if you qualify, if you think that there is a red carpet for you, you are the dumbest person on this universe. There will not be any red carpet at all. You have to work. I don't say hard work. You have to work. That's it. There is nothing such called hard work. Every work requires some quantum of intelligence, effort, time, energy, all that. So you have to give that time and energy to it, and you will definitely go through it. You'll definitely, you know, even break ahead and go ahead. So that's about this point. And if you remember, I kept point number I pending. IA. Whether a company has adequate internal financial controls, this point I kept pending. And here below there is a note point which is related to IFC. Point, but we have a exclusive question on this, very lengthy question on this I point itself. That is 109 page. If you come, this guidance note on IFC, we have this question, additional concepts and practical questions we have. There we will discuss what is internal financial control, all that. More importantly, controls topic you will once again discuss in risk assessment and internal control chapter, which is 18th chapter. Not there for smart core students, that one, but for full course students it is there. I discuss about all risk control matrices. I discuss about control rules, audit risk concepts. So much I'll discuss in depth. That's it. So with this 143 subsection 3 is completed. By the way, which page number we are? So 143 subsection 3 is completed. Below there is one more note, just an important note. For public companies, for public companies there is a requirement. For public companies in 143.3 only, actually the section do not contain, but MCA has given a notification. The auditor of the company shall report under 143, shall make a statement whether remuneration paid by company to its directors is it in accordance with this section, whether remuneration is in excess of the limit laid down under this section, give us such other details. Okay, whether remuneration paid by the directors, is it in excess, is it as per the provisions or not, they are asking you. Whether remuneration paid by the company, is it as per the provisions or not, they are just asking. Okay, only for public companies this point will apply. Even if you take Reliance audit report 143.3, this point is also covered. This is not covered in A to J clauses. This is a separate point where we need to add there. That's it. And what is the reporting requirement under 143 subsection 3? Here auditor shall report, it may be a positive or negative. Suppose if a point is not applicable, say that it is not applicable. Further he shall state that all these matters shall be reported under which one? Report on legal and regulatory requirements. Under that section he has to report. So now if I come back to once again, our contents of the audit report, we are still in the 12th section of the audit report. We are still in the 12th section of the audit report. 12th section of the audit report we are still at. So here totally 43 matters are there. 21 matters in Caro completed. 16 matters right now we have completed. Only 6 matters left. 143 subsection 1, duty to inquire, 6 matters only left. Once we finish this, okay, then I will do I do take SA 620 or 610, something I will be taking, in the upcoming lectures. So I'll stop the lecture video right now. Then 143 subsection 1 you will get in the next video. There is no amendment in that. Duty to inquire 6 matters, no amendment in that. That's it. So this is with respect to a newly added topic, that is NOCLAR concept in Code of Ethics. Nothing but in our syllabus as part of Professional Ethics chapter. So in our book it is 4th chapter. Professional Ethics is 4th chapter. In that edition 2022, question number 4. Now, what is the concept of NOCLAR first of all? What is the concept of NOCLAR first of all? Non-compliance with laws and regulation. Very simple. Non-compliance with laws and regulation. NOS means non-compliances, not no objection certificate. Okay. So non-compliances with laws and regulations. What are the objectives of professional accountants? What are the objectives of professional accountants? See, they didn't use the word chartered accountant. They used the word professional accountants. But it's okay. The Code of Ethics of ICAI is generally applicable to chartered accountants. To whom? Is it only a chartered accountant in practice or a chartered accountant in service? To whom? To both of them. So professional accountants includes both chartered accountants in practice and chartered accountants in service. What do you mean by a chartered accountant in practice? What do you mean by a chartered accountant in service? First of all, what do you mean by a chartered accountant? You will understand in the upcoming question. We have upcoming question called membership of the institute. So there you will understand. And I strictly advise you to watch this video if possible. Watch this video after finishing professional ethics chapter remaining videos. You have remaining totally in the entire professional ethics, we have so many videos, right? So many concepts, right? Yes or no? We discuss about schedule 1, schedule 2, all the parts, clauses, council guidelines, everything. After finishing all that, you please come back and watch to this video. Since it is question number 4 in our material, I'm discussing here itself like a part 2A video for edition 22 students. Though it is part 2A, do not watch this video at this moment. You can pause, you can stop the video, go with other lectures. Finish all that and then come back to this. Why? In this NOCLAR concept, we are going to discuss about some clauses of professional ethics, which we will be discussing in the upcoming videos. So it is better if you discuss to this particular, if you watch this video, okay, at the end of all other chapters, at the end of all other videos. Fine. So this is applicable for all professional accountants, whether the professional accountant is a chartered accountant in practice or whether the professional accountant is service. What do you mean by NOCLAR, by the way? Non-compliance with laws and regulations. Tell me, first of all, where do we heard this word called non-compliance with laws and regulations? Where do we heard this word laws and regulations majorly? First time we discussed that laws and regulations point under SA 250, if you remember. The third chapter in our subject is what? Standards on audit. Yes or no? So in the standards on audit, I think you have gone through SA 250. What is SA 250? Consideration of laws and regulations in an audit of financial statements, or auditor's responsibilities relating to laws and regulations in an audit of financial statements. If you recap, what SA 250 divides, what SA 250 expect from the auditor. First of all, to whom SA 250 is applicable? Only for statutory audit of financial statements, only for audit of general purpose financial statements. One of the standard is SA 250. And SA 250 applies only in the context of audit. SA, standard on audit, only it is applicable in the context of audit. Then what is non-compliance with laws and regulations, NOCLAR? How it is different from SA 250? SA 250 puts responsibility on auditor. Dear Mr. Auditor, if there are any laws and regulations where there is a non-compliance and if it directly affects the financial statements, please look into it. No, it is not affecting directly laws of financial statements, but it might affect a company going concern, or it will bring material penalties and fines which will have an impact at a future date. Then also please consider, if SA 250 indirectly says, dear Mr. Auditor, if any non-compliance you discover that will affect our client, that will affect your client, that will affect your auditee, that will affect the company where you are the stat auditor, please consider. That is what the scope of SA 250. But NOCLAR, it doesn't define, NOCLAR defined stakeholders much more wider. It is not only the client, it is not only the management of the company, it includes creditors, it includes tax authorities, creditors, okay, general public, it even covers general public. Dear Mr. Professional Accountant, whether you are an auditor for the company, as a chartered accountant in practice, whether you are a just employee of a company, chartered accountant in service, whatever it is if you came across any non-compliance with law and regulation that affects any of these, check, are you liable to report to any legal authority? Do you have any obligation to report to any legal authority? It may be a duty casted upon you under employment, or it may be a duty casted upon you as an auditor of a company. Check. Do you have any responsibility to communicate to the appropriate regulatory legal authority to communicate this non-compliance made by your employer company or your client? Check it out and accordingly report to the law and regulatory. When the company has done some non-compliance, the company has committed some non-compliance, the management has committed some non-compliance, the employee of the company has committed some non-compliance, I am the auditor, or I'm a chartered accountant, I'm a professional accountant, maybe an auditor or maybe employee. Because of this act, non-compliance, because of this non-compliance with law, it resulted in damages for either the company or the management or the creditor or the tax authorities or the general public. SA 250 do not talk about general public. SA 250 do not talk about damages to creditor. SA 250 do not talk about damages to tax authorities. SA 250 only talks about if a non-compliance is resulting in financial statements of the company being affected or the company being affected at a future date in the form of fine or penalty. Only if the company is affected because of some act, non-compliance with the law, then only auditor has to look into. In SA 250, the law and regulation, non-compliance related information we should only see, keeping in mind the beneficiary only company. Whereas NOCLAR, as per Code of Ethics of ICI, considers stakeholders at large. Stakeholders at large. SA 250 only talks about the company client, whereas NOCLAR talks about all the stakeholders, whoever might affect. Example, in SA 250 also I gave this example. Suppose if a pollution norm is breached, suppose I'm a statutory auditor of a company, I'm a stat auditor of a company. Let us assume I visited the factory and workers are discussing about a pollution breach. There is a standard, pollution emission standards, some pollution emission standards for their example. The workers are discussing about, something I heard in the discussion when the workers are discussing, when I'm passing by, I heard from few workers discussing about some pollution breach of emission norms. I spoke to them, what happened? That they explained, because of that pollution breach or because of some sort of, it may be air pollution or water pollution, whatever the sort of pollution, because of that, it is endangering some animal species residing in the nearby locality. It will endanger. So that pollution causes harm to that endangered species. You see Robo 2 movie. This one you would have seen, no? Pakshi Raja. He will just attract all the mobile phones, everything to curb the radiation. Yes or no? Because radiation is affecting the birds and all. That is why he is called as Pakshi Raja. Similarly, in the factory where you are doing audit, in the process of just visiting factory visits, you came across about emission breach. Because of that water pollution or water contamination, whatever being done by this company, that there is an endanger for some particular animal. It comes under public safety. See, the animals are being preserved. Endangered animals are being preserved because every animal in this universe have its own role, to protect to balance the environment. Okay. So you heard about it. Now that particular pollution contamination, water contamination will violate some forest law, or it will violate some protection of animals, cruelty, something. There is a law. It is violating. So I immediately got this doubt. Oh my God. Earlier when I'm doing audit, if I come to know about this, it's okay. Because of factory, everything happens. What we can do. Now immediately I'll think, is it affecting financial statements directly or indirectly? I'll immediately think of it. No, there is no effect on the financial statements directly or indirectly at present or at a future date. No, nothing, no responsibility under SA 250. But now, with effect of NOCLAR, since it is affecting, since it is affecting some general public safety, it comes under general public utility. Immediately, what should I do as per NOCLAR rules? First I must call a lawyer, or I must call industry technical people. I'm working in an industry. I need to go to the nearby any conservative activist, social activist, somebody, some lawyer will be there, or some legal person will be there. Consult legal person. Dear legal person, so I'm doing audit of this company. There is a NOCLAR concept is there. I need to report to regulatory authorities. Just first of all, I heard about this issue. So explain that issue to the lawyer. He will open that particular relevant law that animals law or some protection law, forest law, something he will open. He will refer in that particular law. If there is a responsibility, getting it, directly or indirectly casted upon the accountant of the company, professional accountant of the company, he may be an auditor, he may be or somebody, employee. If there is a direct or indirect responsibility, now you have to report to the concerned, people, concerned authority, forest department or environmental department. You need to report, you need to complain. But I'm telling you, 99.99999% of the cases, no other law talks about professional accountants reporting responsible. Logically speaking, NOCLAR will not have any effect. Right now it will not have any effect, but in future the laws and regulations may be made in such a way. The laws and regulations will be made in such a way. Maybe when an industrial law is being designed, tomorrow when the industrial law is going to be amended, they may put responsibilities on the accountants. They may put responsibility on the auditors. As part of audit, you not only look into the financial aspect, but look at non-financial aspects also, which is affecting general public. If you come across any such situation, please report it. They may put a responsibility like that, but today it is not there. But tomorrow it will come. NOCLAR is a provision designed and implemented by ICI through Code of Ethics, not for the past or present, but for the future. Understand this point. For the future, getting it right now, NOCLAR may not have much effect. I'm telling you, because of implementing NOCLAR. By the way, sir, from when NOCLAR is implemented, 1st April 2022 onwards, NOCLAR is implemented. First of all, this NOCLAR concept is brought by International Ethical Standards Board in 2017 itself. Later, ICI adopted in 2019 Code of Ethics. It is implemented from 1st July 2020 onwards. Implemented the Code of Ethics. This NOCLAR provision is applicable from 1st April 2022 onwards. This information is not required, even it is not given in the ICI study material as well. I just gone through some Bombay Chartered Accounting Society site, all that, and got this data. So right now it is not required. The dates and all not required. But remember only this, NOCLAR is applicable for professional accountants from which date onwards? 1st April 2022 financial year onwards. Even up to 31st March 2022, it is not applicable. And for the first time, NOCLAR concept is applicable from May 22 examination onwards. May 22 examination. I explained entire concept, actually speaking. Entire NOCLAR concept is explained. What is NOCLAR concept? Now let me sum up right now. SEA 250 is there earlier. Even now it is there, SEA 250. As per SEA 250, what is our responsibility? Our responsibility is, if auditor come across any non-compliance, which may be a type 1 non-compliance, which will have a direct effect on the financial statements, type 2 non-compliance, which will have an indirect effect, which may not have an effect on the financials, but it will affect the company at a future date in the form of penalty or fine. What auditor has to do? Communicate with those charged with the governance, tell them to disclose that in the financial statements. If they didn't disclose, you report it. You give a modified opinion. Simple. If there is any non-compliance you identified which affect the company. But today, because of NOCLAR, you have another responsibility, additional responsibility. Even though company may not be affected party, because of a particular non-compliance, company may not be the affected party. Some general public is affected party, a creditor is affected party, a tax authority is affected party, or some other person is an affected party. Even this has to be reported to the appropriate authority as per the appropriate law, after taking legal opinion from the concerned lawyer, whoever is dealing in that issues. Actually speaking, NOCLAR is not such easy topic. It's a very big topic. Here, confidentiality requirement, should I report or not? See, here it is just like that. Suppose if there is a example, let me explain you what reporting responsibilities we have right now. Which non-compliances we have to report right now under company law. Let me first explain you. Suppose you take Caro as part of audit report. In the audit report, under which section of the audit report on legal and regulatory requirements section, if any fraud is noticed or reported, yes or no? If any fraud is noticed or reported on the company or by the company, it shall be reported in Caro, yes or no? If any fraud is, for more than 1 crore is discovered by the auditor at the time of audit, it shall be reported to central government. There is a clear responsibility on the auditor. Company law has put a clear responsibility that please report in the audit report, please disclose in the audit report. And this is also, please report to central government and disclose this also in the Caro fraud clause. Yes or no? Public deposit in Caro, if there is any non-compliance of Companies Act, RBI directions or NCLT or Company Law Board directions, please report that non-compliance also. They put a specific provision that you need to report it. Here you need to report to central government. Here you need to report to shareholders in the Caro. Statutory dues, is the company paying regularly? If not, if there is a non-compliance, report it. Preferential allotment, whether the company has raised any money by way of preferential allotment, report if there is a non-compliance of section 42. So Companies Act has put some responsibility. Like I took only these examples because we discussed all this already as part of audit report chapter and company audit chapter. We discussed it already. So I'm mentioning these examples. I'm not taking other examples. Same way in listed companies, in company law and allied laws paper 4, you would have discovered, you would have understood some other reporting responsibilities for auditor to SEBI. LODR regulations, where you may have to comply, where any non-compliance were that you may have to report to SEBI. In case of a bank, you may have to report to RBI. In case of insurance, you may have to report to IRDA. There are some responsibilities under some laws and regulations that were casted upon you to report to the appropriate authority. Getting it? So what NOCLAR concept is trying to tell, generally whenever we come across some issues that are there in the employer organization or some issues in our client where we are acting as auditor, we generally maintain confidentiality. We will not report any issues to the outsiders. However, if there is a legal requirement, if there is a regulatory requirement, then you must report. A few examples I discovered. I discussed here. In all these cases, no, if the company is affected party only, please report. Indirectly, that is what they are saying. Indirectly, this is what saying. By the way, here, who will do this non-compliance here? Who will do this non-compliance? Obviously, company is an artificial person, man. Partnership is an artificial person. Partners, staff, employees. So in a company, those charged with the governance, they may do non-compliance. Remaining management people may do non-compliance. Employees may do non-compliance. Persons inside the company may do some non-compliance. That will affect the company or third party, anybody. And you are the auditor of the company or you are the employee of the company, but you are a chartered accountant. For you, code of ethics of icai is applicable. Getting it? Because NOCLAR says NOCLAR is applicable for practicing chartered accountants and as well as members in service. For both of them. If you come across any non-compliance, first and foremost thing, don't ignore. Think, do you have any legal responsibilities? Do you have any legal responsibility to report about that non-compliance to somebody? Do you have any legal responsibility to report that non-compliance to some legal and regulatory authority? Check it out. Go to a lawyer, consult, take a legal advice, go to an advocate and take an advice. Then accordingly act. Irrespective of reporting to legal authority, report whatever non-compliance you came across to the top management of the company. Report it to the top management of the company. If that non-compliance comes within SA 250 purview, report it in the auditor's report. Summary is this. The summary of whatever we discussed until now, simply speaking, whether you are a chartered accountant in practice, whether you are a chartered accountant in service, when you're doing audit, when you're working in a company, you came across some non-compliance that affects somebody. This non-compliance definitely committed by company people only, nobody else. Outsider cannot come into non-compliance, company people only. If it is affecting somebody, stakeholders at large, check, do you have any legal responsibility to report? If there is a legal responsibility to report, report it. How do you know whether do you have a legal responsibility or not? Consult with a lawyer. Consult with a lawyer. Pharma companies, defense companies, defense production related companies, pharma companies, telecommunication companies, this NOCLAR is very, very powerful. the auditors of these companies, telecommunication, pharma, chemical manufacturing companies, this NOCLAR is very powerful because these are the companies which will cause huge damage to environment. Huge damage to environment. In all these cases, NOCLAR will apply. NOCLAR will cast your responsibility. But right now I'm telling you honestly, my personal opinion, because of this NOCLAR right now, it may not have huge impact on our work procedure, work method, or our way of working relating to laws and regulations. Whatever is there under SA 250, we only do that. We don't do any additional work. We don't do any additional work. It is just that NOCLAR is added. It is saying you have to report to appropriate authorities after seeking a legal advice. That's the only difference. Fine. Let us get more clarity by understanding what is the provision of NOCLAR. So first of all, applicability of NOCLAR. Actually, NOCLAR is applicable for all assignments. Originally speaking, as per the code of ethics, it is applicable for all assignments. You know, it is applicable for members in practice as well as members in service. Sir, what do you mean by member in practice? What do you mean by member in service? You will understand in the upcoming video. That is why I asked you to watch this video after finishing entire ethics chapter. Fine. However, right now, as of now, the institute restricted applicability of NOCLAR to listed entity audits only. And moreover, it is applicable to employees of listed entities who are also chartered accountants. Here, he is also a chartered accountant, and here also audit of assignment means CA. He is also a chartered accountant in practice, but this fellow is a chartered accountant in service. Only for listed entities, wherever you are dealing with. Wherever a chartered accountant is dealing with a listed entity, either as a practicing fellow, all assignments, getting it? So this is applicable. Moreover, right now audit assignments only covered. Right now it is audit assignments. At present, for listed entities, audit assignments only covered, and listed entities, employees who are chartered accountants only, NOCLAR provision is applicable. Logically speaking, even if you read this entire question, if at all you read this, you understand basically nothing. What auditor has to do? You will not get a concrete conclusion. But right now I told, right, what is the intention of NOCLAR? I told you. The intention is very clear. Generally, if auditor come across any non-compliance that affects the company directly or indirectly on the financial statements, that we need to report. That is SA 250. Now NOCLAR says, irrespective of the affected party, do you have any reporting responsibility? Do you have any responsibility to complain to somebody? Okay, so as per some other law, check it out, get a legal advice, and then complain. Logically speaking, right now, no other law has brought a responsibility. Suppose if a particular law says, any person whoever come across this, as a citizen of India shall report it to appropriate authority, if at all it says. Naturally, citizen of India or resident of India includes auditor as well, right? Generally. So naturally, you may have responsibility to report it. Breaching confidentiality requirement. You need not consider confidentiality and all there. And moreover, in future we have a category 2 chapters, right? Like what are the category 2 chapters? Liabilities of auditor, okay, audit and fiscal loss, and insurance audit. These are category 2 chapters, I told you. Now in category 2 chapters, liabilities of auditor, there is a chapter, liabilities of auditor, where we are discussing about completely what are the auditor's responsibilities under income tax law, under GST law, under company law, what are the auditor responsibility we are discussing. There, once again I will connect SA 250, NOCLAR, and liabilities of auditor put together. We have to discuss. Put together. So once again I will cover NOCLAR there. You will get even more clarity when we discuss about liabilities of auditor. Right now, this level of understanding is enough. Now, what is NOCLAR meaning? What do you mean by a NOCLAR? You see here, what do you mean by non-compliance with laws and regulations? Non-compliance with laws and regulations comprises, what it comprises? It comprises an act. Some act you did. How you did? You omitted or you committed intentionally or unintentionally. What is that activity? That activity is contrary to the prevailing laws and regulations committed by a client. Means if you are a chartered accountant, okay, or your employing organization, those charged with governance, management, other individuals working for under the direction of the company, nothing but other employees. The organization where you are working as a chartered accountant, or the organization where you are conducting audit, especially that organization right now is what? Right now that organization must be what? Listed entities only. Right now NOCLAR is applicable for listed entities. If any of those charged with governance employees have committed some act against the law, either intentionally or unintentionally, we call it as non-compliance with laws and regulation. This itself can be asked as a 2 or 3 marks question, theory question, highly important for May 2022 and November 2022 attempt. This itself can be asked as a straight question. Write about non-compliances with laws and regulations as per NOCLAR Code of Ethics. You know, non-compliance definition is given even in SA 250. What is SA 250 non-compliance? Non-compliance, SA 250, it just defined non-compliance. Non-compliance means an act which is an act of omission or an act of commission which is contrary to the prevailing laws and regulations. That's it. They just put up to that. Committed by employees, those charged with governance, other that and all they didn't discuss. But anyhow, the definition of non-compliance with law and regulation is mostly similar. And what this do not include, NOCLAR does not address personal misconduct unrelated to business activities of the client or employing organization, non-compliance by parties other than listed out in the definition of NOCLAR. Suppose if a third party did some non-compliance where company is also an affecting party, that is not covered in the NOCLAR. Only NOCLAR provisions are applicable only when the management, the employer or those charged with governance of the company is involved in that non-compliance. And moreover, it do not involve personal misconduct. Suppose if the employee of the company met, in his some personal affairs, getting it, he did some non-compliance against some other law, some law or regulation under Indian Penal Code. That is not affecting the company, no. So you need not worry about that. Only if that is a non-compliance committed by employee, management, top management of the company, affecting the company or any other person. But it is as part of company, on behalf of company, they did that non-compliance, then only this provision is applicable. What are the examples? International Ethical Standards Board Authority gave the following examples. Fraud is covered in NOCLAR. Corruption is covered. Yes, if you come across any corruption, if the company is paying any corruption, if a company is paying any bribe, which is against anti-corruption law, okay, or bribery, money laundering, terrorist financing, proceeds of crime, securities market and trading, banking and other financial products, data protection related frauds, environmental protection, I told you, animals, all that, public health and safety, tax and pension liabilities and payments. Every type of fraud is covered, you see. Every type of non-compliance is covered. See the effect. See, with respect to environment protection in India, we might have more than 100 laws. With respect to public safety and health, we might have more than 100 laws and regulations. With respect to data protection, we have Information Technology Act example. We have many other laws, privacy related laws, banking laws. We have n number of laws. Tell me, is auditor, first of all, no, by looking at this, you can understand, sir, these laws and all regulations, we don't know, right? Should we read all these laws? And suppose I'm doing audit of pharma company, sir. Should I read all the laws and regulations related to pharma company? They clarified below. They clarified, hey, Mr. Auditor, expertise of law is not required, man. You need not require expertise of law. Then what, sir? In the course of audit, in the course of your employment, if you come across any symptoms, indications, then investigate. That is what even SA 250 also says. So, a professional accountant is expected to apply knowledge and expertise and exercise professional judgment. Only whatever your existing knowledge is, that's enough. He is not expected to have a level of knowledge of laws and regulations greater than that which is required to undertake that audit. But for that particular work, for that employment, whatever level of knowledge, whatever the knowledge of law and regulation that is generally expected from you, beyond that, you need not learn. Whether an act constitutes non-compliance is ultimately a matter to be determined by court, other appropriate adjudicative body, not by you and me. That's why, is it a non-compliance or not? Go and take a legal advice. Matters that are clearly inconsequential or relating to personal misconduct, pertaining to business activities of the client are not covered, not relating to actually. Okay, relating to personal misconduct. Relating to personal misconduct, while conducting business activities, but actually the employee has committed a fraud, cheated a customer, getting it, cheated a customer in his personal capacity using the name of the company. That cannot affect the company. That cannot affect the company. Getting it? Inconsequential means immaterial. They are not of material size. They are not of material size. They are not significant. And further, if the law says disclosure is not required, suppose if you come across any non-compliance, you need not disclose. If there is no specific requirement under law that you need to disclose that non-compliance to the appropriate authority. Suppose you did the company has committed some violation, which is against some environmental law. In that particular law, there is no responsibility on you to report to particular authority, forest department or something, environmental department or something. There is no such responsibility. Then also NOCLAR is not applicable. As per ISBA code, disclosure of matter would be precluded if doing so would be contrary to law. I mean, if the law specifically says you need not report, if the law specifically says you should not report, or if the law is silent, you need not report. Take a legal advice. See, better thing is always take a legal advice. You're doing audit of pharma company. You came across some non-compliance with the Medical Council of India guidelines in a vaccine manufacturing process. Consult a legal advocate who is expertise in that particular pharma related business, and then accordingly respond. He will guide you. But what it is asking you is be skeptical, be prudent. So NOCLAR will be applicable if a professional accountant come across or is made aware of non-compliance, suspected non-compliance in the course of providing an audit service to a client or employment service to a client. He is not required to investigate, not responsible for compliance. You need not sit and tell the management, hey, do comply with that law, do comply. No, you are not responsible to discover all the non-compliances. In the course of work, you came across a non-compliance, then only NOCLAR is applicable, otherwise not applicable. Now you may tell immediately, sir, I came to know about one non-compliance, sir, I didn't report, sir. How do ICI will know that I came across a non-compliance? How do ICI will know that I came across non-compliance? Generally, whenever we are working, we have a habit of documentation and discussion with people. When simple logic, ma'am. Tomorrow, suppose you discover some non-compliance. And you didn't report to anybody. Fine. Someday it will be reported, right? One day, at a fine date, it will burst out. At that time, investigating agency will start investigating. At that time, the investigating agency discovered that this knowledge of fraud, this knowledge of non-compliance is already known to the auditor. Employees are saying that auditor also aware of it. That time they will call you. Simple. Until then, you don't have any problem. Until that particular consequence comes, you will not have any trouble. In Punjab National Bank or ABG Shipping Yard, almost a fraud is happening from 2013 or 14. But it was not reported until 2022. Only in 2022, now people are questioning what auditors are doing. Simple. So, what is the objective of this NOCLAR? Now, let's look at what is the objective. What NOCLAR is trying to tell. Okay, the objective of NOCLAR is that turning a blind eye to potential NOCLAR is not an appropriate response from the professional accountant. Dear professional accountant, if you come across any non-compliance, don't behave like a blind person. Don't turn blindly. Don't ignore it. Okay, don't ignore it. Please discuss it with the management and those charged with governance, and disclose it to appropriate legal and regulatory authorities after taking legal advice. While placing renewed emphasis on the role of management and those charged, because they are the one who are primarily responsible for compliances. Further, it increases awareness and understanding among accountants like us of their legal and regulatory responsibilities when they face non-compliance with law and regulation. When a professional accountant come across non-compliance with law and regulation, this NOCLAR guidelines provide me what should I do, what I cannot do, what I can do, what I cannot do. Simply, until this NOCLAR guidelines come, we only have SCA 250 with respect to laws and regulations, non-compliances. Now with NOCLAR, we understood that we have much more responsibility than what is given under SCA 250. But I'm telling you, it will take at least 1.5 years to get a concrete output of NOCLAR, to get a concrete examples on NOCLAR related effect. So what is the difference between non-compliance with laws and regulations as per Code of Ethics and standard on audit SCA 250? SCA 250 is applicable only on audit, not on the other assurance engagement. However, NOCLAR covers all, professional accountant in service as well as practice, all assignments. Only temporarily listed entity audits are covered. Otherwise, NOCLAR is for all assignments. Among those in practice, it applies to auditors as well as professional services other than audit. So it is applicable for audit as well as non-audit. However, degree of responsibility of professional accountant varies depending upon the rule. What is the responsibility varies depending as per the rule. SA 250 talks of auditors' responsibilities for law having direct effect on material amount and disclosure in financial statements such as tax and labor laws. Other laws and regulations that do not have direct effect on amounts and disclosure in financial, but compliance is fundamental to operational aspects of the business. So NOCLAR is further ahead of SA 250, that it takes into account non-compliance that cause substantial harm resulting in consequences to financial and non-financial terms. NOCLAR is related to effect of non-compliance on investor, creditor, employee and the general public. Everyone is covered. Whoever is the affected party, NOCLAR rules are applicable. As per NOCLAR, now you see here, this point is even more important. As per NOCLAR, in exceptional circumstances, I am telling you, it is very rare, the professional accountant might become aware of breach of law, imminent breach of law or regulation that would cause substantial harm to investor, creditor, employee or the general public. So very rarely we come across any law. Having first considered, if the moment you got, it is appropriate to discuss the matter with the management or those charged with governance. First discuss with top management. Then exercise professional judgment and determine whether to disclose the matter immediately to the appropriate authority. Suppose if it is a fraud for more than 1 crore, you need to report immediately to central government within 60 days. In order to prevent or mitigate the consequence of such breach, in order to mitigate future bigger loss, immediately report. Immediately report. If disclosure is made, the disclosure is permitted. Generally, only if the disclosure is permitted by law or regulation, you have to make the disclosure. The provision is not inconsistent with the SA 250. It is not inconsistent because in SA 250, it is only talking about effect on the financial statements directly or indirectly. So what is the steps for responding? This is again an important aspect. This 8th point can be asked as a 3 marks or 4 marks question. Only 8th point. What are the steps in reporting under NOCLAR? Or they may ask you, what is the relationship between NOCLAR and SA 250? This can be asked for 4 marks question. Important for May attempt and November attempt. Okay. And definition of NOCLAR. What is the NOCLAR meaning? Meaning of NOCLAR. Second point and third point together you need to write. And give few examples of NOCLAR. So they may ask you 4 marks question. What do you mean by NOCLAR? What it does not include. The third point and second point together they may ask you for 6 marks. That is also possible. That's it. What is the objective of NOCLAR? And what are the factors while considering the NOCLAR under Code of Ethics? 5 and 6 point together they may ask you. What is the objective of NOCLAR? What are the factors to be considered? So this itself is irrelevant for 4 marks question. See how they can 2 and 3 point together they can ask you a question. 5 and 6 points together they can ask you a question. And 7 and 8. 7th point alone can be asked as a question. 8th point alone can be asked as a question. So what is the steps for responding to NOCLAR? How do you respond on a non-compliance if you come across? First, look at the matter. Okay, addressing the matter, like first report to the top management, then take a legal advice. Check, is there any further action required from you? Like do you require to report to the appropriate authority? Check it out. And is it a breach or not? Finally conclude and document it. Simply document all these steps. You have to document them. Suppose the appropriate authority would be SEBI in case of fraudulent financial reporting. If you discover a FFR in a listed company, you need to report to SEBI. Appropriate alignment has been made in code with regard to requirement of confidentiality as required under CA. Already in Code of Ethics, a member of the institute, example you see, what are the provisions of confidentiality if you check? Provisions of confidentiality, a chartered accountant in practice shall be deemed to be guilty if he discloses information required in the course of his professional engagement to any person other than his client or so engaged without consult of the client. So if you come across any issue of the client, you should not disclose that issue to anybody without permission of the client or otherwise than required by law. This was an amended one. Of course not now, it was amended long ago. Earlier it used to say, Code of Ethics of ICA says earlier, once upon a time, without permission of the client, information about the client don't disclose to the authority. Now what it says, otherwise than, if there is a requirement under law, client permission not required, you can disclose. That's it. Same for members in service also. Same. See these two provisions. One is clause 2 part 2 of second schedule, clause 1 part 1 of first schedule. Both we discussed in the upcoming videos. That is why I am asking you to read this question, watch this video only after completing entire ethics chapter. You will connect to this better. Now same way in ethics also we have one more question. We have one more schedule. What is that schedule? Left side you see. Left side you see. Second schedule of part 2 clause 1. What it talks about, it says, suppose now you might get, sir, what if I don't comply NOCLAR? Future ICA discovered this. They will punish you under clause 1. They will punish you under clause 1 part 2 second schedule. What? If you fail to comply with any CA regulations or guidelines or ethics, professional standards, you are treated as professional misconduct under schedule 2. Accordingly, punishment as per schedule 2 applicable. That's it. Documentation requirement of NOCLAR. This itself can be asked as a question again. The documentation requirement can be asked as a 4 marks question. You need to write any 4 points. You please strike off F and G, not required. No, not that. Sorry, just a minute. E and F. E and F not required, not necessary point. So the revised code over and above require professional accountant to follow additional documents as follows. How management responded to the non-compliance. Matter means here what? Non-compliance. NOCLAR. NOCLAR is what the matter. The course of action accountant consider. The judgments made. Decisions were taken. Having regard to reasonable and informed third party test by taking legal advice, all that. What decision you have ultimately taken? Suppose you decided not to report. Why you didn't report? Have you considered legal advice? You need to document all that. How accountant is satisfied that responsibility of public interest has been fulfilled. So how do you say public is not affected? Or how do you say public is affected? And by reporting this to a lawmaker, have you fulfilled the public interest? See, on this, guidelines have to come. Even more still guidelines have to come, since it is being implemented from 1st April 2022 only. Okay, we still do not have any concrete cases on this, how this NOCLAR is going to affect our work culture, how it is going to affect our CS work culture. It is not clearly identifiable right now at this moment, but still it's part of syllabus, so we are discussing. This documentation is in addition to documentation requirement as per standards on auditing. NOCLAR documentation you should maintain a separate bunch. SEA 230 documentation you have to maintain normally. And document identified or suspected non-compliance and the result of discussion with the management, those charged with governance and other parties, all that discussions related documents you need to store, document. This is NOCLAR documentation. This itself can be asked as a 4 marks question. A, B, C, D and G point are the relevant points. Almost I took 45 minutes to explain, but still I'm telling you, I am going to connect this with liabilities of auditor chapter. There you are going to get even more better clarity, the NOCLAR concept. Though we don't have any express concept in that material, but I will connect NOCLAR to that particular, liabilities of auditor chapter, which is a second category chapter. Right? Liabilities of auditor, insurance audit and fiscal loss. These 3 are second category chapters. Only if you have time, please watch the video and then read. Otherwise you can ignore them, whether you are a full course student or smart course student. That's it. So this is part 2A video in professional ethics. But actually I'm requesting, I hope you are watching this video at the end of the professional ethics videos only. I hope so. Though I should have put this video at the last, but I just added it as 2A because after question number 3 we need to add this video, so we added it. That's it. Carry on. Have a nice time. So that's about NOCLAR and SEA 250. Now what you have to do, close the video and read once again SEA 250 once and this. Just give a single reading to SEA 250 and this. Enough. Next. Applicability of peer review. To whom peer review is applicable? To whom the peer review is applicable? And I remember the periodicity of the peer review, okay, will be based upon the size of the practicing unit. The practicing unit, the CA firms are broadly classified into level 1 and level 2. For level 1, the periodicity of compulsory peer review is once in 3 years. For level 2, periodicity of peer review is once in 4 years. When a practicing unit, when a chartered accountant firm is treated as level 1, when a chartered accountant firm is treated as level 2, they have given here. Remember, for level 1 entities, peer review is applicable for once in 3 years. Level 2 practicing unit, peer review is applicable once in 4 years. Sir, I am not falling under level 1. I am not falling under level 2. Now, is peer review applicable to me? Generally speaking, no. First of all, for applicability, what is the criteria? Compulsory peer review. When if you fall under level 1 category or level 2 category. If you fall under level 1 or level 2 category, as per the periodicity, peer review is compulsory. Special case peer review. What is special case peer review? Suppose if the secretary of ICA recommended a particular audit firm where a peer review board should go and do peer review, or any committee of the institute including disciplinary directorate or any other regulator which in the opinion of the peer review board requires a special peer review. Generally speaking, that practicing unit is not liable for peer review, but the board requested for peer review or firm voluntarily applied. The practicing unit, it do not come under level 1, it will not come under level 2. Voluntarily they applied, or the client requested when I'm already the auditor of one existing client. The client is having a doubt whether I'm following all the standards, technical, professional, ethical standards. He requested the ICI peer review board, dear peer review board, I'm not sure about my auditor, how far he is good, so you please do a peer review. In such a case, the board shall act upon the same within 30 days from the date of such request from the client, and the board with the approval of council modify any of the above criteria. What is the criteria based on which peer review is compulsory? Broadly speaking, they have given only 4 criteria. 1, 2, 3 and 4. This is actually not a criteria. 4 criteria. What are the criteria? If a practicing unit falls under any level 1 or level 2, compulsory. Special case where a practicing unit is referred for peer review by some regulatory or committee of the ICI, disciplinary committee like that. Third, firm only requested voluntarily. 4, the client requested. In such a case, within 30 days, peer review board shall act upon the, shall pass peer review process on that particular form. Now, suppose, sir, if it is compulsory peer review, every year should we conduct peer review? No. The periodicity for level 1 practicing units, once in 3 years if you do peer review, that is sufficient. Level 2 practicing unit, once in 4 years we will do peer review. And you know what? Once we did peer review of level 1 entity, once in 3 years, we will give certificate, issue peer review certificate once conducted. That peer review certificate is valid for 3 years. For level 2 practicing unit, peer review certificate is valid for 4 years. And here ICA has came up with one more very recent amendment. I will show you just a minute. Very recently, ICA has made even more compulsory. ICA has made even more bigger announcement. Mandate on peer review is released. I will directly go to peer review site, or you can even look at the announcements tab, important announcements. So here I will just check. Here you see on 12th February there is a mandate released, announcement, peer review mandate rollout. The council in the 407th meeting decided to mandate peer review process for covering more firms. The rollout shall be mandate in 4 phases. So they are making mandatory peer review irrespective of level 1, level 2. Level 1, level 2 is there in the statement. Even after releasing the statement on 22nd to 12th February, when the meeting was happened during January 22, the council decided, let us increase the scope of peer review even more in light of rising frauds, rising corporate governance lapses in the organization. Institute decided, originally revised peer review statement issued 2021, level 1, level 2, special case, firm's request, client request. That's it. Now in 2022, latest update, not applicable from exam point of view. Even if you're a May attempt or November attempt, not applicable at all. Don't worry. Whether you're a November attempt student or May attempt student, this particular provision is not applicable, but you need to understand the development here. What they said, from 1st April 2022 onwards, okay, firms which have undertaken statutory audit of enterprise whose equity shares are listed at India or abroad, which means if at all you are having a client who is a listed entity, for you compulsory peer review from 1st April. We will not even check level 1, level 2, nothing applicable. That's it. Suppose you are not coming under the stage 1 list. Second phase we will check. You see, I'm not reading this entire point. You read that later. That is about turnover criteria, all that. Okay. Unlisted public company had to satisfying some criteria of capital turnover borrowings. Okay. Or you see here, firms having 5 or more partners any time during the immediately preceding financial year. This is applicable from 1st April 2023. 23 1st April means before means what? 22 23. In the 22-23 financial year, 1st April 2022 to 31st March 2023, if the audit firm is having 5 or more partners, compulsory peer review. Sir, I have not taken single audit also. It's okay, applicable. If applicable, have you taken any assurance engagement? That's it, covered under peer review. Suppose from 1st April 2024, third phase, no 5 partners. Do you have 4 partners at least? Yes, sir. Then you will come under 1st April 2024, compulsory for them. Not even 4. Then if you're having 3 partners or more than 3 partners, 1st April 2025 onwards it is applicable. Suppose if the partners are 4, they will come under third phase. If the partners are 5, they will come under second phase. If they have done listed entity audit at any time, phase 1. So right now this is the trend, mandate, peer review mandate we call it as. But right now we only follow level 1, level 2 criteria. Right now from exam point of view, level 1, level 2, because that is what peer review statement says. Maybe for November attempt in the RTP, if that is included for the November RTP, at that time we may discuss as part of amendments. But until then, whatever I'm discussing in this video, that is only applicable. I hope you understood. Next. Now I will even show you the list of audit firms having peer review certificate. Just a minute. So these are the firms having peer review certificate. You see, these are the firms having peer review certificate. Suppose here you see, you check the actual, I'm filtering it. So okay, level 1 practicing unit. You see here, actually they have got on 8th January. Okay, this itself, let's see, DMA and Associates, 5th February 2019 they got peer review, okay, certificate, valid up to 4th February 2022. It is categorized as level 1. Now let us take another example. So randomly, 7th August 2019, they have got 6th August. You can check in this list, wherever you did articles, no, that firm name you type and check. Now because of some COVID issues, they extended. You see here, level 3 is also there. I told no, as per statement only level 1, level 2, but in reality level 3 is also there. What is covered in level 3? Nowhere it is answered. For level 3, for level 1 peer review is valid for 3 years. Okay, for level 2 peer review certificate is valid for 4 years. For level 3 peer review is valid for 5 years. For level 3 peer review is valid for 5 years. Probably level 3 audit firms were there before 2020. In 2020 peer review statement, only level 1, level 2 were there. After even 2021, which we are discussing right now, only we have level 1, level 2. Maybe before 2020, 3 levels were there for peer review. Firms are categorized into 3 levels. There might be a possibility. Yes or no? Yes. You see here level 1. I mean here itself I will go. So level 1. Now level 2 practicing unit I will just filter. You see level 2 practicing unit 18 to 22, 4 years. Level 3. Once upon a time level 3 was there. Okay, now I think it is not there, ma. Now I think it is not there. You see 2017 to 22, 5 years. For level 3 entity, peer review is valid for 5 years, certificate. For level 2 entity, peer review is valid for 4. Level 1 entity, peer review is valid for 3 years. Now what is the periodicity of peer review? For level 1 practicing units, peer review must be conducted once in every 3 years. For level 2 practicing unit, peer review must be conducted once in 4 years. That is what the latest applicability from exam point of view. I hope you're clear. Level 3 concept is there before 2020 for your information. Next. So what do you mean by a level 1 practicing unit? Which is not a level 2. No, not like that. Let us see what is a level 1 practicing unit. What are the entities that comes under level 2? First we will understand level 1 and then only we can understand level 2. Actually level 2 list is very small, but level 2 list is interlinked with level 1. So first, what are the level 1 practicing units? So when a practicing unit will come under level 1 practicing unit, accordingly for them peer review is mandatory once in 3 years. A practicing unit which has undertaken any of the, remember the word is any, because in the following approximately 10 points are there, any one criteria satisfied, okay, shall be treated as level 1 practicing unit. So what are they? So they have taken under mentioned assurance services. So under mentioned, what are they? Statutory central audit of any bank or statutory central audit of insurance company. If you have conducted statutory central audit of bank or insurance, remember, when will we use the word statutory central audit? You know, when separate branch auditors are appointed for branches, you are called as a statutory central audit. Suppose if separate branch auditors were not conducted, there is no concept of branch audit for such bank. Some private banks, small and medium private banks, there is no branch audit, main audit, no, nothing. Okay, for them statutory central audit, what is not the right phrase? For them we must use the word simply statutory audit. Okay, so where for a particular bank and insurance company you conducted central statutory audit, you are the principal auditor, you will come under level 1 bank or insurance. Suppose there is no branch audit principle, there is no such concept. In such case, we will not use the word SCA, but we will use the word stat audit. Simple. But you are the main auditor. Remember, you are not the branch auditor. You are the main auditor for the bank. You are the main auditor for the insurance company. In such a case, you will fall under level 1 practicing unit. Or suppose you did not fulfill this criteria 1, check criteria 2. Or you did statutory audit of central or state public sector undertakings and central corporate societies having turnover exceeding 250 crore or net worth exceeding 5 crores. If the net worth is exceeding 5 crore, if the net worth is exceeding 5 crore, just a minute, let me check, is it 5 or 50? Let me just once check, ma. Sorry for that, sorry for trouble. Just let me check. I'm little we'll see revised statement of peer review. I'll show you how the revised statement of peer review looks like. You see here, level 1 practicing unit, level 2 practicing unit. Let me check once. So 12th page. Ha, 5 crores only, correct only. Correct only, 5 crores only. Because net worth is so small amount, no? Okay. They use the word net worth, not paid up capital. Sorry. I was confused. Earlier paid up capital criteria was there. Okay, now net worth criteria. Net worth means what? Total assets minus outside liabilities is called net worth. But too less, no? The variation is too less, no? Yeah. So you are doing statutory audit of what? Central or state PSUs and the cooperative societies which are having turnover of exceeding 250 crore, or you are doing stat audit of central or state public sector undertaking. Sir, what do you mean by public sector undertaking? BPCL is a central public sector, central government owned. TSPDCL, Telangana State Power Distribution Corporation Limited, 100% subsidiary of Telangana government. That is a state-owned public sector enterprise. Or central corporate society, only central, not state. Central corporate society or public sector undertaking may be a central government owned or state government owned. Any of them. Turnover criteria, how much? 250 crore. Satisfied? Peer review, level 1 applicable. Turnover not satisfied. How much is the net worth? 5 crore exceeds. Then also level 1. Net worth exceeding 5 crore. Or suppose you did not even did the audit of PSU at all. You did not do audit of central corporate society. You did not do audit of bank or insurance. Check the third criteria in level 1. Did my practicing unit acted as a statutory auditor For asset management company or mutual fund company, if the answer is yes, I am falling under level 1. Suppose criteria 3 also not satisfied, then criteria 4 you have to check. Are you an auditor of listed entity? Or have you done statutory audit of enterprise whose equity or debt securities are listed in India or even abroad? If so also, you will fall under level 1. No, you did not do listed entity audit also. Don't worry, we have 6 more criteria. Criteria 5. Statutory audit of any body corporate, including trust, which are covered under public interest entity. If an entity comes under public interest entity, you did audit of public interest entity. Government, Ministry of Corporate Affairs will define what are all treated as public interest entities. Let me show you right now what are all public interest entities in India. This much in depth are not required, but anyhow, we are discussing them. So, public interest entities in India. See here. So even in the institute is also about to bring the definition of PIE. Public interest entity, you see, the Hindu, there is an article, NFRA. The NFRA, this includes 6,500 companies comprising listed, okay. Same listed entities only, nothing but. Listed entities or companies which are in the process of listing. See, actually there is no precise definition, I think. Precise definition is not there, probably. So if it comes, maybe. Okay, in that case, we need to check this criteria 5, public interest entities. But to best of my knowledge, I think Section 8 companies, NGOs may come under public interest entities. I'm thinking. But it's okay, ignore it. It's debatable, arguable. Or 6th criteria, you did statutory audit of enterprise which have raised funds from public or bank or financial institution or by way of donations or contributions. The word donations or contribution is applicable for Section 8 companies, okay, over 50 crore. See, this criteria is something many companies will fall. Those companies which do not come under 5, other companies will come under 6. Suppose you have an auditor, you have a client, one company client or one entity you have which raised more than 50 crore loans or funds from public bank, FI, or in the form of donations. You are doing audit of that particular enterprise, you naturally called as level 1 practicing unit. Or you did statutory audit of entity having net worth more than 100 crore or having turnover of 250 or crore. Sir, 250 or crore net worth, something we discussed. There we discussed about central public sector enterprise or state public sector enterprise, a central cooperative society. Only for these 3 we discussed 250 crore or exceeding 250 crore turnover, exceeding 5 crore net worth. Here, other than public sector, suppose I did audit of one entity which is not a public enterprise, which is not government company, which is not corporate society, okay, which is not corporate society, but it is having net worth of more than 100 crore, having net worth of 250 crore or more. I did tax audit of an individual. I did tax audit of an individual whose turnover is 250 crore and above. Remember, statutory audit means what? First of all, tell me, what do you mean by statutory audit? Is it only company audit? No. Statutory audit means audit mandatory under law. It may be company law, society law, income tax law, GST law, any law. If it is compulsory audit, we call it a statutory audit. Henna. Next. So, statutory audit of entities which have been funded by central or state government over 50 crore rupee. Suppose you did audit of one enterprise where central or state government is having 50 crore above funding for that particular enterprise. Funding party is the government. In that case also, you did audit of that particular client, you will fall under level 1 practicing unit. Statutory audit of NBFC having deposits of 100 crore and above. Statutory audit of NBFC having 100 crore and above. All other NBFCs which do not come under this criteria, they are coming under, if you did statutory audit of NBFC which are not covered under level 1, they are called under level 2. If you are doing audit of NBFC which is not having deposits more than 100 crore, then you are doing audit of that NBFC rate, you are level 2 practicing unit. Remember, When you will become level 1 practicing unit, 10 criteria, any one criteria affect level 1. No need to check level 2 again. All 10 you failed. Suppose 10th criteria, I am doing audit of an entity which is preparing financials as per Ind AS. No, then you are not level 1. So you see, 10th criteria is so powerful. Suppose your company, your client voluntarily adopted Ind AS. You are doing statutory of that particular client. You are falling under level 1 practicing unit. 10th criteria not satisfied, check 9. Not satisfied, check 8. Not satisfied, check 7. Not satisfied, check 6. Like that, all 10 criteria check. Your audit firm provided assurance engagement. It may be statutory audit. I mean, especially here, what is covered is only statutory. Everywhere it is covered is stat audit. Stat audit, it may be company audit, tax audit, GST audit, whatever. It may be audit under any law, but it is compulsory audit. It may be LLP also. It may be LLP also. You did audit of one LLP, company, individual, partnership firm, AOP, whatever, but compulsory audit. Coming under any of these 10 criteria, you are treated as level 1 practicing unit. In examination, they may ask you straight question. Write about level 1 practicing units, or peer review is applicable for practicing units based on the criteria whether they fall under level 1, level 2. What are the criteria so that a practicing unit will be coming under level 1? Illustrate any 5. Write any 5. Remember any 5. Okay. Try to practice any 5 points at least. See, you should be able to recognize that. If you read twice, once you let me explain level 2 also, then what you have to do, pause the video, just give a single reading to what is there in the level 1 remaining or level 2. Level 2 means what? A practicing unit which has undertaken any of the undermentioned assurance service in the period under review shall be treated as level 2. You are doing statutory, internal, concurrent systems, tax audit, or departmental review of branches or offices of PSU, any bank, insurance. You see, internal audit is also covered. In the above point, only stat audit covered, concurrent audit covered, system audit, tax audit, departmental or review. See, actually, in the above, tax audit word is specifically not covered, but I feel statutory audit includes a tax audit always. Okay, you are doing audit of PSU or bank or any insurance company, so you will come under level 2. Statutory audit of NBFC not covered in level 1. UDINs generated, NBFC is not covered in means what? Actually, you have NBFC chapter, 15th chapter. There I discussed about types of NBFCs. NBFCs are 2 types. Okay, deposit taking NBFCs, non-deposit taking NBFCs. Non-deposit taking NBFCs are again various types, systematically important, non-systematically important. There are so much discussion like this. You will understand in NBFC chapter that point. Okay, for SmartCo students that is not there. Next, UDINs generated by practicing unit more than specified number determined by peer review board from time to time. Till date there is no such number. Okay, third criteria though was there but not in reality. Any other practicing unit providing assurance or other services not covered under the above. Any other, simply if the practicing unit is giving some assurance service, they will come under level 2. Simple. So that's about the applicability of peer review. This is about applicability of peer review. See, in examination they may ask you write about applicability of peer review. You have to write part A and part B only. Level 1, level 2 no need to write. Level 1, level 2 you need to read only when the question specifically talks about that. That's it. So that's about level 1, level 2, all that. What is the concept of peer review board? Okay, peer review board, first question and second question I will discuss last, but not important. Okay, so next one is what? Then we need to discuss about eligibility. Who will be eligible to become as a peer reviewer? Who is eligible to conduct peer review? Eligibility of a peer reviewer. You know what? For upcoming May exam and November exam, I feel this question number 5 is very important. This question number 5 is very important. And even the question number 7, not 6th one, question number 7 is also important. Why? Because these 2 questions contain amendments. Not only these 2, even there is a question called peer review process. I think question number 11. not 11, 12. 12. Even this question was amended. So what are the questions were amended? Question number 5, question number 7, question number 12. These three questions actually contained amendments for the first time applicable from May exams. So important questions. Important questions. So who will be eligible to conduct a peer review? Who is eligible to conduct a peer review? Peer reviewer. Who? What are the qualifications of a peer reviewer? Just a minute. Yes. So who can do peer review? What are the qualifications of a peer reviewer? So they have given qualifications, earlier for December attempt 2021, this question is very complex. The criteria is very complex. Now they simplified it like anything. They simplified it like anything. Lucky May attempt students and November attempt students, very simple. Who can become a reviewer? Sir, I'm a chartered accountant. Can I become a reviewer? No, they have given a criteria. A peer reviewer shall be a member in practice with at least 7 years of audit experience. 7 years of audit experience. Nothing but you must have 7 years of COP. Oh my God. I got COP in actually I qualified in 2015. I got COP in 2016. Probably in 23 year, I'm eligible to become a reviewer. Because only then I'm having 7 years of audit experience. No, only then I can review other entities. But definitely speaking, I can even now go and review. I can figure out what are all the lapses. Only reporting chapter I will focus. 99 lapses I will find. 99% in almost all audit I will find lapses with standards. Fine. Or suppose you are not in practice 7 years continuously. Sir, originally I am a member, sir. I was working in industry. Now moved to practice, sir. For me, is this the same criteria? No. For you, suppose if you are a member, moved from industry to practice, you are currently in practice. If you are already 10 years in the industry and 3 years in the practice, okay, then also you can become a reviewer. Earlier, no, for conducting level 1 practicing unit peer review, reviewer qualification is different. For conducting level 2 practicing unit peer review, my qualification is different. Now there is no such variation. Whether you are doing audit of level 1, whether you are doing audit of level 2, doesn't matter. It doesn't matter. Whether you're doing audit of level 1, whether you're doing audit of level 2, both do not matter. Simple. You want to be on the panel of review? You wanted to be on the panel of review? Yes. If so, are you in practice for at least 7 years and right now you are in practice and past more than 7 years? Yes, enough. You are a reviewer. Just write the test, undergo the requisite training and clear the test. Just to institute will conduct some test examination. If you pass that and if you have this criteria, that's enough. So either A plus C or B plus C. You see ABC points, no? Either A plus C or B plus C. Suppose you're not a person having practice more than 7 years. Are you a member of the institute? Yes. Are you in the industry for 10 years? Yes, I worked in the industry for 10 years. Now you move to practice? Yes. Are you in practice for more than 3 years? Yes. So member in service for 10 years plus CA in practice for minimum 3 plus years. If both these criteria you fulfill, then also you can become a reviewer. Plus you need to satisfy the icai. It will conduct one test. That test you need to satisfy. Next. So now you need to file a declaration. A member, once you are appointed as a reviewer, shall be required to furnish a declaration prescribed by the board at the time of acceptance of the peer review appointment. This is actually called as declaration of confidentiality. All that declaration of confidentiality. Example, sign a declaration of confidentiality as per annexure A. What declaration he should file? He should file a declaration that he is not disqualified. Yes, peer reviewer is also having disqualifications. Example, you see disqualifications. What are the disqualifications of a peer reviewer? Disqualification means what? He's a reviewer, but I am a practicing unit. You are a reviewer. You are a reviewer empaneled on the peer review board. Empanelment. You are a registered reviewer. But for my audit firm, you cannot do peer review. Why? Because a disciplinary action is proceeding. Okay, fine. So here, what are the disqualifications of the reviewer? General disqualifications. What are they? Any disciplinary action or proceeding is pending against you. You cannot do peer review at all. Or you were found guilty of professional or other misconduct by the council or the board of discipline or the disciplinary committee at any time. You originally registered as a reviewer, later you were held up, you were declared as guilty of professional misconduct, some disciplinary action is initiated against you, then also you are boycotted from review. You were convicted by court, it may be within India or outside India, for an offense involving moral turpitude and punishable with imprisonment. Moral turpitude was proved against you and you are punished with imprisonment. You cannot do peer review at all. He or his partner or personnel, means your employee, has any obligation or conflict of interest in the practice. This is regarding to specific. These are specific disqualifications for practicing unit. These are disqualifications of reviewer directly. In these three cases, you cannot do review of any form. Whereas in 4 and 5, suppose in my practicing unit, you or your partner or your staff, okay, there is some conflict of interest with my, practicing unit. What is conflict of interest? Your partner is my brother, conflict of interest, okay, or you have undergone, this is newly added in the revised statement of peer review 2020. It is not there, only in 2021 it is there. Only for May 2022 exams onwards, this fifth point is freshly applicable. This fifth point is freshly applicable only from May examination onwards. You undergone training or undergone articleship under any of the partner of the practicing unit. Suppose, right now ABC & Co Chartered Accountants is a practicing unit. And Mr. Ram, I am the peer reviewer. Peer review board asked me to conduct audit of ABC & Co. I saw ABC & Co partner. One of the partner, no, under him only I am actually article. I cannot do peer review of that form. So this is a specific disqualification. Only for this form I am disqualified. 4th and 5 are specific disqualification. 1, 2, 3. What are 1, 2, 3? For me, a disciplinary action is pending against me. I cannot go for peer review at all. Okay, or I was found guilty of professional misconduct and disciplinary action was already taken on me. I'm not eligible for peer review. Or I was convicted by a court of an offense involving moral turpitude and imprisonment was passed on me. It may be by a court in India or outside India. Then also I'm not eligible for peer review of any practicing unit. 4. One practicing unit. In that practicing unit, me or my partner or my employee personnel have conflict of interest, not eligible. In that practicing unit, under any partner, if I'm an article assistant, I was trained by them, not eligible for conducting peer review. 1, 2, 3 are general disqualifications. 4 and 5 are specific disqualifications for a particular practicing unit. Further, to preserve independence of mind, okay, the reviewer, now tell me, because of review, what happens generally? Tell me. When I go and conduct review with a practicing unit, one firm, I went and conduct a review. Generally, some rapport will develop. Yes or no? Once my review over, I will call them. Hey, do you have any work to outsource with me? Yes or no? A chartered accountant can solicit work from another chartered accountant, correct or not? So there is a possibility of that kind of connection. So I will ask this firm, hey, I will give you complete unmodified opinion. Okay, you give me one client tomorrow. Like that, I can have some sort of interaction, correct or not? So for that, a reviewer shall not accept any professional assignment from the practicing unit for a period of 2 years from the date of appointment as a reviewer. Further, he should not have accepted any pre-professional assignment from the practice for a period of 2 years before the date of appointment. Suppose today I was appointed for the practicing unit. In the last 2 years, me and that practicing unit did not work on a particular assignment together. We didn't have any connection. Once peer review is completed, 2 years, I should not take any work from them. In future, 2 years, and in the past 2 years, na bhuto na bhavishyati, for 2 years. Simple. I hope you understood. Major important provision of the peer review we discussed already. Question number 5 and question number 7, very important, mark. So let's start the continuation. So in the previous session, we discussed comprehensively what is peer review, concept of peer review we understood, few definitions we understood, and we understood eligibility for peer reviewer and applicability of the peer review on the audit firms that we have seen level 1, level 2. And I told you, as per the latest 2022 February notification, Peer review is going to be mandatory irrespective of level 1 and level 2 as per the peer review mandate, and of course that's not relevant from exam point of view. Then another concept where there is a major amendment in the peer review is question number 12. See, suppose you are listening for the first time the auditing class, the CA final. For you, you need not worry whether is it amended or non-amended. But those who are watching repeatedly, like those who are a repeater, okay, especially those who have taken the coaching before December 2021 or before January. So especially for them, this is an important thing. And one more observation, whoever is watching this video, especially from edition 1 student, okay, this question is important. Question number 5 and 7, question number 5 and 7 and 12 of this material 2022 is important. By the way, those who are of edition 1, these 3 questions were given in the bridge material. For edition 1 students, I'm just telling you this is given for in the bridge material. Okay, fine. Now let's continue. What is the process of conducting the peer review? We understood to whom it is applicable. We understood who can conduct peer review. We understood the concept of peer review board. So now let's understand what is the process, comprehensive process of conducting peer review. Now, first of all, what is the authority having power to order for peer review? Peer review board. The peer review board is the one which is having authority, okay, depending upon level 1 or level 2, depending upon level 1 or level 2 to order for peer review. What peer review board will do? Peer review board will take database of the registered firms. Peer review board will take the database of the registered firms that are there in India first. Then they will send an intimation. This is first time. I'm talking about the first time, for the first time when the firm is liable for peer review. Suppose I recently incorporated the firm having 5 or more partners, let us assume. Okay, and we have done the audit of some listed company in the first year of practice itself. Yes, maybe I am having exposure in so many firms and my friends are also having exposure. We all together now formed a new firm. Ours is a new audit firm. Hardly we just crossed 1 year. This is our second year of practice. Now how we will be liable for peer review? Yeah. So peer review board will take database of the firms that are registered with ICI, sole proprietary partnership, LLP, whatever. They will send an intimation to us. First they will send an intimation that you are liable for peer review. And the peer review board, now you may immediately get it out. Sir, how can peer review board will send an intimation without knowing whether I fall under level 1 or level 2? First they will send a normal intimation. Give us a declaration whether as per the revised statement of peer review, are you liable for peer review or not? Give us the declaration. If so liable, are you a level 1 category or level 2 category? That declaration also you should give. So first peer review board will send an intimation to practicing unit about the intention of conducting peer review. Suppose I am already subjected to peer review. Already peer review board has conducted peer review on me already. Now that time what happens, second time, third time onwards, they will not ask me whether I am liable for peer review or not. They will straight away send an intimation from so and so date onwards, peer review is going to start. We wanted to order peer review on you from so and so particular period. Okay, so that's how they give intimation. But for the first time, they will give you an intimation seeking, are you liable for peer review or not? You need to give a declaration. Understand? I hope you understood. Now peer review board, once upon a time, I'll tell you a very important incident. Once upon a time, before 2019, I'm talking about the situation before 2019, I'm a practicing unit, correct? What are the assurance services I am providing? Who are all my client list? Nobody will know. Even Institute of Chartered Accountants of India doesn't know that. But today, there is a directory called UDIN directory. And you remember in even SEI 700, we discussed in audit reporting chapter, for every certificate and report given by a chartered accountant, we must attach UDIN number to it. UDIN is a directory of ICI, yes or no? It's one of the sub-wing of ICI. Now, the ICI has the knowledge of what are all services you are providing, what are all certificates, what are all reports, what are all assurance services that you are providing, yes or no? Today, the institute has knowledge. Indirectly, that information, what UDIN directorate will do? UDIN directorate will give to peer review board. So today, peer review board, they can, based on the UDIN directory information, they can identify what are all the practicing units are conducting audit of level 1, what are all the practicing units conducting or falling under level 2. UDIN directory is already having the data. So first, they will send an intimation to the practicing unit about you are selected for peer review. Okay, what practicing unit shall do? By the way, one important observation. Entire peer review process shall be conducted within 60 days of this intimation. The moment peer review board send an intimation to the practicing unit that the practicing unit is liable for peer review, from the date of sending that intimation, within 60 days, peer review should be completed. Yes, within this time, peer reviewer shall be allocated by review board. The reviewer shall go to the practicing unit, verify all the quality control practices, compliance with technical, professional, ethical standards, all that, and then submit his peer review report to the board. So all this entire thing should complete within 60 days. Earlier it was 90 days and now it is simply 60 days. Now, so first, peer review board will send an intimation to the practicing unit. What practicing unit shall do now? Practicing unit, first peer review board will send an intimation. Now what practicing unit has to do? Second step, they have to submit a declaration. Practicing unit has to submit a declaration plus, answers to the questionnaire. Peer review board, while sending the intimation, they will also send a questionnaire. Questionnaire means what? Peer review board will have a list of various, peer review board have designed some questions. Okay, so all that questions they will ask. What questions? Example, I'll tell you. What is the name of the firm? Okay, who are the partners? How many articles? How much other paid assistants and all? What is the number of years experience of the firm? What are all the reorganizations happened, like admission of partner, removal of partner, death of the partner, all that. And who are all the clients of the firms, where and all they provided assurance engagement, past 5 years IT returns, acknowledgements and turnover, all so much entire firm data they will ask. Questionnaire, they will send a questionnaire. Now you and me, what we are practicing units, what we have to do? We need to send a declaration declaring, are we falling under level 1, are we falling under level 2? So we need to give a declaration. Along with that, we should also send back, they asked us a questions list, what we need to do? We need to reply to that questionnaire. So we need to reply for the questionnaire. So we need to send back the questionnaire given by them along with our replies plus declaration. Once peer review board get the declaration, what they will do? Now peer review board, they got the declaration, no? In that they will understand whether you are a level 1 or level 2 based on all that. Peer review board will select 3 reviewers. Peer review board will select 3 names. 3 reviewers names they will select. These 3 reviewer names peer review board will recommend to practicing unit. So peer review board will recommend 3 peer reviewers name to the practicing unit. Now the practicing unit, within this 3, select one reviewer. Practicing unit shall select one reviewer and intimate about his name to the peer review board. Peer review board select 3 reviewers and intimate that those 3 people named to the unit firm. The firm will select one name and intimate back to the peer review board. Okay, fine. Now what next? Okay, one reviewer is selected by. So one reviewer is selected by practice unit. Let us assume Mr. A. He is a peer reviewer. Now peer review practicing unit selected Mr. A to peer review board, intimated to peer review board. Now what peer review board? Peer review board shall go and ask Mr. A. Mr. A, I am appointing you as a peer reviewer for practicing unit XYZ & Co Chartered Accountants located at Chennai. Let us assume. Now this fellow has to give his consent. Only when the reviewer also accept, then reviewer will go. Is it compulsory that reviewer should accept? No. Mr. A will give consent. Now you might get one stupid doubt here again. Okay, not so stupid doubt, but generally our curiosity. Okay, what if sir he didn't agree? Again process restart, simple. Okay, so fine. Mr. A will give his consent. Once consent is given, that for that practicing unit XYZ, Mr. A will be allocated as a peer reviewer. Peer review board will send an appointment letter to Mr. A as a reviewer to the practicing unit XYZ. So he was appointed in 22-23 year. Let us assume which means period under review is what? Preceding 3 years, 21-22, 20-21, 19-20. These 3 years are periods under review. Getting it? So in the 22-23 he was appointed. Now he was appointed. Now what is the next process? Next step is what? Reviewer is appointed. Now there is no more board involvement. Now onwards the discussion is between the reviewer and the practicing unit. Now reviewer, once again the practicing unit, he is appointed. No, reviewer, peer review board will intimate them, a practicing unit, Mr. A is appointed as you requested. He was appointed. Finally it is over. Now Mr. A is your reviewer. Now once the practicing unit got the intimation from the board that Mr. A is our reviewer, what practicing unit shall do? Practicing unit shall forward copy of questionnaire. Questionnaire means what? Already at the time of first step, practicing unit already gave questionnaire to the board. No, answered all the questions. No, that answers forward once again to peer reviewer. Forward once again those answers to peer reviewer. Now peer reviewer first will go through all that questions, entire information, all that. Then peer reviewer will do an on-site visit. What is on-site visit? Peer reviewer will directly go to the practicing unit premises and do all that peer review as per the guidelines and instructions and the training given to him. Once review is over, first what peer reviewer will do, first he will prepare preliminary report. What is it called as? Preliminary report. In that, what are all the deficiencies, problems, all that weaknesses identified, that preliminary report he will forward to practicing unit. Dear practicing unit, these are the problems. By the way, one important observation, on-site visit we said, right? For how many days they can do on-site visit? Maximum 7 days. Earlier on-site visit is 15 days maximum, but now it is restricted to 7 days. Institute want to make peer review process simple, not burdensome. Okay, earlier the process is 90 days and now it is maximum 60. Moreover, on-site visit, a reviewer, practicing units are always busy. You don't go and disturb them. Make 7 days only. Before you go for 7 days, first take the questionnaire answers, all that, study about that practicing unit completely in the back end. By sitting in your office, study entirely. Then plan 7 days visit, plan your peer review, and then do a 7 days visit maximum. Okay, once after you did 7 days visit, checked everything. Okay, now prepare a preliminary report, send it to the practicing unit. Come back to your office, prepare a preliminary report and send it to the practicing unit. Now practicing unit will give some replies. Practicing unit will give some replies to peer reviewer. Okay, practicing unit gave some replies, all that. They are rectifying some loopholes immediately. Some loopholes they will rectify later. So something they would have given. 99% of the cases, practicing unit will rectify 90% of the loopholes immediately within the time itself. Yes. Practicing units will immediately establish policies if at all they are missing something as per the knowledge of the peer reviewer, as per the observation of the peer reviewer. Okay, now they rectified and replied. They rectified and finally replied to peer reviewer. Now peer reviewer, what he need to do? What peer reviewer has to do? Preliminary report plus reply of the audit form, nothing but practicing unit, and based on these two, prepare a final report, and all these three submit to peer review board. What you need to do? Submit to peer review board. Now peer review board finally will issue a peer review certificate to the practicing unit. Peer reviewer job is to go work, prepare a report and give it to board. The board will ultimately issue a peer review certificate. Suppose in the final report, if the peer reviewer gave a modified opinion that practicing unit policies are not good, so like again here he will also have similar to like unqualified, qualified, adverse, similar to that. Suppose if the peer reviewer gave an adverse opinion about the practicing unit compliance standards, qualities, quality control standards, all that, he gave adverse opinion, in such case what happens, peer review board will not give peer review certificate. If it is qualified or unqualified, minor only, in such a case they will issue certificate with recommendations. If it is a major objections raised by reviewer in the final report, in that case peer review board will not give peer review certificate. And what they will do, peer review board, your practicing unit, you are not following all the standards, you are not adhering to the policies, I am warning you, if you repeat it next time, I will recommend you to disciplinary committee, that you are not following the guidelines of the institute. It's a violation under schedule 2 part 2 of the professional ethics, code of ethics of the ICI. You are violating it. So we will give a warning, and recommendation, and what we will do, within next 1 year, okay, we will order follow on review. I am giving you 1 year time, rectify everything. Within 1 year, once again a reviewer will come. Okay, whether this fellow will come or somebody will come, I will decide that time. Once again we will conduct review within 1 year. Suppose if it is so material, if the practicing unit is very important, okay, it is dealing with very sensitive clients, 1 year time limit can be reduced to 6 months, but it cannot be less than 6 months. Follow-up review shall be conducted within 1 year. It can be conducted even less than 1 year, but not less than 6 months. Minimum 6 months time you should give, so that they will rectify all the policies, procedures, everything. Okay, so that is a follow and review. This is what the entire peer review process. Simple. Over. So what are all included here? What are all the steps included? First, there is a planning, execution, and reporting. Above all, before all this, appointment, preliminary. So these are the stages that are involved in peer review process. Entire question I explained. Only thing is reading is pending. Let's read. There are some days time limits given. So in this question, so be careful. So first one, appointment of the reviewer, selection of practicing unit and appointment of the reviewer. That is the first step in the entire peer review process. What is the first one? First, notify the practicing unit. Then practicing unit will give a declaration. 3 names of the reviewers shall be recommended. Select one reviewer. Take the reviewer consent. Okay. And then appoint that reviewer. That's it. So now let's see. Side headings are given by me. If you look at the main ICI material, you will not find all the side headings and all. In entire this book is exactly nothing but, I'm honestly saying, copy paste of ICI material. But it is refined with multiple times reading and adding side headings, giving a meaningful outlook. Next. A practicing unit which has been selected for a peer review shall be notified by the board. Okay, first notify. A detailed declaration cum questionnaire in the form approved by the board shall be submitted by the practicing unit within 7 days of date from the date of receiving the notification from the board, so that reviewer to be allotted from panel of 3 reviewers can be identified by the board as per declaration cum questionnaire. So first notifying the peer practicing unit. Practicing unit shall submit a declaration and questionnaire. Based on this, within 7 days they need to give us the reply. Based on this, 3 reviewers we will select. Name of 3 reviewers shall be recommended by the board to the practicing unit so selected. From the among 3 names, practicing unit shall select 1 out of 3 reviewers and intimate to the board within 7 days of receipt of the name. Again, here also 7 days. Here also 7 days. The board shall intimate the reviewer so selected and get his reply within 7 days. You see, here time limits are given only for the other parties, whoever is replying. There is no time limit given for the board. Board can reply whenever they want. You see, suppose originally practicing unit was given, peer review board have gave notice to practicing unit. Is there any time limit? No. Now practicing unit shall reply to the board, right? There is a 7 days time limit. Based on this, peer review board will again reply to practicing unit 3 reviewers name, right? Is there any time limit? No, because here board is doing. Whenever board is doing something, there is no time limit. But whenever other party has to reply, there is a time limit. Observe. Okay. Now, practicing unit shall select one reviewer name within again 7 days. You see, intimate to the board within 7 days. Once board got intimation, they will have to notify the reviewer. No? A reviewer, XYZ selected you. I need to inform the reviewer. What is the time limit that board shall inform? No time limit. So the board shall intimate the reviewer. What is the time limit? No time limit. But reviewer shall reply within 7 days. Seek his consent within 7 days. Getting it? Once board send him, he will reply within 7 days whether he is okay or not. Simple. Okay, next. It's always for the people, no? The time limits, conditions, rules, not for the authorities. Next. So once a reviewer is allocated, reviewer is selected and allocated to a practicing unit. What is the next process? Planning. On intimation by the board, the reviewer's consent of the reviewer consent, the practicing unit shall within 2 days furnish the following information. So board, no, they will inform to practicing, hey, dear practice, congratulations, you selected Mr. A, no, he agreed. Once we intimate that practicing unit, what they need to do? They need to send within 2 days to the reviewer, copy of completely filled questionnaire which is already submitted to the board, and details of any proceedings against a practicing unit or partner or assistance by any regulatory monitoring enforcement bodies related to investigation or allegation of deficiency in the conduct of test functions by them during the period of 3 financial year preceding that period of review or at any time thereafter till the submission of questionnaire. Very simple. Very simple. I was selected for peer review in 22-23 financial year. Let us assume. What are the years subjected to peer review? Past 3 years. Within this 3 years, what are all the pending proceedings were there? Details of only proceedings, proceedings against the practicing unit or partner, whatever, okay, taken by any regulatory authorities, whatever cases happened, whatever pending proceedings were there in the past 3 years, until you submit questionnaire, no, whatever proceedings were there, you should once again inform to peer reviewer. But you know what? In the questionnaire, it is already embedded. In the questionnaire, it is already given as part of it. But they're just saying once again as a separate point. Now, information to be furnished by peer review board. The peer review board shall call for relevant information from UDIN directorate and share concerned details with the reviewer. Reviewer, this is our insider data. They gave a declaration and answers in the questionnaire. Fine, we can't completely trust them. From UDIN directorate, I brought this data. Take it, use if you want. So we will give reviewer backend information, our sources of information. Now, what reviewer shall do now? Now reviewer shall plan the work. Now you see here, from here it is important, little important. Selection of sample by reviewer. This itself can be asked as a 3 marks question. Write about selection of samples by reviewer in the case of peer review. The reviewer shall, within 7 days of receiving the information from practicing unit, the moment practicing unit gave him, questionnaire, copy a questionnaire plus pending cases list, all that, within 7 days, select a sample of assurance services that he would like to review and intimate the same to the practicing unit and the peer review board. This selection will happen off-site. This selection will generally happen off-site. What is meant by off-site? Not on-site. Now, as a reviewer, I have not yet visited. I didn't go to their location firm. I have not yet visited. Before that, I got the questionnaire. I got all that. In that questionnaire, UDIN data, entire thing I have. Now I know what are all the assurance services. Suppose the practicing unit is providing 100 clients. They are having 100 clients where assurance services are provided. I will select a sample. Sir, how many samples you can select? It depends upon various factors. Like the number of assurance service engagements to be reviewed, the number of samples, assurance service engagements to be reviewed. The practicing unit provided to 100 clients. Okay, for 3 years, 300 years related files were there totally. 300 files were there totally. Now out of these 300, how many samples I should review, how many samples I should select, depends on various factors. It depends upon quality controls prevailing in the firm. They have given me originally data, how quality control is, size and nature of the assurance service engagement depending upon the client size. Methodology adopted by practicing unit in providing the assurance. What is the methodology they follow while providing? What is their work culture, work methods? Number of partners, number of members involved in the assurance engagement, number of locations or branch office of the practicing unit, what is the fees charged or fees received, and what is the GST paid by practicing unit, based on so many factors. Okay, suppose if the quality control of the practicing unit is not so great, I will select more number of samples. Same like risk assessment you learned at CA Inter. Okay, when the risk is very high, we will select huge sample. When the risk is very low, we will select less number of samples. Now, the size and nature of assurance engagements. Okay, what are the client size? If they're handling very big clients, risky clients, more number of files we will select. Methodology adopted. What is the methodology? Are they following a scientific, systematic, disciplined approach? If so, take 2 or 3. Otherwise, take 4 or 5. Number of partners, huge, so many partners were there, so many members are involved in designing and providing the professional services. Since many members are involved, care would have been taken. Take less number of sample. Members are not involving, only one partner is there, only 2 or 3 partners. Entire work is handled by articles. No proper, review, no proper monitoring. Take more samples. Number of locations, firm is operating from multiple locations. Take more samples. Fees charged, they are charging high fee. Okay, or they are charging lesser fee. Why they are charging lesser fee? Why they did not comply with the minimum scale of fees norms? Based on that, depending upon their professional judgment, he may select more number of samples also. Now, from the initial sample selected, the reviewer, in consultation with the peer review board, may reduce or increase the initial sample size of assurance services. So once the peer reviewer selected sample, he has to inform to board once again. Dear board, I have selected 10 assurance engagements provided by them in the past 3 years. These assurance engagements I am going to check under peer review. I will go for on-site visit, right? That time I will check all this. I intimated to the board. Board said, hey, why 7 and all not required? 4 only stick to only 4 items. Then I may reduce. If the board said why 7, increase it to 10 or increase it to 12, then I may increase it. Able to understand. So now again coming back. So the reviewer within 7 days, okay, after receiving the information from practicing unit, select a sample of assurance services. How many samples they should select, we understood in the execution path. Okay, and that he would like to review and intimate the same to practicing unit as well as to the board. Now board can either increase it or can decrease it. The reviewer may also seek additional clarification from the practicing unit on information furnished and not given, information given by them as well as information not given, why they have not given all that. The reviewer, after observing all the samples which is selected, after replies from practicing unit and peer review board, everything, after considering all that, plan an on-site visit or initial meeting in consultation with the practicing unit. The reviewer shall give practicing at least 5 days time to keep ready necessary records of the selected assurance. So first I will intimate them, hey, these 10 clients I want to verify. These 10 clients related financially 19, 20, 21, 22, 22, 23 related assurance engagements I want to verify. Make everything ready. I should give him at least how many days time? 5 days time. The reviewer and practicing unit shall mutually cooperate and ensure that entire process is completed within 60 days from the date of notifying the practicing unit. From the date when the peer review board intimated me that I am liable for peer review, no, from that date within 60 days. You see the time limit, if you observe, total time limit is what? 60. Within this 60, 7 days time will go for the practicing unit to give a questionnaire. Again, board will take 1 or 2 days, let us assume. Okay, so board will take 1 or 2 days. Let us assume board is taking 2 days. This peer review board. Okay, by the way, I'm telling you board. Okay, so this time we don't know how much time they will take, but let us assume they're very fast, 1 or 2 days. Now, board will again recommend 3 panel names. Within that panel names, within 7 days, peer review board will select one reviewer. Again, that information they will forward to reviewer. Peer review board will forward to reviewer shall give consent within 7 days. Now you remove all this. 321, almost 24 out of 60. If I reduce 24, 36 days time we have. Now after this 36 days, practicing unit shall within 2 days inform to peer reviewer, questionnaire, all that. So 34 days. From here, reviewer shall verify all that. Some 3 days he will take, 31 days. From here, reviewer shall give 7 days time. Sorry, 5 days time minimum. Minimum 5 days, so 26 days. Okay, firm is having finally 26. Within this 26, some 7 days maximum will go for on-site visit. Balance days 19. Getting it? So after this, only within the next final balance 10 or 15 or 20 days, reviewer will finalize the report and forward to the peer review board. See how the days are like. No need to remember this much in depth, not required. I'm just telling you how the days were calculated, not required in this depth. Now, so this itself can be asked as a question. Be careful. Selection of sample by reviewer. This itself can be asked for direct 3 or 4 marks question. Next, execution. What will happen in execution? Okay, what happens in execution I'll come back and read. Once on-site visit, everything is done. Once on-site visit is done, what will happen finally? The peer reviewer should state how the system of quality control for the assurance services of the practicing unit for the period under review that have been designed so that they will carry out assurance services in the manner that ensure compliance with technical and professional. So peer reviewer, what is the objective of peer review? He shall state how the practicing unit complying with the system of quality control so that assurance services provided by them are complying with technical, professional, ethical standards. This point he shall address in his report regarding compliance on the following areas of the control. Compliance or otherwise. Otherwise means non-compliance. Either compliance or non-compliance on independence, how the practicing unit is following independence norms, how they're maintaining professional skills and standards, how they're taking consultation from outsiders, experts and all, how is the recruitment, supervision and development, how is their office administration. This is completely they're focusing on system of quality control. Okay, so they will report this. The objective of reporting is once again given in this first point, and what they report this is given in second point ultimately. Now, after completing on-site review, the actual process is now the reviewer, before making his final report, means which report here? Final report. Before making his final report, shall communicate his findings in the preliminary report to the practicing unit if, in his opinion, the system's procedures are deficient, non-compliant with reference to any matter which noticed by him, or if there are any other matter he want to get clarification. So first, after you finish on-site visit, communicate your whatever your observations, deficiencies or any other matter you want to, okay, in a preliminary report to the practicing unit. Now the practicing unit shall within 5 days after the date of receipt of the findings, nothing but preliminary report, make any submission or representation in writing to the reviewer. In writing. So that is what I call it as response to preliminary report. So again 5 days time is given. Out of 19 you need to reduce this 5 volts again. Then it comes to 14. And then finally, once a practicing unit give me preliminary report, once a practicing unit answered me on preliminary report, now what I will do? Once on-site review is completed, if the reviewer is satisfied with the reply received from the practicing unit, he shall submit a peer review report to the board along with his initial findings. Here I can say peer review report, within bracket you can also call it as final report. And at this point, now you can strike off my repetition. If the reviewer is satisfied with the reply received from the practicing unit, he shall submit a final report, nothing but peer review report to the board along with the initial findings, nothing but preliminary report, response by practicing unit and manner in which response submitted. How okay they replied, what you felt about the reply. And preliminary report you have so many objections, in final report they were not there, so you were convinced with the reply. What is that convincing? What are the convincing factors? You need to explain to the board, and a copy of the report shall also be forwarded to the practicing unit. So what peer reviewer shall do, he will submit a preliminary report to the board, response given by practicing unit, what is his comment on the response, and a final report to the board. Suppose even after getting the reply, if the reviewer is of the opinion that response by practicing unit is not satisfactory, the reviewer shall accordingly submit a modified report to the board incorporating his reasons for the same. The reviewer shall also submit initial findings, a preliminary report, a response of a practicing unit, and the manner in which responses were dealt by you, and a copy of report shall also be forwarded to the practicing unit. In case of modified report, the peer review board shall order for a follow-on review after a period of 1 year from the date of issue of report. Actually, I told within 1 year at the time of beginning explanation. It's actually after 1 year. But actually immediately 1 year is over, immediately they'll conduct. If the board so decides, the period of 1 year may be reduced, but shall not be less than 6 months from the date of issue of the report. Okay, after a period of 1 year, nothing but they will give 1 year time. Okay, a review, a practicing unit. Our reviewer identified so many problems in your quality control practices, compliances with technical professional standards. We are giving 1 year time. Within this 1 year, you are going to provide new services, right? For those services, implement all the recommendations suggested by our reviewer. After 1 year, we will come and check you once again whether are you following or not. If at all after 1 year also you're not following, we will recommend about you to the disciplinary committee. With that warning, we will give this time limit. That's it. So that is about a peer review process completely. So what happened here? Just tell me, just a minute. So what happened here? Once I will just as a whole I will just put as a diagram. I think now you will understand better. Execution not yet discussed. I will discuss execution right now. First, step number 1, peer review board will notify to practicing unit. Okay, this is notifying, and from this date within 60 days, entire process shall be completed. Correct, entire process shall be completed. Now step number 2, what happens? The practicing unit shall submit a declaration to the peer review board. Declaration plus questionnaire. Okay, based on this, what is the time limit? 7 days. Now step number 3, the peer review board shall intimate to practicing unit based on the declaration 3 reviewers names. Sorry, 3 reviewers names. Okay, now step number 4, what practicing unit shall do? Practicing unit shall intimate to peer review board, okay, within 7 days. Okay, what they need to intimate? Select 1 reviewer. Okay, now what peer review board now shall do? What peer review board now shall do? Step number 5, peer review board now intimate to reviewer about the selection, about selection by practicing unit. Now step number 6, the reviewer shall inform to peer review board what he need to inform? Consent. What is the time limit again here? 7 days. Once he informed the consent, peer review board, step number 7, peer review board shall inform to practicing, unit about finalization of reviewer. There is no time limit. Now what is the next step? I hope you are noting it down. Take a screenshot or take a photo with your phone. Step 1, 2, 3, 4, 5. Later you record. Step 5, 6, 7. I hope you record it. Take a photo. Now step number 8. Now I am a practicing, I got information. Now within 2 days the practicing unit shall forward to peer reviewer a copy of questionnaire, all that, plus declaration about pending cases, all that. What is the time limit? 2 days. Okay, so now peer reviewer, what step number 9, peer reviewer will get some data from peer review board, UDIN data. After getting all this, within 5 days, so 5 days or 7 days, just let me check once. Sorry, 7 days, correct, 7 days. Within 7 days, peer reviewer within 7 days, okay, peer reviewer within 7 days, step number 10, within 7 days inform to the practicing unit of sample of assurance engagements which are being selected under peer review, Now and within 7 days they should inform them. Now peer practicing unit, they will wait for minimum 5 days and make arrangements for the reviewer. Peer reviewer shall inform within 7 days and tell them from the date of receiving the information, minimum 5 days I will give time. Please gather all the documentation relating to that sample. Then I will plan on-site visit. 7 days is a maximum on-site visit. After completing on-site, I will come back to my office. Then I will prepare a preliminary report and forward it to the practicing unit, and they will give me a reply. And based on that, I will prepare my final report, preliminary report, their reply, my comments on their reply, and my final report shall be given to the board. In case of modified opinion, board will offer follow-on review after 1 year. Exceptionally, it can be reduced up to 6 months, but not less than 6 months. That's it. Like, tell me, what are all the remarks that a reviewer can give? What kind of remarks the reviewer can give generally? What are the remarks that he will generally give? Example of qualifications by the peer reviewer on the practicing unit. First example, like practicing unit does not have any documented policies for its system of quality control. I'm telling you, 70% of the audit firms that are practicing unit do not have this. Do not have. Many of my friends who are practicing, they don't have any documented system of quality control. Only medium and above medium sized firms and big 4 entities or big 5 or big 10 entities, they are having documented quality control practices in accordance with SQC1. In view of this, it was not possible for us to evaluate compliance with the quality control. We did, however, make specific inquiries of managing partner with regard to policies implemented with regard to various elements given in the standard. On an overall basis, it was found that policies implemented was rudimentary and not commensurate with the size of the practicing unit, nature of the practice. There were particular deficiencies in establishing and implementing quality control policies and procedures in the area of ethical requirement, acceptance and continuous of client relationship. They are blindly accepting whenever a new client comes. Or another example. The practicing unit has no practice of documenting samples selected for test of details. What audit procedures were applied to test the samples or outcome of such testing if performed? They are not documented. They are going and working but not documenting. The only document that evidence performance of test of details are query sheets. Only query sheets, audit notebooks, nothing but. In several instances, it is observed that queries were raised, but there is nothing to evidence to show how they were resolved or disposed of. That is a violation of ACA 230 documentation. That's a violation of ACA 230 standard. You see here, we are not saying the query, they received response, the response was not given in the report. No, we are not saying. We are only identifying procedural lapses. Another example. During the review of one of the audit file, it was found that entity's current liabilities were in excess of current assets by several multiples. The entity had made cash losses during the 3 years and accumulated losses were 5 times of the share capital. In spite of this, this clearly shows going concern is violated. In spite of this, there was no evidence in the audit file of the engagement team evaluation of going concern assumption. SA 530 principles they didn't. We are only saying SA 530 principles they didn't apply. Suppose if they applied and take a decision, material uncertainty, some decision is they have taken. We are not commenting on that. We don't have any right to comment. We are only saying SA 530 they didn't follow. We are only saying SA 530 they didn't follow. While the financial statements were prepared on going concern basis. So like the 2 more qualifications, I hope you will read and understand. Okay, I'm not reading those 2. So that's it. Sir, now tell me what happens in the on-site review. What happens in the on-site review? On on-site review, what happens? Peer review visit, nothing but on-site visit, sorry. Peer review visit, nothing but on-site visit. Peer review visits will be conducted at the practicing unit head office or branches or any other location wherever they are operating. This on-site review should not extend beyond 7 working days based on the size of the practice, maximum 7. So what we will do? We will do as a reviewer, I will just first focus on general controls. Okay, how is their independence related controls? How are they maintaining professional skills and standards? How is their outside consultation? How is their stack recruit? Remember SQC? SQC standard, if you recollect, SQC, firm should have policies and procedures for independence. Firm should have policies and procedures for skills development, standards maintenance, all that, consultation, staff recruitment, office administration. They should have all that. And firm should periodically inspect and monitor them. Remember, they should have policies for monitoring as well, as per SQC1. We will check whether they are available or not. So the reviewer is required to carry out a compliance review. What is compliance review? We review whether they complied with SQC1 or not. General controls for evaluating degree of reliance to be placed upon them for effective review. So how far their system of policies, a system of quality control, policies and procedures, so that number of samples I will decide. Number of actual audits should be selected for peer review. I can decide based on the compliance review of general controls. If the reviewer got higher satisfaction here, he will select 3 or 4 samples of audit engagement. Suppose that the reviewer felt here 0, I will select 15 files. Next, then selection of engagement based on the compliance review of general control. Then finally, based on this, I selected some 10 samples. What is 10 samples? Practicing unit in the 3 years provided 100 attestation services. Let us assume out of 100, 10 services I will select. These 10 services belongs to 5 or 7 clients or 10 clients, different clients. We don't know. Now the reviewer is required to adopt a combination of compliance approach and a substantive approach in the review process. Now records you are going to take, right? Now apply compliance approach. What is compliance approach? Look at the records. Assurance service records. What records they are maintaining? Permanent audit file, current audit file. Okay, so income tax file separately, ROC file separately. Look at administrative process of that and evaluate system of internal controls. Okay, evaluate the system of internal controls. Substantive test. So how practicing unit evaluated compliance, how practicing unit performed compliance procedures. Substantive test, what they performed. How financial statements presentation disclosure and what are their conclusions. This is actually 6th point. This is actually 6th point. And finally, what is the reporting? Whether the reporting is as per SA 700. What are the conclusions? Do they take into account SA 450? How the presentation disclosure, applicable financial reporting framework followed by the client. Okay, all this. And review actual working papers in order to establish what is the extent of compliance assurance work has been carried out as per technical, professional, ethical standards. I don't think execution process they will be testing much, but please read 3 times at least. You will understand better. Please read 3 times. They may ask you, write about peer review visit and compliance review of general controls. This is one important question. This is important question. And this itself, what is the selection of samples by reviewer under peer review? What are the factors? This itself can be asked for 4 marks question. Look, I am explaining what are all the possible ways how the questions can be tested. Then write about review of records. This itself can be asked as a separate question for 4 marks. Write about review of records by peer reviewer at the time of execution of peer review. This itself can be asked as a separate question. So welcome to audit under fiscal laws. This is actually a 0 video. This is actually a 0 video which I am doing for edition 22 students. Edition 22 students, which I am also going to use for amendments video, which I'm also going to use for amendments purpose for edition 1 students as well as for YouTube upload. Fine. For all my edition 22 students, I have given my edition 1 fiscal loss recording to you. Actually, if you open part 1 onwards, you will get edition 1 fiscal loss recordings. You know, edition 1, like one more thing, those of you who actually wrote an attempt in December and you're going to write once again in May 22, for you the latest ICA edition 2021 October edition, November edition of ICA material will be applicable. And right now what you're looking at this is November 2022 ICA latest edition, October 2021 ICA latest edition material applicable for May 22 exams and November 22 exams. Now, sir, what are the amendments in audit under fiscal laws? If you check earlier, we have audit under direct tax law and we have audit under indirect tax law. And now audit under indirect tax law is completed. Is removed. audit under indirect tax law is removed completely. Even last time itself for December exams, I even confirmed it. Last time itself, I told to all my December attempt students also not to refer audit under indirect tax law. But anyhow, it was later removed because IDT audit, GST compulsory audit is already removed. Now, only one audit under fiscal laws is income tax audit, audit under direct tax law, for which a brief introduction, detailed explanation is already available in part 1 video onwards. Now in this video, I'm only highlighting you what is the amendment that took place. Please take a note. Edition 22 students, what you have to do? Very simple. Download from ICI website 12th chapter. Download 12th chapter from ICI website. From which folder? May 22, November 2022 applicable material folder. Download this material and keep that material and watch my classes. Simple. Now you will find changes only at here. Like you are now reading updated amended material. Okay. Edition 1 students especially, or whoever is watching this video on YouTube. Okay. For you, the only change is this one, 10 crore. Earlier it was 5 crore. Sorry. Earlier it was 5 crore and now it has been revised to 10 crores. Earlier it was 5 crore and now it has been revised to 10 crore. That's one change. Literally speaking, entire income tax law audit, there is no change at all except year change. Because see, if you check November 20 edition material, November 2020 edition material, they used assessment year 2021 in all the examples. Whereas in October 2021 edition, which is applicable for May 22 attempt, November 22 attempt, they used assessment year 21-22. That's the only difference in the example. Every illustration, every example, every concept example, whatever is used in the old material as well as the new material, this one is exactly same. And one more thing, there is a change is clause number 36 is removed. Like one change is 10 crore. Now earlier it was 5 crore. Now it has been revised to 10 crore. Getting it? Like what is the tax audit limit for business assess is 1 crore. If a business assessor aggregate turnover exceeds 1 crore, he is liable for tax audit. However, there is a provision. If at all, at least 95% of the receipts and 95% of the payments were in other than cash. Okay, if they were in other than cash through banking channels, example, then the limit is earlier 5 crore and now it is 10 crore. That's the only difference. Instead of 1 crore, we just check 10 crores. Earlier, it was 5 crore. Okay, so edition 22 students, whoever is watching fiscal laws videos, this is one change. But concept explanation, everything is exactly same. Only number has been changed. Those of you watching amendments video, whoever has already completed fiscal laws, okay, you need not worry. There is no change at all in audit and fiscal laws except this. And there is one more change, that is clause number 36 has been removed. Just a minute. Clause number 36 has been removed. Just a minute, I'm opening it. This is 31. Yeah. Yes, you see 36. This clause number 36 was removed. Okay. Except these two, there are no other changes. Please keep remember, except these two changes, there is no change between what you followed in December 21 exams and what is applicable for May 22 exams. So this is one important change for audit under fiscal laws. So once you watch this video, then start watching. Whoever is my regular students, okay, regular students, watch that. For YouTube, whoever is watching amendments videos, this itself is enough with respect to audit under fiscal laws. Thank you. Proceed with part 1 videos of fiscal laws.